Effectively cargo rates and tanker rates as well. And then, of course, on defense, because the NATO summit does kick off tomorrow. So we are going to keep one eye on that. Plus, of course, in the last 24 hours, 48 hours, we did hear from NATO officials and from Spain as well, just saying they're getting an exemption when it comes to that defense spend. What does that do to appetite for that complacency trade when it comes to defense stocks, Guy?
We're going to watch that very carefully. Remember Friday. Remember that European markets were higher on Friday for the most part. Think about that when you watch the numbers that you see on the screen this morning. London was a little lower Friday, but most of the European markets were higher, 5, 6, 7 tenths of 1%. Then you need to factor in the numbers you're seeing on the screen this morning. So the FTSE 100 flat as a pancake this morning. Nothing to see here. The Stock 600 is down by 0.2 of 1%. Do we get some more momentum to the downside? Yeah, probably, but not by much. We're not going to see that market dropping dramatically. The IBEX is down by 0.6 of 1%. We're thinking the CAC maybe down by 0.7 of 1%. The DAX maybe something similar. There you go. The CAC's down by 0.5 of 1%. But go to your Bloomberg terminal and take a look at the GIP2, the 2-day chart of these markets. You need to see it in the context of the rally we saw on Friday and the very small response we are seeing today. So the CAC is down by around 0.5 of 1%. We'll see how long it takes the DAX to get open this morning. Maybe there's a little bit more action there. But this is not a market that is hitting the panic button by any stretch of the imagination. Lizzie Critty, what's the sector story looking like?
Well, if you look at the sectoral breakdown, you've only got energy in the positive territory, up by about 0.6%. Look at the likes of Shell, BP, Total. Shell up 1.2%, BP up 1.6%, Total as well up 0.8%, off the back of the oil price moves. Brent higher 1.3%. But look at what's in the negative here. So travel and leisure near the bottom of the basket, down more than 1%. As we know, we've got airlines like BA closing flights to Doha and Dubai because of the geopolitical risks, and so that hitting them as well. Critty, you had flagged that we should be looking at the shippers. You've got Muller-Maersk up 0.6%, but Kuehne and Nagel down 0.4%, same for DSV. The other thing we should note, of course, is what's ex-dividend today. So Leonardo not trading, also, by the way, ST Micro. But as we look at the rest of the defence space, Rheinmetall up 0.5%, Saab down 0.7%. A mixed picture, actually, when it comes to the defence names.
It's a fascinating one here because on the one hand, you have to factor in the geopolitical space in the Middle East read through. On the other hand, some of the headlines that may be coming out of NATO and, of course, the EU foreign ministers meeting as well today. But as you mentioned, you went through some of the energy names. We should mention that ASML is actually higher this morning, and I think that's interesting because the broader landscape is negative, including in some of the other tech names as well. ASML holding out as an outperformer, higher by 0.7%. Very interesting dynamic there. We've also been bringing a lot of attention to the underperformance when it comes to the French index. A good chunk of that can be attributed to two names, and that is LVMH and, well, I'm going to go with actually just one name, just LVMH, because that is the heavyweight that's bringing it down. The screen changed as I was speaking. It's a crucial one, though, as well, because there is a potential China read-through to be thinking about here. If you're worried about an inflationary impact on China, if you're worried about what the Iran story does to that relationship, the Russia read-through, perhaps there's a question of sentiment in terms of how that feeds back into names that are more exposed. That's just one theory. It's a second derivative move. We'll see if that actually holds. But let's see how we're supposed to be navigating these markets. We've got the perfect guest for you this morning. John Bilton, Global Multi-Asset Strategy Head at JP Morgan Asset Management, joins us around the table.
Morning.
Good morning. Thank you for joining us. Thank you for helping us make sense of these markets. We've been kind of wondering how much of this is just trading or avoiding trading headline risk and coming back to what we're calling complacency trade or a lazy trade this morning. What's the lazy trade for JP Morgan?
To my mind, the lazy trade in any market when you get an event is just to panic and go with it, because what normally happens is you find that you're missing the bigger picture. And it's, the talk this morning about obviously the attacks, the impact on oil prices, impact on some of the safe havens. We've seen some of the shadows of that, spike higher in oil, a little bit of a move in the dollar, etc. But it's missing the fact that this is part of a broader dialogue. We know there's been conflict between Israel and Iran now for some time. General feeling that Iran's capacity to respond has been somewhat depleted. And then the saber rattling about shutting the Strait of Hormuz, which would affect 20% of the world's global oil supply. Great for headlines, but then you follow through and actually ask, how practical is this? And I sense that markets are judging that the response may not be quite as dramatic, because Iran would risk antagonizing others who are not yet pulled in, the Russias, the Chinas of this world. So if you actually take a step back, what's going on, I think, is still a market which is absorbing a gradual slowing in global growth, absorbing a geopolitical event that's going on, and actually judging that this does not, on face value, increase change the direction of travel. It probably increases left tail risks. But at the moment, the market, I think, is being fairly calm about this.
Well, John, talk to us a little bit from a sector perspective here, because yes, there's geopolitical risk. Yes, there are now 3 areas of conflict that we have to talk about in just EMEA itself. The trade in the last, I want to say since the start of the year, has largely been diving into defense stocks. Part of that is the conflict. The other part of that is, of course, the defense spend out of Germany, et cetera. There is now a NATO summit coming into this week. But in the last 48 hours, we've actually heard of an exemption for Spain when it comes to that spend. Does that undermine a question around whether defensive stocks or defense stocks are the defensive play?
Well, I mean, if you look at defence stocks so far this year, excuse me, they've already performed very, very strongly. I think what's being missed is the fact that, whether we've got a degree of, differences country to country in terms of input to NATO budgets, if you take a step back, we've still had massive fiscal stimulus coming through in Europe. And of course, the defence names have been the primary sort of beneficiary of this. But if we're now in the middle of this year, if we look at the next 12 months' earnings, we're beginning to factor in next year's economic momentum. Germany is spending 11% of GDP on fiscal boost. Fiscal year 26, fiscal year 27, that's a big deal. And that's something which I think will boost the European economy overall. So focusing very narrowly on the defence stocks, frankly, I'd pass that across to a defence sector expert. But in terms of the economic outlook, we've been used to Europe sort of bumping along at or below trend for a decade and more now. And in fact, we're beginning to see that there's some reasonable topside to growth risks there. And I think that's where things are starting to move. We've gone through this year having seen European earnings being priced down from a 9 to 10% gain this year to around just 2%. Eurostoxx has flatlined over that period, but we're now beginning to look into next year where the impact of this fiscal boost will come through. And yes, that's potentially supportive for some of the defence names, but Europe more broadly actually is beginning to look like it could have some earnings uplift.
John, good morning. Good morning. Are risks growing or declining for equity investors?
Well, we're about to come into earnings season, so, I think by definition, risks are picking up because we're about to get the tape tell us how these companies.
And what do you think it's going to tell us? Is it going to tell us that companies are absorbing the risks, or is it going to tell us that their customers, the end consumer, is absorbing the risk at the moment?
I think it's going to be a bit of both. If we look at what's happened in various US names over the both retail sector and industrial sector, there's a bit of a mix. Some of it, yes, inevitably, and I think you're probably inferring some trade and tariff impact here. Yes, it's going to go on to the consumer, and yes, I mean, there will be firms who've got pricing power. But I think it's been surprising how many firms have said that we think we can absorb this through substitution, etc. So I think it will be a mixed bag. I'd look, again, more deeply, wouldn't take the trade and tariffs on one side alone without thinking about the tax implications of the bill that's working its way through Congress, which potentially changes the investing landscape through...
How?
Well, through R&D capitalisation is a good example. Because if you look at the...
Does it mean high yields because we're worried about the deficit?
Well, bond
Is the cost of capital going to be higher?
At the margin, potentially, but, you're getting an offset. Credit spreads have come in. Bond yields have been sticky at the upper end of their range. Cost of capital to corporates, it's a bit of a round trip, all things told at the moment. So, I think corporates are looking through this near-term volatility. And remember, they did a lot of terming out of debt. Corporate balance sheets are in really pretty good shape. So you take all that together, no immediate alarms going off on the cost of the balance sheet. Potentially at an index-wide level, something of an offset between R&D expensing versus the tariff impact. Big sector differences, though. So sectors like technology, communication services, consumer discretionary, getting a boost from those tax bills. Other sectors may be getting more of a headwind from it. So I think it's important to look at the sector level, but at the index level, I can understand why the market's fairly calm about it right now.
John, Critty asked you what's the lazy trade. What's the idiosyncratic trade here that could surprise to the upside?
Well, I think there's a lot of talk about sort of ongoing concerns in countries which are price takers in energy. Take the Chinas, the Japans of this world. It's worth noting, I mean, there was concern being voiced at the top of the programme in terms of, the pass-through effect here for China. Will it create some inflationary pressure? Let's take a step back. China has a disinflation problem, not an inflation problem. At the margin, this is something which does not really change the direction of travel of the PBOC. China's one of the best performing equity regions this year, and it's still relatively cheap. Japan hasn't moved. Yes, it's a price taker in energy space. Yen's somewhat stronger than where it was at the beginning of the year. Again, could this be absorbed? So the idiosyncratic trade may be to look at some of those price takers in energy and actually realise that there's perhaps a little bit more resilience and valuation support there than perhaps has been considered.
Okay, that's really interesting. And you also said don't panic.
Mm-hmm.
Where is the most dangerous false sense of security in all this?
Oh, gosh, I mean, that it's always easy to sort of try and sort of think, OK, this looks too expensive, it should roll over. And I think a lot of people will probably go back to the typical bellwether large-cap US stocks. The S&P 500 is trading at 22 times forward earnings. That's 6 turns above its 20-year average. What's not reflected is just how much cash and earnings these big firms spin off. And, of course, if they're well held, folks will sell what they hold. But actually, this secular story on these stocks in terms of earnings, growth, etc., we still feel is pretty strong. So near-term risk, if we were to see markets wobble a little bit, you're probably going to see your winners sold. But to my mind, that's a good opportunity to go to lean into what we think is a really, really powerful secular trade, which is still relatively low in the batting order in terms of how far it's got to go.
John, great to see you. Thanks for stopping by to see us.
Thank
Always appreciate it. John Bilton, Head of Global Multi-Asset Strategy at JP Morgan Asset Management. Quick look at the Core 6 before we turn to Joe. This is what we're looking at on the board this morning. As you can see, a single stock in positive territory. Tech is actually having a fairly good day. It's interesting that Nestle is barely budging this morning. Where you are seeing weakness is a market that is trading maybe out of luxury a little bit. You've got Novo Nordisk trading a little softer as well. Some of the chemicals names are also seeing some weakness too. Joe Easton, what do you got?
So the sector really catching my eye at the open, Guy, is the airlines. Pretty significant declines in the likes of IAG, Lufthansa, Air France as well. Now, remember, we did get headlines around the weekend around some airlines actually cancelling flights into some parts of the Middle East. We saw some updates from BA of IAG and also some of the other airlines in that region, Singapore as well. So that does seem to be feeding through. And also the higher crude price, again, fueling fears around jet fuel as well. So airlines significantly lower at the moment. Then in terms of a single stock catching my eye was Stellantis over in the car makers. A bit of an update on their management. They've got some management changes out today, and there is a takeout from one of the brokers over in France saying that one of their executives potentially might be moving over to Renault, could be a competitor to the new Renault CEO, according to them. And that's spurring a little bit of worry for that stock. It gapped down around 5% at the open of trading. It's come up a little bit now. We are seeing Stellantis a little bit weaker on those executive changes. Then we have got Novo, as Guy had on the screen there. That one is weaker. Remember, we got this data from Eli Lilly at the weekend on a weight loss pill. Now, importantly, it showed significant weight loss, but actually not that many side effects. That is seen as a positive, being a pill as well, preferable over an injection, and therefore we're seeing Novo falling on competition concerns today. Then we do have a couple of bits of M&A here in the UK as well. We had, firstly, Assura. Now, that one is in medical real estate, so it's doctors' surgeries. And we got a bid from PHP, finally getting a price on that one, but it's pretty much in line with what we were looking for. So not seeing a huge gain on that one. But the big one was Spectris, getting confirmation of Advent coming in, American private equity, buying another UK firm, keeping buying on and continuing those deals in that space. But we have got Air Liquide as well, just to finish you this one. Got a downgrade at Bank of America this morning. They say they're not so positive on the renewable energy transition. Air Liquide slipping in Paris this morning.
Joe Easton from our equities team, we thank you so much. Walking us through some of those individual movers amid a sea of red, we thank you. Coming up on the program, as Joe mentioned, American and European airlines pausing flights to destinations in the Persian Gulf. All as tensions in the region escalate. We're going to dive into the details next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Back to the programme, 8:17 a.m. here in London. And we've just had crossing the terminal the latest French PMIs, a read on how the tariff war is affecting the euro area economy. And you're seeing surprises to the downside across the board for manufacturing, services and at the composite level. The expectation was for manufacturing and composite numbers to hold, services to improve. In fact, all have slipped further into contraction territory. And you're seeing euro weakness as a result. We're down 0.2% at a 1.15 handle now on euro dollar. So that's the trade story. But of course, geopolitics very much in focus for the rest of the market.
So many challenges, particularly for the manufacturing sector. As you say, 47.8 is a much weaker than anticipated number from France. Let's talk about one area that we're all focused on this morning, and that is what is happening with the Middle East. It is reaching into various parts of the market, and we're trying to understand the various implications of what we are seeing on the screen in front of us. One area that we're certainly seeing an effect come through into is the airline sector. Airlines very sensitive to what happens with the fuel price, but there's also the airspace and risk factor that we need to worry about as well this morning. Joining us is Benedict Campbell, who leads our global aviation coverage to cover this area. Benedict, we've seen some cancellations over the weekend. What's the latest? Where are we this Monday morning in terms of flights in and out of the region?
So what we've certainly seen this morning is that more cancellations are happening. We've seen airlines out of Asia, like Singapore, like Japan Airlines. They've started cancelling. We've even seen some countries or some companies pull their locals out of certain markets. Bankers in Japanese bankers in Dubai are being asked to extract themselves. So certainly a sense of escalation here. The other thing is it's somewhat asymmetrical response. So you don't have a unified industry-wide sort of approach to this. You have some airlines still flying, you have others circumnavigating a wide corridor. If you look at sort of the region, the corridor that's really closed is anywhere between sort of Jordan and then left to right across Iran, Iraq, Syria. So that's a really big area that a lot of airlines are now avoiding, and they're either flying further south through Saudi Arabia, or they're flying further north through Afghanistan. That adds considerable flight time and fuel costs, so this is a complicated issue for a lot of airlines.
Benny, for us non-airline experts, can you just explain to us why the BA flights to Dubai are being cancelled, but Emirates hasn't done the same, when surely the risk is the same to both?
That's right, but airlines view risk differently. I'm not saying that you know, Emirates is more open to risk than BA, but there's also a sense you don't want to have your aircraft out of position. So if an airspace actually closes down, and if a country closes down, and you have your aircraft on the ground, you'll have trouble extracting your kit from that market going forward. So that's something that companies like BA, like Lufthansa, like Air France, that are further away from that area will want to avoid. It's something we've seen really over the years. If you think back to what's happening in Russia, what's happening over Ukraine, some airlines have still sort of plied those routes. So you have Emirates flying through Russia, you've had Turkish still servicing that market, but a lot of Western companies have not. So as I said, not a uniform approach. And that doesn't necessarily make it any easier for travelers wondering, how do I get from London to Dubai? Probably right now, flying BA is not a good idea. You won't get there. But Emirates still, for the time being at least, has that route open.
Well, Benny, let's talk about another element of this, which, of course, is the oil price shock. We're starting to see a sustained level, at least in terms of geopolitical risk, of about $78, $77 a barrel when it comes to the oil story. Guy was saying that this is actually an additional headwind when it comes to jet fuel costs for airlines. Just walk us through how they're preparing for potentially even higher prices.
Well, the higher prices principally come from the longer routes that they have to take. So if you add an hour or two to your flight time on long-distance route, that adds considerably to your cost, to your operational costs. You could say the flip side of that is the lower oil price, which then cuts your kerosene bill. But basically, what airlines don't want is this sort of on and off kind of sense that they have right now, the disruption that they're seeing. They want stability. They want to be able to plan. So the lower oil price might help, and that's something we've heard over the last couple of weeks. We're at the Paris Air Show just a week ago. We're at the IATA AGM, and the sort of tenor there was, yes, lower oil prices are good for us, but then fundamentally they come at a significant cost, and that is people are less inclined to travel. When people are worried, will I be able to get back, they won't book that trip. So the lower oil price might be nice in the short term, but longer term, what the industry needs is stability. They want people to feel good about booking, and that's certainly not the case right now.
Bloomberg's Benny Campbell walking us through the laundry list of risks around the airline space right now. We thank you so much. Another, of course, area that we are watching very closely is how the oil stocks are really reacting to what we're seeing in the broader oil market as well. You can take a look at this. It's one of your kind of sole areas in this market that is actually rallying, and that is, of course, just magnifying the move that you are seeing in oil, especially when it comes to oil majors, perhaps even protecting the FTSE 100, I would argue, from some of the broader gains you are seeing in other sectors. Let's talk about the oil sector broadly. Bloomberg's Will Kennedy, Senior Executive Editor for Energy and Commodities, joins us around the table. Will, we were just talking to Benny there about the idea of sustained oil prices. Walk us through the commentary that you're hearing from. What does a sustained oil price or higher oil price mean to you?
Well, if we look at what's happened since Israel started its bombing campaign against Iran, I think what we see is a sustained $10 premium in the oil price. We've gone from about 67, 68 to 77, 78 today on the Brent price, and I think that's where the market's settled. Now, there is the potential, of course, for it to go higher if Iran decides to use oil as a way to retaliate against Israel and the United States, but I think it's worth saying that that hasn't happened yet, that by and large oil continues to flow from the Persian Gulf into global markets, and that's why we saw a bit of a jump this morning after the US action over the weekend, and then it's fallen away because traders are really waiting to see a real-world impact on flows.
So what are traders thinking this morning? I'm sure you guys have been out talking to a lot of people over the weekend and into Monday morning. The view across markets this morning seems to be successful US operation, unlikely to deliver a significant response from Iran, and as a result of which, in some ways, nothing to see here. This has worked. We are in a better place than we were last week. Is that the view you're getting from oil desks? That's what we're hearing from other trading desks as well. Is the oil community expecting something to happen, or is actually the view that actually Iran has very few options and there's not much it can do without upsetting China, without upsetting all of its major customers, so as a result of which actually energy is unlikely to continue to be touched?
That, I think, is by and large where a lot of people are on this, and they're being governed by the fact that the oil is still flowing and that globally oil markets remain well supplied. I would draw a bit of a nuance. I think in the shipping world, and we talked about this last week, I think, Guy, there is a degree of nervousness. We have seen freight rates rise rapidly. We are seeing people paying more for insurance. We are seeing reluctance from some ship owners to go into the Persian Gulf. So there is some friction in the oil trade. But that worst-case scenario where you actually get a big reduction in the flow of our oil out of the Persian Gulf, the one that everyone worries about, that appears not to be happening for the time being. Sure. Iran could change its mind. Iran could decide to do something differently. But for the time being, the oil is leaving all the major Gulf suppliers, and it is getting out into global markets.
Well, you're seeing a bit of a disparity in how the energy stocks are performing this morning. Is that because certain oil majors are better prepared for even if it's unlikely the Strait of Hormuz was blocked?
I don't think there's a huge difference between the different majors in that regard. Oil majors, the actual Persian Gulf region, with a couple of exceptions, isn't a huge production center for the oil majors. Some of them have joint ventures in the UAE, but on the whole, it's a nationalized oil industry inside the Persian Gulf. So it's more about basically a price reaction, how leveraged they are to oil prices, what they need to break even at certain oil prices, and their debt profile. So I think if you look at BP being ahead there, clearly BP in the slightly difficult position that it's in with a slightly more stretched balance sheet probably gains more than sustained higher oil prices than some of its competitors. But I don't think there are huge differences between the oil majors there.
Okay. Well, Kennedy, we thank you for that analysis. As we look at oil, a bit higher, and the oil majors too. Shell up 0.7%, BP 1.4%, Total 0.5%. But as you say, Guy, we're kind of calm in these markets, surprisingly, perhaps. And we also have US futures pretty flat now in the upside, as Valerie had predicted earlier in the programme. We're going to focus in on another area, of course, that is affected by all of this, the shipping industry next. It's on high alert with all of these warnings that Tehran could retaliate against commercial vessels, perhaps via its proxies, the Houthi rebels in Yemen, for example. We're going to find out how the industry is reacting next. So do stay with us. This is Bloomberg.
Welcome back to the circuit. This time, we're taking you to the frontier.
Do we have a camera, or do we? We don't want to lose you, Emily, in all of this.
Stargate, put that name down in your books. What we're undergoing right now is sort of the largest infrastructure build in human history.
To meet the people rewriting the rules of code and culture.
How do you personally grapple with the pace of it all?
It does feel like it's going very fast.
When did you realize, oh my gosh, my life is never going to be the same?
The day I got engaged, I was like, whoa, what have I bitten off here?
Where the future gets real.
How confident are you that AI's promise will outweigh the perils?
I'm not confident.
So the tech companies are lying or fudging.
And a little weird.
What's the point of this?
What is the point of any of this?
Tune into Season 3 of The Circuit with me, Emily Chang, Thursdays at 6 p.m. Eastern on Bloomberg Originals and Bloomberg TV.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
8:30 a.m. here in London. We've got some breaking PMIs out of Germany for you, and actually surprises to the upside for the composite number. So 50.4 is where we're coming in. The expectation was for a reading of 49.1. At the services level, also a beat, 49.4. The expectation was for 47.8, but bang in line with expectations when it comes to the manufacturing number. This in contrast to the French PMIs that surprised to the downside at every level just a few minutes ago. Euro-dollar was at 114 coming into this. It's actually a little stronger at a 115 handle off the back. But this a read very much of how tariffs are affecting the continent of Europe, and it's a better picture, it seems, in Germany than it was in France, Critty.
Absolutely. And of course, one focus on maybe how international leaders are going to be reacting to the events over the weekend. EU foreign ministers meeting today in Brussels ahead of a NATO summit in The Hague that President Donald Trump is set to attend. Now, Europe's reaction to America's airstrikes on Iran is likely to be a key focus there. Bloomberg's Oliver Crook is on the ground for us there in The Hague. Ollie, walk us through the thinking amid some of these European powers.
Yeah, so it sort of differentiates a little bit between a number of the different leaders, but I think overall the message has been consistently clear. And frankly, it's what we've heard from the international community more broadly, which is basically it is now time for diplomacy. It is time to de-escalate. Things shouldn't go further out of hand. It is now, this is a conflict that is going to end only at the negotiating table, not just through military action. So we had a number of reactions from a number of different leaders. I'd like to just bring out two for you. For one, we heard from the Russians as well, Dmitry Medvedev, the deputy head of Putin's Security Council, saying some very inflammatory things. This, by the way, has been basically his role over the last few years, being intensely inflammatory and talking through hyperbole, but basically saying that several countries were prepared to supply Tehran with nuclear weapons. He didn't go into much greater detail about who or what that actually meant, but he also said that the United States actually did less damage to the Iranian facilities than they had assumed. And we should just say that the Iranian foreign minister is in Moscow today and expected to meet with Vladimir Putin a little bit earlier. We also heard from Ursula von der Leyen, And this is the kind of key message we've been hearing from European leaders. Everyone has said basically for the last week that Iran should never be permitted to acquire a nuclear weapon. That has been sort of tacit endorsement, or at least non-objection to the military action over the last week from the Israelis, from many of these leaders. But in this tweet that Ursula von der Leyen put out, she also said that there needs to be respect for international law, and that is absolutely critical. And that is potentially a tacit criticism of the American administration and Donald Trump. Remember, we are in The Hague right now. This is the home to the International Court of Justice, the International Criminal Court. These are great emblems of basically multilateral, international system that the United States has really been the buttress behind, and that the Trump administration is really blowing up. There has been some real question about whether this strike in Iran has really been a preemptive strike, i.e. that there was an imminent threat that was going to be emanating from Iran, or if this was a long-term strategic goal that the United States basically just did from their own interests. And that is a sort of a big question. That's been one of the debates you've had domestically in the United States, and that's certainly one of the concerns that you hear from European leaders, that they're not going to put it out terribly publicly, because remember, they do still need Trump on board, and he's going to be here, within the next 24 hours, expected to arrive tomorrow for these meetings of the NATO summit here.
Ollie, does Europe have a role in the Middle East conflict? Does NATO have a role? Should it have a role in the Middle East conflict, especially given what's going on in Ukraine? That conflict is still on the doorstep. That represents a more clear and present danger. Isn't that the threat that NATO should be focused on?
Yeah, I mean, that's the question I'm going to put to a number of the people that we're going to be speaking to over the next few days. And I think the reality of the situation that the Europeans need to come to terms with, and frankly probably already have, is that they're going to have a very limited influence on the Middle East, on Iran, on Israel, on the United States. However, Guy, there are going to be ways in which the situation in the Middle East and Iran are going to bear materially on the Europeans. I mean, for one thing, if Iran is severely weakened, that, of course, is a bad thing for Russia. That could be a positive for the Europeans. But on the other end of things, Guy, one of the big conversations here at NATO is about keeping the Americans on board. There are about 84,000 U.S. military personnel stationed all across Europe. Already, we know the Trump administration wants to change its attention from Europe, wants to move it over to the Pacific. If you have the United States further engrossed, further enmeshed in a huge conflict in the Middle East, as you know, they've now joined this bombing campaign, that is going to distract attention even more from Europe. That is going to be potentially another reason why the Trump administration will draw down, take some of those troops out. Remember, Biden added about 20,000 troops to that number, and the real concern for the Europeans is that the Trump administration in the next couple of months will start pulling those troops out and moving them elsewhere across the globe. And of course, there is, of course, the question of Ukraine. That is the main focus, as you say, Guy, for all of these European leaders. And the reality is, and we've known this from the start, that for Europe, they have to go about it alone, and that is going to be their sort of main concern here at the NATO summit.
Okay, Bloomberg's Oliver Crook on the ground for us in The Hague. We thank you. We look forward to the conversations that you're going to be bringing us, Ollie. We'll have interviews with senior European officials at the NATO summit this week, including the EU Foreign Policy Chief Kaja Kallas, the German Foreign Minister, and the Defence Minister of the Netherlands. Plenty to look forward to, Guy.
Absolutely. The shipping industry is trying to work out this morning what the risk is in the Straits of Hormuz, in the Gulf. Obviously on high alert, has been for a while, worried that Tehran could retaliate against commercial vessels. The US Secretary of State, Marco Rubio, called on China to prevent Iran from closing the strait.
Well, I encourage the Chinese government in Beijing to call them about that, because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. It's economic suicide for them if they do it. And we retain options to deal with that. But other countries should be looking at that as well. It would hurt other countries' economies a lot worse than ours.
Marco Rubio, talking to Maria Bartiromo. Joining us now, Marcus Baker, Global Head of Marine and Cargo at Marsh McLennan, the insurer. Good morning.
Good morning, Guy.
Nice to see you. How big a risk is there now for the shipping industry? How easy is it to get insurance? Just walk me through this morning. What are the conversations happening just down the road in terms of how do we insure the risk? How has the risk changed?
Sure. Look, I mean, shipping has been one of the historical bedrocks of insurance, especially here in the City of London. And, we've always managed to find a way as an industry to cope with some of these extreme situations, be it, closure of the Suez Canal through the Ever Given, as you remember, some years ago during COVID, or these situations where there are warlike activity, which creates a heightened sense of concern and risk. So essentially what happens, every ship owner gets war risk insurance for the whole year. But there are certain territories which are deemed areas of heightened risk. And this, of course, is one area. The Middle East is one area. And there is a committee that meets with the help of advisory, people's security advisors, to assess that risk and how much it should cost to go into that region. And that's essentially what will happen over the course of the day.
How does it work? I'm a tanker owner, maybe out of Athens, and I'm thinking about pushing my ships through this region at the moment. I have a basic level of cover. Correct. I'm assuming there's an additional level of cover that now is required to allow me to insure my ships to go through that region. Who pays for that? How does it work in terms of the ultimate structure? Is it the charterer? Is it the ship owner? I imagine there are sort of conversations with everybody about who absorbs that cost. How does it work in practice, and how quickly does it work?
Ultimately, it'll be you and I. Yeah. Okay, because that cost has to get passed on somewhere. But it will very much depend upon the contractual arrangements of the charter party between the owner and the charterer as to who is actually going to pick up the cost of that.
What's it worth? Is it worth $8 or $9 a barrel? How do I think about it? Is it?
Well, I'll put it into context for you. So if we look at, let's say we've got a $100 million tanker. Yep. If you're trading through into the Arabian Gulf now, as of last week, it was costing about 0.2%. So that's $200,000 on top of the cost of freight, the cost of moving the ship around. That's just for the additional insurance for war risk cover. Now, is that going to change this week? Probably. But the thing to remember, no ships have actually been damaged as yet. And so how this starts to manifest itself as we go on, I think we'll just have to wait and see.
Talk to us a little bit about when you're doing that math of how much of a premium to charge on that insurance risk, how much of the thinking out of the U.S. military actually matters. And I ask this in the context here of, you mentioned the Red Sea and pricing and shipping risk there as well. So many of those rates was dependent on a U.S. naval presence or other naval presences around the world as well. Is that a conversation you're having from military experts, arguably authorities in D.C.?
So just to be clear, our role at Marsh & McLennan is as insurance brokers. Sure. We're not risk takers. Sure. Our job is to find the very best prices we can for our ship-owning clients and our chartering clients. And there is a wide market. And just to put that into context, there's between $2.5 and $3 billion of maritime capacity in the world. And when I say capacity, if you had one ship valued at $2.5 billion, you could place it once. The average ship, if that's about $100 million, you can place that many times over. So there is a vibrant market that will have a slightly different view on the risk perspective. Adding the US in as a factor is obviously good from a security perspective, but this is a huge region. And so, you cannot look after every single ship that is going to trade in and out of either the Arabian Sea or through the Red Sea itself.
Is the Red Sea, the insurance rates and the kind of roadmap around the Red Sea and how that conflict has been managed, is that the accurate roadmap to apply to a potential closing around the Strait of Hormuz?
So the challenge with the Strait of Hormuz is, of course, it's a one-way street. You're up, you pick the oil up, and you have to come back down again. At least with the Red Sea, you can come in and out, or, of course, you can take a different route around the Cape. So in a way, it gives shipping a greater degree of flexibility. And that's the other thing about this industry is ship owners they're very creative around how they can start to move stuff around the world, and that is something we may well see a bit more of, which we saw when the Houthis last started to attack shipping a year and a half to 2 years ago.
Do you think that targeting will be limited to US ships, or is everyone basically at risk? And actually, do you actually think there'll be that much rerouting take place, or does everyone just take the risk and pay for the insurance?
Well, two factors there. The Houthis actually said US, UK and Israeli flagged ships. So that was what they were targeting. Now, to be frank, they weren't entirely accurate in targeting just those flagged ships. Exactly. They even flagged one that was delivering grain into the Yemen. So that didn't seem to make an awful lot of sense. So I think that we may see an escalation around that. But the other point you raised there around will ship owners just continue to trade into that region? I'm not so sure they will. I think things have changed in the last 5 to 6 years, maybe the last 10 years, with a sort of a real concern over crew. And, you know, in all of this discussion, we shouldn't forget about the seamen and women that are helping to deliver goods around the world, because they're the ones that are on the front line. They're the ones that are going to get hit if they want to. And so there is a move, certainly, to recognise that role and to listen to them. And if they say they don't want to go in the region, then I think they won't.
And we've talked about, you know, the higher rates. There's also the fact that the time that quotes are valid for is shortened. It's obviously a volatile market.
Yeah.
We've also been talking a lot about how boxed in Iran is in terms of its options for retaliation. If there's no retaliation, how long does the volatility last?
No retaliation from Iran?
Exactly.
Yeah, I mean, you could say in those circumstances that actually things will start to calm down very quickly. I still think it's fragile, and I think we'll see what happens over the course of the next week to decide that. You also mentioned the quote validity, which we're seeing. I've not seen that before, and what I think that is a measure of actually the concerns that the insurance market has around the volatility and around the fact that, you know, the US is making decisions that are happening very, very quickly. And so our ability as an insurance market to react is going to be hampered, perhaps.
Okay, got to stay nimble. Marcus Baker, so good to have you and your expertise with us around the table this morning. Global Head of Marine and Cargo at Marsh McLennan, Marcus Baker, thank you so much. Coming up on the programme, the world braces for Iran's response to these US strikes, and we're going to be speaking to Nicholas Hopton, former UK ambassador to Iran. He'll join us next. This is Bloomberg.
Another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There, you understand the history of this great land. Not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg.
had concerns about the Iranian nuclear program and been very clear that Iran cannot have a nuclear weapon. The US has now taken action to alleviate that threat. It is important that we now de-escalate the situation, stabilize the region, and get the parties back around the table to negotiate.
UK Prime Minister Keir Starmer there in response to the strikes from the United States into Iran over the weekend. Our next guest was the UK's ambassador to Iran from 2017 to 2018. He's also the Director General of the Middle East Association. Nicholas Hopton joins the program this morning. Nicholas, a pleasure to have you. Thank you so much for your time this morning. We just heard a little soundbite there from the Prime Minister himself talking about the need to de-escalate. Nicholas, what does de-escalating look like from here?
At this particular moment, after the American attacks on Saturday night, I think Iran is facing a very difficult choice. The ball is very much in their court. The exchange of attacks continues with Israel. But Iran has to decide at this point whether it wants to escalate or capitulate. And if it escalates, that might look like the closure of the Straits of Hormuz, which the Iranian parliament has already voted in favor of. It still needs signing off by the Iranian National Security Council, but they've taken steps in that direction. It might involve military attacks on US assets, interests, people in the region. And it may well also involve using their proxies, which are much weakened, of course, following Israel's decapitation of Hezbollah in particular last year. But Iran still has cards to play, which are of various types, and economic, military, or even terrorists through their proxies.
Well, Nicholas, you've served as I mentioned, an ambassador to Iran from the UK, and we know these are two countries that have had a tenuous history, to say the least. What is the role of the UK in terms of any potential retaliation that may be coming down the pike from Iran or additional strikes from the United States? How involved should the UK be?
Iran and the UK have a long history, and there is a complex relationship between the two countries. But it is based on a degree of knowledge of each other over well over 200 years now. That's not the case for all the countries involved in this conflict. I think you will have seen what the Prime Minister said about the need now for de-escalation and diplomacy. And at the same time, the UK is moving some military assets to the region, ships, planes, to defend our interests and our people in the region in case it went the wrong way. But I think the UK's role is essentially about being part of that effort to push for further diplomatic negotiations, providing an off-ramp from the conflict for both sides. And I would hope that we can avoid being directly drawn into the conflict, which seems to me unlikely to produce the objectives in our national interest.
Yeah. So, Nicholas, you say we should focus as the UK on the diplomacy. I was listening yesterday to an interview with the Iranian ambassador to the UK. It was on the BBC, and he was saying, Iran has no intention of cultivating nuclear weapons. All countries have problems. We just need to look past Iran's human rights record. Clearly, this is the sort of talk that Donald Trump was tired of dealing with. As a UK diplomat, how would you deal with the Iranians if that's the stance that they're taking?
Well, I think we are used to Iranian regime rhetoric which doesn't correspond to reality and misrepresents the situation. Iran obviously enriched uranium to a level way beyond what would be needed for normal civilian purposes. At the same time, I note reports from American intelligence and including from the IAEA, which don't necessarily point to Iran having wanted to have a nuclear weapon anytime soon, although it was in a position to move in that direction should it want. I think one has to aim off with a lot of this rhetoric coming out of Tehran. They have a reputation as a nation for being very resilient. They've put up with a lot of sanctions and isolation since 1979 and the revolution. They will no doubt be preparing for the same again. And the regime itself, its main objective is to survive at this point. And the pressures on it are both external and internal. There are internal pressures also on the regime, either to evolve or to disappear.
Yeah. So in the name of survival, you have the Iranian foreign minister in Moscow today meeting Vladimir Putin. I wonder what you expect to be the level of support offered by Russia or indeed China to Iran at this point.
Well, it's been very striking in the last week how little support from its supposed allies Iran seems to have received, in particular from Russia. I think Vladimir Putin meeting Abbas Araghchi in Moscow is more a political gesture rather than any concrete military support, for example. And the Chinese may be slightly different because, of course, China has very strong interests in keeping the Straits of Hormuz open because a lot of its oil, it takes a lot of Iranian oil, and that is exported to China through the Straits of Hormuz. So the conversations, I imagine, happening between the Chinese and Iranians at this point probably are slightly different from those happening between Russia and Iran.
Nicholas, good morning. It's Guy. Should regime change be an objective of the United States at this point? And if it is, what are the risks?
I think if one looks at the West's record of pushing for regime change in the Middle East over the last quarter of a century, it might suggest that we would be better to step back from that kind of objective. It hasn't been a great success in Iraq or Libya, for example. And generally, my view at least is that if countries are going to change their governance, who leads them, it's better that it comes from within, from the people of that country themselves, rather than it's imposed from outside. And often people in foreign powers, such as the United States or sometimes the United Kingdom or France, maybe we underestimate occasionally how difficult it is actually to achieve a better regime in a country that may appear despotic or hostile to our interests.
Has Israel changed the narrative sufficiently by turning attention to Iran that it has distracted from Gaza? And is there a danger that we lose sight of what is happening there?
Undoubtedly. I don't know whether this was a deliberate ploy by Prime Minister Netanyahu, but if it was, it seems to have worked. One isn't hearing with the same intensity of media focus what is going on in Gaza at the moment, because the focus is all on Iran and Israel and the United States. But that doesn't distract from the reality that the situation in Gaza remains utterly appalling. The situation for the Palestinians, civilians on the ground in Gaza is horrific, and people are being killed. Civilians are being killed, including when they seem to be queuing for humanitarian aid.
On that note, we will leave it. Nicholas, thank you very much indeed for your analysis this morning. We greatly appreciate it. Nicholas Hopton, Director General of the Middle East Association and former British Ambassador to Iran. Equity markets have barely budged. We are down a touch now. The FTSE 100 is flat. Euro Stoxx 50 is flat. Oil is flat. Nothing to see here, seems to be the market response.
It's pared back a knee-jerk reaction in the Asian session. I mean, the oil's move in itself, a 5%, over 5% move at the open, now going to, I think, Brent crude higher by about 0.5%. It was almost flat earlier in the session. It speaks to the volatility, and of course, comes as the S&P 500 ticks higher. I'm being told now we are 3% away from all-time highs on the S&P 500. Lots of market dynamics to watch as well. You're seeing strength in the dollar. That's an interesting piece, of course, ticking higher as well as we navigate some of this geopolitical conflict alongside some of the other haven assets as well. That does it for the opening trade. Pulse is up next. This is Bloomberg.
of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that none of guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The world braces for Iran's response to the U.S. attacks on its nuclear facilities. Revolutionary Guard signals that U.S. military bases in the region could be targeted. Oil pairs gains after hitting $80 a barrel. Traders watching for signs of disruption in the Strait of Hormuz. And global stocks waver amid the uncertainty, while airline shares a little bit under pressure. Carriers reroute away from the Middle East. Now, the market reaction was there this morning. It's now definitely tailing off. I'm looking at S&P futures. They're practically unchanged. In fact, they're gaining 0.1%. European stocks also little changed. I think the focus is traders now awaiting what Iran does next, the next move and its potential impact. I'm also looking at oil prices. Actually, they were up, and now they're pairing some of the gains. The focus definitely remains in the potential disruption to global crude and natural gas traffic through the Strait of Hormuz. Brent 77.38. The European markets map, as we're saying, not well, it changed a little bit, but actually not a huge amount. The CAC 40, the DAX, and the FTSE MIB actually flat. The FTSE here in the UK also flat, and the IBEX gaining 0.2%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone. It's Monday. Welcome to The Pulse. I'm Francine Lacqua here in London. Now, Iran says the U.S. has directly entered the war and should await, quote, severe consequences. That's according to a statement from the country's army cited in local media. Now, this comes after President Trump claimed U.S. strikes over the weekend obliterated Iran's nuclear sites, significantly setting back the country's uranium enrichment capabilities. The vice president, J.D. Vance, says the attacks were focused solely on Tehran's nuclear capability.
No, Kristen, we're not at war with Iran. We're at war with Iran's nuclear program. And let me just say, Kristen, that we're incredibly grateful and proud of the American Air Force pilots who did an incredible job last night. The operation was really extraordinary.
Meanwhile, Iran says the U.S. attacks were a betrayal of diplomacy.
We were attacked in the midst of an ongoing diplomatic process. We were supposed to meet with Americans on 15 June to craft a very promising agreement for peaceful resolution of the issues fabricated over our peaceful nuclear program. It was a betrayal of diplomacy and an unprecedented blow to the foundation of international law and UN system.
Now, for more on this, we're joined by Jumana Versace, Horizon Middle East and Africa anchor. So, Jumana, how quickly and how could Iran retaliate?
That's the big question. What is certain is that they most likely will have to retaliate. They have an option to capitulate, i.e. surrender, or go down the route of retaliating. If you look at the language that has come out the last 24 hours, would suggest that they do want to somehow reciprocate to those U.S. strikes on the nuclear facilities. Now, they could go down the route of a targeted response, similar to what they did after the killing of Qasem Soleimani back in 2020, hitting a U.S. base in Iraq, but telegraphing it beforehand, not causing any fatalities. But they could go down the route of something more escalatory, i.e. targeting U.S. assets within the Gulf states, which would risk flaring up tensions with Gulf states as well, something that they may want to avoid. There's also been a lot of talk about the potential closure or blockades of the Strait of Hormuz. Iranian state TV saying yesterday that Parliament has approved that measure, but ultimately the decision will rest with the National Security Council. That would be very disruptive, not only for global trade, but also for Iranian oil exports as well. And then the other route that they could go down is firing up some of their proxies within the region, which of course, many of whom have been severely decapitated, a lot of their ammunitions severely diminished over the course of the last 12 months. So which really raises a question about, one, the appetite of these proxies to get involved, but also their capacity. And then finally, Francine, they could go down the route of potential cyber attacks or even igniting terrorism cells around the world as well.
Jumana, we're just getting a little bit of breaking news. Actually, Brent futures turning lower, so they were gaining as much as 5.7%, and now pretty much flat, even a little bit on the lower side. How much damage was inflicted on these nuclear sites?
Yeah, so that is a question. Is the energy question and then the nuclear question. As of now, satellite imagery suggests that, yes, there has been damage sustained at those sites, but unclear whether it's enough to permanently eliminate these stockpiles that Iran were sitting on. IAEA suggesting that there had been extensive additional damage at the Isfahan site. That was also the site that Israel had hit the week before. In Natanz as well. Again, extensively damaged. But then Fordo, which of course is the one that everyone's been talking about because the stockpiles are buried deep underground, IAEA are saying it's not immediately possible to assess in view of its underground location and the penetrating nature of the bombs used, how much damage has been sustained there. So the U.S. are framing this as a very successful attack and that the nuclear abilities have been eliminated. But time will tell whether that is true or not, particularly because the Iranians say that they had moved some of those stockpiles to other secret locations, and therefore they're still sitting on stockpiles, equipment, and the know-how should they want to restart the nuclear program once again.
So interesting, Jumana. Thank you so much. Of course, our top story today, Jumana Versace. Now, let's take a look at the market reaction with Richard Clarida. He's Global Economic Advisor at PIMCO, former Vice Chairman of the U.S. Federal Reserve. Richard, thank you for joining us. What a day to have you on.
What a day.
We talked about inflation. There were worries this morning that the oil price went up to 100, and actually with that inflation and what that meant for treasuries. But the market's pretty calm. Are you surprised?
I'm pleasantly surprised. It's a good surprise. Yes, obviously historic events over the weekend. I think muted is the word with a capital M. Bonds flat, stocks flat to up, and the dollar a little bit weaker. So yes.
Is that because they can't price it in, or do you think this must have longer term implication for treasuries or inflation?
Yes, I think Francine, I think everyone right now is waiting to see when and how Iran might retaliate. I'm certainly no expert on that, and I think the market will react once we have a better sense of that, and also a better sense of what the damage assessment is as well. So there's a lot that we really don't know right now.
Richard, I mean, in this environment, how should U.S. investors actually position themselves for U.S. rates?
Well, one of the things over the years, Francine, we've concluded at our forums is there's always an element of geopolitical risk in the world. You really can't go into the bunker and hide from it. You just have to adapt to it. And I think this is an example of that. You know, markets will try to look through and assess the fundamentals. I don't think you can get too caught up in the day-to-day volatility in times like this.
But do you worry, I mean, do you support, you know, the Fed has an idea that actually in the third quarter inflation is going to pick up. But there's always this mismatch between surveys and actually translating into the real data. Will it come to fruition?
You know, we really don't know. So far, year to date, the inflation data in the U.S. has been coming in better than expected. Indeed, as of May, essentially inflation is running at the Fed's target. And so the Fed keeps waiting for the tariff impact to show up in inflation. That's in their forecast. That's in most other forecasts. But I think, honestly, we have to admit so far the U.S. inflation data has been coming in pretty favorably. Yeah.
Does that, I mean, the big worry is, of course, stagflation.
Yeah.
Right? I mean, we don't even pronounce it on a Monday morning in case something comes back. Do you worry about stagflation in the U.S.?
I think it's a risk. Now, if we do get a stagflation, it's not going to be the bad old days of the 70s with 10% inflation and bell bottoms and 12% unemployment, but we'll have a whiff, potentially a whiff of stagflation. Governor Waller recently of the Fed has indicated that he's prepared, and probably others on the committee, to really look through that if the economy's underlying fundamentals look sound. So an interesting next couple of meetings for the Fed, I think.
Yeah, where do you see the unemployment rate going?
Unemployment now is right where the Fed wants it to be, a very low unemployment rate, 4.2%. The Fed's baseline forecast has unemployment edging up. But again, a pleasant surprise so far in the labor market.
Richard, do you see a complete sea change since you were at the Fed because of all of the uncertainty in trade and tariffs, or is it just noise and the economy kind of like plots along?
Excellent point, Francine. The U.S. economy has really been remarkably resilient. There was the recession that never was in 22 and 2023. As I said, the inflation news has been better than expected. And I think all in, that leads forecasters to have some degree of humility, probably appropriate.
I mean, I spend a lot of time talking about the BOJ and figuring out, you know, some of the market dynamics. I know that the BOJ and the Ministry of Finance really tried to soothe investors' nerves over the last couple of weeks. Do you think it's been enough?
Well, it's certainly gotten the BOJ's attention publicly. I think there is some evidence of some dislocation in the JGB market, which we view actually as an opportunity based on the fundamentals. And so, you know, there is a lot of JGB debt outstanding, and the BOJ is the major holder of that. So it creates an interesting market dynamic.
I mean, there's a big auction tomorrow. There's a 20-year auction in Japan. I mean, will that go okay? I think all bond investors in the world are holding their breath because it has global repercussions.
It will, and obviously the auctions in the U.S. are getting a lot of attention these days, too. I think I'll defer to my colleagues in Asia on the details on that. I've not been following the auctions in Japan.
But in the auctions in the U.S., is there, I mean, again, there's so worry about debts. Is this the first time where we start thinking actually how reliable is the U.S. in terms of, and treasuries?
The U.S. is going to pay off its debt, so that it's going to be reliable in that period. Exclamation point.
It's crazy that we have to remind everyone.
Well, it is, and obviously there is the downgrade, and the U.S. has about 100% of GDP of debt outstanding. That used to be a number that scared people. Many countries in the world now have numbers about that high. Look, Francine, the U.S. is on an unsustainable fiscal trajectory. Everyone, including Secretary Bessent, acknowledges that, Jay Powell. But the baseline view of PIMCO is Washington will keep kicking that can down the road probably until the next decade.
Is there a worry that one of the bond auction actually doesn't go? I mean, it goes very badly.
There's always a risk that an auction can go badly. We will not have a failed auction. The Treasury will be able to sell its debt. It may have to be selling it at a price that it doesn't like, but we're not going to have a failed Treasury auction. And actually, since the concerns began to be raised 6-8 weeks ago, most of the Treasury auctions have actually gone pretty well. So there are buyers for Treasuries.
Richard, I know you spend a lot of the time actually as a great student of history and trying to figure out the U.S. economy and what happens to it next. Like, what are we missing in the picture? Is there something on small companies, you know, small and medium-sized companies that we should be paying a lot more attention to that don't have the buffer actually when it comes to trade wars and tariffs?
It's a great question, and one of the themes in our secular forum recently was we're in a world in which there are going to be, because of changes in government policy, industrial policy, trade policy, security alliances, there are going to be secular winners and losers at the company level, the sector level, the country level. So to us, it's an opportunity, but it means investors probably should shy away from just buying an index or a passive approach. We think it's an investment opportunity for active management.
Are we underestimating how the Trump administration is trying to change the fabric of American companies from within?
I don't think we're underestimating it. I think importantly, we have industrial policy in the U.S. It's some different industries than would have been the case had Harris been elected. You know, more of a move to traditional as opposed to electric vehicles, you know, drill baby drill as opposed to the green transition. Similarly in Europe, you know, we've seen in Germany pivoting towards the defense sector. And so I think industrial policy is part of the investment landscape. We have to focus on the industries that are favored.
And so what does it mean for PIMCO?
Well, as I've said, we think active management is going to thrive in this environment. We are in a world, we have been now for about a year or so, where yields have reset to a generational high level. That means fixed income investors can earn a decent, historically good return. Fixed income provides a good hedge against equity risk, and so a lot of opportunities out there.
Richard, how do you think about AI? I imagine AI, you know, the fact that it transforms productivity, inflation, and just our economies at the core makes it, you know, more difficult for central banks to try and suss out what happens.
Well, it does, Francine, especially over the relevant time frame. And, you know, when you're Jay Powell, you're looking at the next 6 weeks, the next, you know, maybe the next 12 months in Jay's case because his term is up. But, you know, AI is going to play out over the economy over 5, 10, 15 years. You know, I can make a case that 5 or 10 years from now, AI is going to be disinflationary. But I can also make a case that over the next year or two, it may push up inflation with all the building that needs to be done in terms of data centers and the like. It will also have very important distributional consequences.
Richard, I mean, you mentioned Jay Powell's term, you know, will be up. How should we think about central bank independence under the Trump administration?
Yeah, well, I think on that score, we have some good news. The Supreme Court recently, in a case unrelated to the Fed, issued a ruling in which it said that, in essence, the Fed is different, and in particular, more or less indicates that the Supreme Court does not believe that a president can fire a Fed governor or a Fed chairman except for cause. And also, importantly, your viewers should understand that the Trump folks, including the president, have said that they have no intention of firing Jay Powell. And so we think he's going to serve out his term, which runs through May of next year.
Richard, as always, thank you so much
Thank you for having
us.
me.
Richard Clarida, their economic advisor at PIMCO, and of course, former vice chair of the U.S. Federal Reserve. Coming up, as NATO leaders prepare to meet after the U.S.'s unprecedented strikes on Iran, we'll discuss the security outlook with Rachel Elahos, Director General at RUSI. That's next, and this is Bloomberg.
Bringing you up-to-the-minute financial news whenever and wherever it happens. I'm Michael McKee at the Federal Reserve, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg. At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Now, EU foreign ministers meet today in Brussels ahead of a NATO summit in The Hague that President Trump is set to attend. Europe's reaction to America's airstrikes on Iran is likely, of course, to be a key focus. Oliver Crook joins us now. Ollie, good morning. So how are European powers responding to the airstrikes?
Yeah, Francine, what we're hearing from European leaders is what we're hearing, I think, broadly speaking, from all of the international community, which is basically this is the moment now for de-escalation. The solution to this conflict will not be won on the battlefield, but at the negotiating table. And that is something that we've heard, for the last sort of week or so, but that sort of has got a new urgency after the U.S. strikes over the weekend. I'll bring you a couple of the direct comments. I think it's worth mentioning also what the Russians have said over this is, of course, Iran, a strong ally of the Russians, where Russia has been getting a number of its drones and is waging its war against Ukraine. We heard from Dmitry Medvedev, who's the deputy head of Putin's Security Council, and he had said that actually several countries are now prepared to supply Tehran with nuclear weapons. We should say that Medvedev has been a sort of troll in chief by the Russians and been very articulate about kind of criticizing the West over the last few years, but also saying that the U.S. attack caused minimal damage to Tehran and is not going to stop them from seeking a nuclear weapon. We should also say that the Iranian foreign minister is in Moscow today and will be meeting with President Putin a little bit later. But again, we heard the similar things from Ursula von der Leyen from what we've heard the entire week, which is that Iran should never be permitted to reach a nuclear weapon. This is sort of tacit endorsement of what the United States has done. But we also heard from her tweet, and this is something that I think comes as a slight criticism of the United States, that there needs to be respect for international law, and that is absolutely critical. This is part of the critique that we've heard domestically within the United States and a little bit abroad, which is that was this a preemptive strike or was this a preventative strike? And the distinction between those two things is how imminent the threat of Iran getting a nuclear bomb is. There's been a lot of debate about that, and we're hearing that from the Europeans. We should say, Francine, we're here in The Hague. We're expecting Donald Trump to arrive tomorrow. The Hague is the home of the International Court of Justice, International Criminal Court, really symbols of the international multilateral global order that Trump really wants to blow up. But we should also say, Francine, that the Europeans are going to have really limited influence over what goes on in the Middle East and certainly what goes on in U.S. foreign policy.
Oliver, thank you so much. Oliver Crook there at the NATO summit in The Hague. Now, Bloomberg will have interviews with senior European officials at the NATO summit this week, including the EU foreign policy, the chief Kaja Kallas, the German foreign minister, and the defense minister of Netherlands. Now, joining us is Rachel Elhus, Director General at Defense and Security think tank RUSI and former European representative for the U.S. Defense Secretary. Rachel, thank you so much for joining us. I have a million questions on NATO spending, actually what we heard from Spain, but also the Middle East. First, does Europe have a place in trying to mitigate what's happening between Iran, Israel, and the U.S.?
I believe the Europeans tried in that intervening period where Donald Trump gave a 2-week notice to the Iranians that he expected them to come to the table and negotiate. You saw a flurry of diplomacy from European leaders, but of course the strikes have now put us in an entirely different place. So for Europeans, I think the focus is on force protection.
How are you expecting Iran to actually retaliate?
It's very difficult to say right now because they're probably making some internal calculations about how any retaliation plays on their economy, on regime survival. So I think we've really just got to wait and see.
Rachel, I want to talk about NATO spending, but first, what do we know about actually the nuclear program? I mean, it's still unclear exactly how advanced it was, and with the new strikes, whether you can even see how much damage there is.
Yes. In any strike like this, we have to wait for the battle damage assessment. We have to wait for things to clear to really figure out how much has been hit. And you can't take off the table the possibility that the Iranians knew this was coming and possibly move things to other sites. So dispersal is not a good thing.
When you look at the significance, of course, of the NATO summit and the fact that Donald Trump is expected to arrive in The Hague, first of all, there was an exemption that Spain got from the 5% spending target. This feels very significant to me.
It is very significant, and we should remind everyone that Spain already was not meeting the NATO criteria of spending 2% of GDP on defense. So first and foremost, this hurts Spain. But secondly, any sort of habit of opt-outs in a NATO alliance that operates on consensus and unity is not a good precedent to set. I imagine the discussions around that table were very tense, and Spain will be in the hot seat for quite a long time.
Do you think it actually also risks jeopardizing the bond that Europeans were trying to hold together in the face of Donald Trump?
Absolutely. I mean, you know, when we talk about defense spending, it doesn't benefit just NATO. It also benefits each individual country as well as the European Union. So the money that Spain is not spending also undermines the EU's ability to do more in security and defense.
Rachel, we were together actually last week in Helsinki at a security conference, and one of the conversations was trying to figure out whether Europe had to just spend more to appease Donald Trump or whether it was to spend more to make sure that they could defend themselves. Is it a bit of both, or does Europe just have to stand on their own feet?
It's definitely the latter, that they have to do it because the strategic environment demands it. And if you look at the figures, the two big spikes in defense spending among European NATO allies come in 2014 and 2022, so the two Russian invasions of Ukraine. So it's no accident that people recognize what's going on. But when you're asking to go to 2, 2.5, even 3, there's some trade-offs there that are difficult to reconcile with what your public wants to spend on.
Yeah, and this feels also like a big deal, like a generational shift, right? What's the importance and significance of this NATO summit?
So this NATO summit is really a pattern of the last three. We had Madrid, we had Vilnius, we had Washington, and now we've got The Hague. And all of them were about reinforcing collective defense, making sure that NATO can deter Russia and other adversaries and defend itself if needed. And so this is about making sure that the plans and the capabilities that NATO has put forward to do that are properly resourced. And defense spending is one aspect of that, but outputs, concrete outputs, like some of the capabilities that Secretary General Rutte has mentioned, long-range strike, ammunition, all of those things matter as well to show that NATO's serious about fulfilling these objectives that it's set for itself.
Is the transatlantic relationship still solid?
You know, I've been surprised at the unity that the U.S. has shown in the run-up to the Hague summit. We haven't seen some of the worst-case scenario ideas that have been thrown out there. We haven't seen U.S. troop withdrawals from Europe. We haven't seen really any no replacement of the Supreme Allied Commander in Europe. So some of those worst-case scenarios, I think people read too much into the politics. At the end of the day, I think the United States realizes that NATO is a good deal for U.S. security.
Rachel, when you look at the global security complex, is there a danger that actually we're focusing so much on Iran that we're forgetting, right, and that also leaders are forgetting about Russia or forgetting about Gaza, and that something else could also happen further east?
Absolutely. I think it's worth reminding that President Trump came into office saying that he was going to get the United States out of wars overseas and, if anything, focus on the Indo-Pacific, and in fact has spent most of his time focused on the Middle East. So really there are competing tensions, and there's a limited amount of attention, capabilities, money that can be put towards each problem. So I do worry that with all the difficulties that are happening in the Middle East, that detracts attention and capabilities and resources from the Ukraine war.
Yeah, and without being alarmist, is this, how would China be looking at this?
They've been remarkably silent, and Russia was quite silent on the Iran-Israel issue for some time. Now I see a bit of opportunism. With China, it's a little bit different. I think they're probably worried about increasing energy prices. They're probably worried about instability in markets and how that could affect their own economy. So they could actually be a more tempered voice in trying to de-escalate.
But they wouldn't take advantage of the situation to actually do something in the South China Sea.
That probably seems like it would create even more chaos, both economically and politically. So I would assess that's highly unlikely.
Okay, Rachel, thank you so much for coming on today. That was Rachel Elihus, Director General of RUSI. Now, oil traders watching, of course, for any disruption in the Strait of Hormuz will dig into the potential impact on the crude price after the U.S. strikes on Iran. This is Bloomberg.
Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5. Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. The world braces for Iran's response to the U.S. attacks on nuclear facilities. The Revolutionary Guard signals that U.S. military bases in the region could be targeted. Oil erases gains after hitting $80 a barrel. Traders watching for signs of disruption in the Strait of Hormuz. And global stocks waver amid the uncertainty, while airlines shares under pressure as carriers reroute away from the Middle East. Now, welcome back, everyone. The unprecedented U.S. airstrikes on Iran have set governments worldwide on edge as the Islamic Republic warns of retaliation and Israel shows no sign of letting up on the assault. Well, we're joined by Rosalind Matheson, REMEA News Director. Ros, thank you so much for being here this morning. There's a lot of speculation of what Iran can and can't do, how quickly it would do it. What are the options?
Well, there are quite a few options for Iran, but as you say, a lot of calculations of the pros and cons here, because you have to do something in response to the US striking you directly. But what is that response that sends a message, perhaps without, again, setting this into a further escalation and a broader conflict in the region? I mean, we saw previously, obviously, in the Trump administration earlier, where they took out a senior Iranian general, and in the reprisals, obviously, there was a message to the US: we're going to hit US bases in the region, but we're going to warn you beforehand so you can get out of the way. And so maybe there'll be some kind of action like that. Yeah. Again, perhaps there'll be action through proxies, although Iran's proxies are quite weakened at the moment, including Hezbollah. Do they take the option of closing the Strait of Hormuz? Or that would be quite self-defeating for Iran economically. I mean, it's their main waterway also for the oil trade. So that could be damaging for Iran to do that. Do they go into the cyber realm? Because, of course, they've got a lot of experience at creating mischief in cyberspace with cyber warfare. So do they do some kind of action there? Is a collection of things. And it's obviously also about, again, for the regime in Iran, wanting to maintain preservation for themselves, but also show the Iranian people that they're standing up to the external threats. So a lot of calculations there. And so we might see Iran just taking a bit of a breath here to work out what to do.
Ross, what do we know about actually the nuclear sites? I mean, Donald Trump says they were obliterated, but we don't know.
We really don't know. And the IAEA, the UN watchdog, is saying that they don't know. There's no signs of massive damage, at least for now, there's no signs of radiation leaks going on. And of course, there's no clarity on where the heck, 400 kilograms of A-grade uranium is. And that's really the question. They've lost track of the higher risk uranium and where it's gone in Iran. And has it been moved to different sites? Does that give Iran some options there as well? And so really understanding the damage to these sites is very difficult at this point, because is it short-term damage they can repair quickly? Is it long-term damage that's going to shut these sites down for a very long time, for years or more? Has it really denuded Iran's nuclear capability, or is it just going to accelerate it? But at this point, we just don't know.
Yeah, Ros, what's been the reaction, in the international community? I mean, some are saying, well, how can we lecture Russia if then the U.S. does this? But actually, there's not a lot of people that, think that Iran was not a threat.
Well, that's right. It's interesting to see the behaviour of countries after this. I mean, the Europeans seem really quite sidelined in it, and they're being very clear that they didn't take part in the US strikes. Does that create a risk in itself? Because Iran at least passed messages through the Europeans. Previously, there were back channels there. Do you miss some of the opportunity in the signalling and the messaging if Europe's cut out from the US on it? Equally, you've got Iran's allies, traditional allies, Russia, China, being quite clear that they're not going to come in and militarily support Iran in all of this. That's even as China's probably watching very carefully the flow of oil from the region because it relies on it a lot. They're not keen to rush in either. So it really does seem at this point it's Israel, Iran, and the US.
Ros, thank you so much. Ros Matheson there, our EMEA News Director. Now, the U.S. has conducted strikes on Iran, as we were just saying, and we're waiting to see whether or not this will lead to an escalation in the conflict in the region. Joining us now is Sanam Vakil, Middle East and North Africa Program Director at Chatham House. Sanam, thank you for joining us. Where does this go next?
Well, we're very much in a wait-and-see moment. First of all, the Iranian leadership is assessing its options. There are not many good ones on the table. But secondly, it's important to note that the strikes back and forth, the war between Israel and Iran is also continuing. There has been no lull there. Iran is considering escalatory measures, whether it's leaving the Non-Proliferation Treaty, stopping International Atomic Energy Agency cooperation. That would be relatively benign, but dangerous in its own way. Secondly, of course, there's the potential for a military response, striking U.S. air bases, potentially even those that have been evacuated, to send a signal, a face-saving solution. But Iran is certainly the weaker party here. It doesn't have too much in its toolkit left to protect the regime while preventing further escalation. So we have to see what Iran's supreme leader says. He is in a bunker, and so I think the system is very much trying to coordinate options.
Sanam, what's the way that Iran can still inflict pain on the U.S. and the rest of the world without damaging itself too much? Like, what are the calculations there?
Well, there aren't any that won't have a boomerang effect and impact Iran. But, most obviously it can hit U.S. military bases in Iraq or Syria. There's certainly a wide array of options in the Gulf. I don't think hitting targets in the Gulf is in Iran's interest at this moment, really because the Gulf states and Iran's relations with the Gulf states have been improved dramatically, and Gulf leaders are playing an important role in trying to de-escalate this conflict. Nobody wants this war to spread, and nobody wants this war to continue. And it's worthwhile also stating that Gulf leaders are very alarmed by the talk of regime change in Iran. While there's been no love lost between Iran's leaders and Gulf states in the past, there are deep concerns that this could have spillover effects impacting regional stability in various serious ways. Iran has, of course, also threatened for quite some time to close the Straits of Hormuz. That would impact, of course, Iran's economy. It would put pressure on Donald Trump, no less, but this is no easy feat. So, these are some of the potential options on the table. But again, there are a lot of risks for Iran here.
Sanam, how lonely is Iran, or how alone is Iran right now?
Iran is and has always felt alone. This goes back to the 1979 Iranian Revolution, which was very ideological and threatening for the Middle East. It has no natural allies in the region. And geopolitically, Iran is very isolated, obviously, from the United States with no diplomatic tensions. But there have been real deepening problems between Iran's ties with European countries as well. It has closer relations with Russia and China, both economic and strategic, but it appears that these geopolitical players aren't going to enter this conflict. Instead, they're making rhetorical calls for de-escalation, but probably seeing opportunities for their bilateral challenges with Washington. Russia, of course, looking to talk to President Trump and try to present an off-ramp, and China very much focused on its own dynamics with the Trump administration, so they're not going to wade in. Iran does have improved ties with its neighbors, though, and I don't think it wants to compromise those.
Sana, when you look at the security in the world at large, how much is this also taking away from concerns of what's happening in Gaza, but also Russia? Is all of this the world leaders' attention now going to be on Iran?
Well, I think Western leaders and Western bureaucracies have been struggling with this issue of quote-unquote bandwidth for quite some time. We now have three major wars that Iran's war with Israel could also become a protracted conflict. There's no guarantee that it's going to quickly come to an end. Three protracted wars of attrition are very dangerous. This, of course, has broader destabilizing effects geopolitically for the principles of international law. There are definitely some double standards playing out here. And I would say, above all, there are no real efforts to address Israel's ongoing pummeling of Gaza. There are a huge amount of deaths reported every day that are not getting the attention that they deserve. And I think that policymakers need to be able to walk and chew gum, particularly on Israel's aggression towards Palestine. You can be able to do both, and you can be able to be critical and supportive if that's the Western position in this conflict with Iran.
Yeah, and Sanam, finally, I mean, when you look at Saudi Arabia or some of the Gulf states, I know they have a vested interest when it comes to the oil price, but, how much will they weigh in on what's happening in the next couple of weeks?
I think they're very concerned. Gulf states have been very critical of Israel's strikes on Iran, have also been critical and called for de-escalation. They've held an Organization of Islamic Countries summit in Istanbul just on Friday. And Saudi Arabia actually condemned the U.S. strikes on Iran, which was quite striking. A statement coming from the Kingdom of Saudi Arabia. And this speaks to the real anxiety percolating across the Gulf, worried that this is another 2003 moment for the Middle East, 2003 being when the U.S. invaded Iraq, and regional countries, including most of America's Arab allies, strongly opposed the U.S. invasion. Gulf states continue to bear the consequences of that invasion 2 decades onwards. These are very concerning times, and ultimately Gulf states, but Arab states more broadly, are very aware that Israel's military campaign against Iran is drawing attention away from the war in Gaza, and ultimately they do not want focus to be lost on the issue of Palestine, and they don't want to be pressured into normalizing with Israel without a guaranteed pathway for Palestinian statehood, and that needs to return to the conversation while we also follow the Israel-Iran war underway.
Thank you so much, Sanam Vakil. They are director of the Middle East and North Africa program at Chatham House. Now, oil erasing earlier gains of as much as 5.7%. Crude initially jumping after the U.S. attacks on Iran stoked concerns that energy supplies from the Middle East could be disrupted. Now, as the world braces for Tehran's response, U.S. Secretary of State Marco Rubio has called on China to pressure Iran not to close the Strait of Hormuz. About a fifth of the world's crude output passes through the strait.
Well, I encourage the Chinese government in Beijing to call them about that because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. It's economic suicide for them if they do it. And we retain options to deal with that. But other countries should be looking at that as well. It would hurt other countries' economies a lot worse than ours.
With us now, Will Kennedy, our Senior Executive Editor for Energy and Commodities, and Al Nightingale, Team Leader for Oil Trading Europe. So thank you both for joining us. Well, what's oil doing? So it was up, but now it's pretty much flat. It's like, what, no concerns here? Move on?
Well, I don't think there are no concerns. I think the broader picture is that we're probably $10 a barrel up from where we were before Iran first struck Iran. So that risk premium remains in the market. But the immediate concern that the US attack would be followed by Iranian retaliation, possibly on the shipping industry, hasn't materialized. And the most important fact for oil traders looking at the market today is that oil is still flowing. Oil is still getting out of the Persian Gulf into global markets. We haven't seen that flow impeded in any material way. Therefore, after an initial jump, there's no need right now to mark the price higher.
So, Al, I mean, the concern is the Strait of Hormuz, right? Because it just passes so much. I mean, does Iran have any incentive to close it or to do something there? Because it would also inflict so much damage on their oil exports.
I don't think the risk is only the Strait of Hormuz. There's also kind of, say, Iraq or nearby countries where it could potentially look at their oil infrastructure. I agree with you about kind of the harm that they could do to themselves, but Iran is looking increasingly cornered, and when you're under that kind of pressure, is not completely certain what you'll do in response. So they may well do something that looks outwardly irrational, and they don't have to close the Strait of Hormuz. It's not as binary as that. They can do things that maybe add to the risk premium, as Will was talking about.
Yeah, so how do they do it? I mean, again, we're looking at some of the, the global energy checkpoints and that strait. I mean, could they close it partially? Is it bombing? Is it through something else? Could they disrupt it, just to cause a bit of chaos?
Well, I think that's it. There's every opportunity to calibrate the response or to do something that is less than a full closure. So, for example, you could order foreign ships into your territorial waters. You could make an effort to target American ships. Yeah. Obviously, there's a potential for response, but I think just talking about the closure of the Strait of Hormuz probably isn't the right way to think about it. It would be very, very difficult to do that for any length of time. They might make some declarations. We saw kind of stuff in the Iranian parliament, but I think it has to go to a higher level before they take that step, and it's a huge step to take.
What does history tell us, Will? I mean, if we look at Kuwait, if we look at Iraq, is there any, template for this?
History tells us that eventually the oil gets to the market. If we look at the Iran-Iraq war, yes, there was a lot of harassment and attacks on oil tankers, but ultimately the oil got to market by using convoy systems, by getting navies involved. And, while a similar scenario would be very disruptive for markets, I think the US Navy would find a way to get the oil out of Hormuz. I don't think this idea that Iran could close Hormuz fully and permanently for any length of time is credible. As Al was saying, it's a sort of scale of interference, of disruption. But that's not to minimize things here. Hormuz is absolutely vital to the function of the global energy market. We're already seeing the cost of shipping in and out of the Persian Gulf rising, so it has had an impact. And I don't think the market should be complacent. Clearly, Iran has some decisions to take, and things could change very quickly.
Yeah, and again, for people that, are looking at home or on trading floors that don't know, basically the strait goes through the territorial waters of Iran and Oman, right? At some points, the strait is actually quite narrow. It's like less than a mile or just over a mile?
No, sorry, at its narrowest point, it's something like 21 miles. But
21 miles.
That's still very narrow. If you think about what the Houthis did in the Red Sea, they managed to bring down traffic by something like 70% compared with 2022 and 2023, and they're attacking a vast stretch of water, 21 miles in width when you've got a land border. That's a lot smaller than what the Houthis did. And, if you do see incidents involving shipping, we have to see what owners' risk tolerances are. As Will was saying, in the Iran-Iraq war, you got over 400 tankers attacked, but the oil flowed. So ultimately, you get to a point where people have to make decisions. They have to decide how they feel about risk. There are so many things that can happen from now to, an escalation or an increase of tensions.
Yeah, and we saw, I think, 2 super tankers actually turn around. Will, thank you so much. Al, thank you so much. Will Kennedy and Al Nightingale. Now, coming up, Israel reacts to U.S. strikes on Iran and ratchets up attacks of its own. More on that next, and this is Bloomberg.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that none of the guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
The U.S. attacks on Iran have been welcomed across the political spectrum in Israel, but the Israeli president has said the attacks do not mean the U.S. is joining the war against Iran.
We made clear throughout that we are not dragging America into a war, and we are leaving it to the decision of the head of, the president of the United States and his team, because it had to do with America's national security interest, period.
Well, we're now joined by Bloomberg's Dan Williams in Jerusalem. So, Dan, what remains for Israel to tackle in Iran is what exactly? If the nuclear program has been obliterated by the U.S. airstrike, as President Trump has said.
Hello. Well, yes, that really is the question of the day, because the Israeli attacks are continuing apace. So is the Iranian retaliation. On a smaller scale, perhaps, but it seems that the Iranians are titrating what remain of their missiles. Today, for example, we had 4 separate launches, one of just 1 missile, the other 3 of around 5 each time. But the last 3 managed basically to shut down the country for 30 or 40 minutes while everyone took shelter. So it seems the Iranians are being resourceful, imaginative with how they use their remaining arsenal. And the Israelis, meanwhile, have been attacking, including in Tehran last night. So I think the distinction here, and it's a distinction with a difference, is a dispute potentially brewing quietly, respectfully, with much circumspection over the damage that was in fact dealt to those 3 sites attacked yesterday by the United States, specifically the one at Fordow, which was out of reach for the Israeli military, given it was so heavily defended, dug into a mountain, and required the heavy bombs of the United States. As you noted, the president, his defense secretary have both spoken in absolute terms of the destruction of the Iranian nuclear program. The Israelis have been saying, well, certainly a lot of damage was dealt, but until the BDA, the battle damage assessment, is in hand, and that could take several days, it will be impossible to know for sure exactly how much of those sites may remain, specifically the one in Fordow.
So, Dan, how might this all impact the war in Gaza?
The war in Gaza continues. It's now well into its 20th month. To judge from what the Prime Minister Netanyahu said in a press briefing yesterday evening, which was televised, he believes Israel could actually have advantages in Gaza should Iran be bested, should Iran be defeated in this round of confrontations with Israel. His logic, as he applied it, was Hamas is an Iranian proxy. Having lost its sponsor, having seen its other allies like Hezbollah not rising to its defense, the Hamas leadership may decide to cut a deal with the Israelis to surrender, hand over what hostages remain in exchange for, say, an exile deal. However, he himself acknowledged that this has yet to, quote unquote, sink in with Hamas, so it would appear that that war will continue, albeit not as headline grabbing as the current war with Iran.
Dan, thank you so much. Dan Williams there for us in Jerusalem. Now, European airline stocks under pressure this morning as airlines, including British Airways, cancel flights to the Middle East. Let's get more from Bloomberg's aviation reporter, Danny Lee. So, Danny, good morning. What's been the impact on airline stocks?
Well, for airlines, they are very sensitive to the higher cost of oil, particularly through jet fuel prices. So this is why you see the share prices of airlines being put under pressure, not just in Europe, but earlier in the day in Asia as well. And it's through the high cost of oil, which means it's more expensive for the airlines through operating costs, but also because what we see, not just the threat in the sea, but also in the air, where airlines are having to take longer routings potentially, that they are factoring higher costs overall into their operations.
So talk us through the airlines actually rerouting and canceling. Who are they, and what's the new route?
So we've seen so far the likes of Singapore Airlines in this region of the world cancelling flights between Singapore and Dubai up until July 25th. We've also seen in Europe British Airways take action since the weekend. That also presents a challenge in as much as for various airlines, they're taking a various range of options. We've not seen the likes of Qatar Airways or Emirates Airlines taking similar action. They still remain business as usual for the large part, but it's for the foreign airlines coming into the Middle East region. They are more worried about the risk to their operations if planes get stuck as well. So airlines are taking various different approaches, but clearly for airlines confronting this growing escalation in the Middle East region, there is a fact to be played out in terms of how they are having to take the risks to their operations.
And Afghan airspace, now busier than ever, Danny.
Yeah, it is going to be busier than ever because of the narrowing number of ways in which airlines can fly through the region. So it's between Iran and through Jordan to Israel, which is pretty much locked out for airlines. And so they are squeezing into a fewer spaces. But it remains to be seen, though, is if this escalation in the war grows ever deeper, how many fewer options airlines have. And that's something that the airline industry will be watching out for.
Danny, thanks so much. Danny Lee there with the very latest on flights. Now, we're live at the NATO summit this week, speaking to key players, including the Dutch defense minister, the foreign ministers from Germany and Lithuania. Up next, Bloomberg Brief, and this is Bloomberg.
geopolitics to the world of business. Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Let's talk about this villa. Very traditional. A lot of things of the past.
I live my very first independent life in the farmhouse. And I built it by the memory of the farmhouse, the philosophy they believe, yin, yang, 5 elements, the concept of the life, of the happiness. They built this kind of roof, like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm a lucky man because not everyone should have the experience of the war and peace, poor and rich, technology progress, a change during my life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human beings, for the world.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime.
We are not dragging America into a war, and we are leaving it to the decision of the head of, the President of the United States and his team.
The bombing of Iranian nuclear facilities by the United States marks a perilous turn in a region that is already relieved.
It's 5 a.m. in New York City. Good morning. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday morning. Iran vows to retaliate and keeps up strikes on Israel following the U.S. attack on its nuclear facilities. The world braces for what's next as Washington issues a worldwide caution for Americans. And the spike in oil quickly fades. Traders keep their eye on potential disruptions in the Strait of Hormuz. There's only one story this morning for both markets and the greater world, with the potential range of outcomes unknown at this moment. But how much will we really trade that? Oil is a remarkable asset to look at this morning. Immediately when it opened in the Asia trade, we were higher by nearly 6%. Look at what's happened in the hours since. We quickly faded. Indeed, we dropped at one point. We are little change on the price of oil, just given that the reaction in stocks is likewise muted. Any sort of sell-off we've seen has faded, and we are buying this morning, up 0.2 for both the S&P and NASDAQ 100 future session. Terry Haynes at Pangea says that the markets are misplaced with this optimism. Mike Wilson over at Morgan Stanley, though, says that any geopolitical dips are quickly faded. But again, we are not even dipping this morning. Likewise, there is no bid into the haven asset of treasuries. You could say potentially they're worried about inflation, but hey, oil isn't even moving this morning. Still, we're about a basis point higher on the front end of the curve. Your 10-year yields at 4.39. Your 30-year yields higher by just 2 basis points. Let's look underneath the surface, get you some stocks to watch this morning. With that is Joe Easton. Good morning, Joe.
Morning, Danny. So we are seeing some moves higher in the defence stocks in the early trading this morning. As you say, a lot of the broader moves have actually started to fade, but we are seeing a bit of a move higher in Lockheed Martin this morning. Also, Raytheon RTX getting a boost, but less than 1%. So really not the huge boost that you might expect in defence stocks, given the news we got at the weekend. The other sector, of course, that we're looking at is oil, given the movements we've seen in crude. But as Danny was explaining, the move hasn't been as exaggerated as we expected. We did see oil up around 5% overnight, coming back down into negative territory. So we've got Chevron, ExxonMobil on the radar, but again, moves of only around 1%. And finally, airlines. This is where we've seen the weakness today in Europe, because we have seen airlines warning of potentially cancelling some routes into parts of the Middle East, given the disruption there. So keep an eye on the airlines later. American Airlines, United, Delta, all of those likely to be lower following European peers in the red. And as usual, check out the Before the Bell opening wrap for a summary of all these moves and more on the terminal, Danny.
Joe, a great roundup. We'll also speak with you later in this hour. Also coming up this hour, we will be speaking with the former Israeli ambassador to the U.S., Michael Oren. Andrew Sheets of Morgan Stanley and Kathy Jones of Charles Schwab will join us on what so far has been a limited market impact. Meanwhile, the world is bracing for Iran's response to U.S. strikes, while Israel's President Isaac Herzog says it's not asking the U.S. to go to war.
We made clear throughout that we are not dragging America into a war, and we are leaving it to the decision of the head of, the President of the United States and his team, because it had to do with America's national security interest, period.
Our team coverage starts right now. Joining us is Bloomberg's Tyler Kendall in Washington, D.C., and Bloomberg's Dan Williams in Jerusalem. Dan, let me start with you. What do we understand about the extent of damage that's been done from these attacks, and what that means on where we go from here?
Well, to judge by the statements made by the Trump administration, the president himself, the defense secretary, total obliteration of the nuclear program, total success of that bombing run that took the world by surprise over the weekend. The Israelis have given a more nuanced assessment. They've been talking about a great deal of damage, but say there's really no knowing until the BDA, the Battle Damage Assessment, can be conducted, and that will take a number of days. The Israelis are being circumspect about this. Potentially the Americans have a different approach, given that they would like this to be a knockout blow, an in and out, one-time engagement by U.S. forces in a foreign war. So we will see in the coming hours and days whether there'll be a clearer picture. It would appear that satellite photographs only have a limited value, given that at the outset, the Fordo plant was underground. That's where it was deliberately designed and built to withstand conventional military attacks. So presumably, one would have to inspect it underground to know the degree to which it was affected or damaged or destroyed by this attack.
Tyler, Dan was hinting at it there, what we've heard from the U.S. saying that they're claiming more extensive damage, at least at this point. What does that mean about further and potential U.S. involvement at this point?
Yeah, hey, Danny, good morning. Well, President Trump himself has threatened that if Iran doesn't come to the negotiating table here when it comes to their nuclear program, then he could threaten even further action. And perhaps as we get additional details about the full extent of the damage, that could also spur U.S. involvement further. Now, we should say that we heard from the Vice President J.D. Vance yesterday, who did say that the U.S. feels at this point that they have significantly set back Iran's nuclear program, but also did signal that Iran still holds on to a stockpile of enriched uranium, sort of indicating there that there could potentially be further U.S. action moving forward. The International Atomic Energy Agency yesterday briefed the UN Security Council and said that at this point, their inspectors aren't able to get into that site to survey the full extent of the damage. So we're watching very closely here how the Trump administration's rhetoric could heighten on this as we wait to see if Iran ends up retaliating in a way that could move the U.S. further along.
Well, to that point, and what potential Iranian retaliation could look like, Secretary of State Marco Rubio spoke to CNN on the possible closure of the Strait of Hormuz. Let's take a listen to that.
Well, I encourage the Chinese government in Beijing to call them about that, because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. It's economic suicide for them if they do it. And we retain options to deal with that. But other countries should be looking at that as well. It would hurt other countries' economies a lot worse than ours.
Dan, what does Iran backed into a corner and possible retaliation look like?
Well, its options appear to be limited. As the Secretary of State suggested, a retaliation has to serve the interests of a state retaliating, perhaps not exacerbate the situation it's in. There has to be an element of escalation control here, escalation management. We have seen more limited, indirect, if you like, retaliation in Iran now 4 times, attacking Israel today with long-range missile launches. Each volley smaller than what we saw previously. One volley was actually just 1 missile. That was early in the morning before dawn. And then 3 volleys, about 5 missiles in each. And I think what they're trying to do now is husband what remains of their arsenal for maximum effect. So we have seen retaliation there. The Strait of Hormuz would appear to be a game changer because it would affect the global economy. It would also affect the Iranian economy and Iranian interests. They don't seem to have much to hand. It would appear for now, especially as Israel is continuing its own attacks, that two-way war, the bilateral between Israel and Iran, will continue apace, while the Iranians weigh if and when to act in a manner that would directly affect U.S. interests.
Tyler, Dan, thank you so much for joining us. We will catch up with you later in the hour. Tyler Kendall in Washington and Dan Williams in Jerusalem. I'm pleased to say that joining the program now is former Israeli ambassador to the U.S., Michael Oren. Ambassador, great to have you this morning. Thank you for joining us. Now that we have U.S. involvement, the actions over the weekend, how drastically does that change the course of this war?
Well, good to be with you, Danny. It totally changed the course of the war. It changes more than the course of the war. It changes the course of Middle Eastern and potentially even global history. The people in Beijing will be thinking twice before they ever make a move to conquer or attack Taiwan. And the Russians will be thinking differently also. The message of American steadfastness and willingness to project and use power, I think, has been unequivocal here. For the Middle East, potentially, the war could end with the Iranians not just giving up the right to enrich, as they call it, their nuclear facilities, but also ceasing to be the world's leading state sponsor of terror, the financiers and trainers of Hezbollah, Hamas, and the Houthis, complicit in the massacre of hundreds of thousands of people in the Middle East and thousands of Americans, just too. So everything could change as a result of America's military involvement.
Ambassador, if I can jump in, because a less cheery interpretation could be that however successful the attack, the lesson that will be learned from governments around the world is that a working nuclear arsenal protects you from being bombed or invaded. A lesson learned by Libya, Ukraine.
It's the nature of our bandwidth.
Yes. No, please. I'd love your thoughts on that being the risk and the potential outcome more globally from this.
Okay, there are certainly risks, and if Iran decides to shoot at American soldiers, there are about 40,000 American troops in the Middle Eastern area. If it decides to close the Straits of Hormuz, and we just heard Secretary of State Rubio saying that would be economic suicide and a massively bad decision by Iran, but they could do that. The Iranian regime, with its back up to the wall, could actually want the United States to get more deeply bogged down in an Iranian quagmire in order to deepen the divisions within the American electorate, certainly within the Republican Party, where there are still people who still strenuously oppose President Trump's decision. That would be a desperate move by the Iranians. We have heard from Dan Williams, your reporter, that though the missile attacks continue here, they're getting smaller and smaller. Last year, there were 300 missiles per volley. We went down in this round to 200 to 100 to 60 to 40, and this morning only 1 rocket fired during the night. So yes, they are trying to husband their missiles. So they are in a difficult situation. The fact of the matter is, at the end of this, whether the Iranians decide to strike at American bases or to close the Straits of Hormuz, whatever they decide, this war is going to end at a negotiating table. And America's position at that negotiation table will be absolutely faithful. It won't even be pivotal, it'll be faithful.
Michael, how important is it that Israel ceases their attacks on Israel to get that negotiation? Iran, before this weekend, had been very clear that they wouldn't negotiate while attacks were still ongoing. Is this a time for pause in negotiation?
Well, interesting question, Danny, because last night and elements of the Israeli government indicated that Israel would consider a ceasefire if the Iranians would come back to the negotiating table and negotiate the dismantling of their nuclear facilities, those which haven't already been dismantled, and that they would forgo the right to enrich, which was the American position. So I think the United States and Israel are in lockstep on that. Some of the messages coming out of Washington are inconsistent. One hand, President Trump calling for the overthrow of the Iranian regime. Other messages coming out and saying America is interested in going back to negotiations. But here we have the Israeli side and the American side saying negotiations could resume, but only on the condition that Iran is, first of all, going to stop shooting at Israel, and Iran is going to consider seriously the American and Israeli demand for the dismantling of nuclear facilities and the end of enrichment on Iranian soil.
Ambassador, I'm curious, just given what you're saying, on your take on who really is the controlling force here. Senator Chris Van Hollen in the U.S. said it's clear that President Trump has been outmaneuvered by Prime Minister Netanyahu, because it was Trump who very clearly had been saying that he wanted to make a deal, not war. Is the senator correct that this is Israel outmaneuvering the U.S. and forcing their hand in attacking Iran?
Absolutely not. Absolutely not. I've been involved in the Iranian issue and the U.S.'s relationship around the Iranian issue for more than 20 years now. And I know how these discussions proceed. This is an American interest, Danny. It just simply is. You heard our President Isaac Herzog say that earlier, but I can say this even more emphatically. The president understood that the Iranian nuclear program posed a threat, not just to the United States regionally, but globally. It changes the entire global balance of power. The United States faces 4 major adversaries in the world. They're all allied. That's Russia, China, North Korea, and Iran. 3 of them have nuclear weapons. The 4th, getting nuclear weapons, would simply upset the entire global balance of power. And the president understood, and he's articulated this previously, that the Iranians have a long history of attacking Americans, of killing Americans, beginning with the horrific bombing of the Marines barracks in Beirut in 1983, the bombing of the American embassy in Beirut, killing Americans throughout the Middle East, and even in the last 2 years, attacking American bases in the Middle East dozens of times, and wounding hundreds of American soldiers, killing several, and attempting to assassinate the President of the United States, as well as a former national security advisor and a former Secretary of Defense on American soil. This is a country that cannot have nuclear power. He understands that. It's a very simple calculus. This is not an Israeli interest. This is an American interest, and it's a paramount American interest. And the president, yes, he wants to end wars. Of course he wants to end wars, and he sees himself as a peacemaker. And I sincerely believe he could be the greatest peacemaker of the 21st century if, as a result of this war, we get peace with Lebanon, Israel gets peace with Syria, and maybe even peace with Iran.
Ambassador, I just want to end with this, because you had put out on X that dozens of Israeli journalists and public figures had purportedly received a letter from you asking for sensitive information that wasn't from you. Is it your understanding that you yourself have come under as a target, at least, of deception and impersonation from the Iranians?
Yeah, it's not the first time, Danny. And yes, we had to deal with this, and in a sort of odd way, it's kind of complimentary that the Iranians feel that they can utilize my name to try to compromise Israeli security and garner sensitive information. But of course, it's not going to work. And it actually indicates the pathetic state of the Iranian leadership, where they have to resort to this type of rather transparent and really sad trick.
Ambassador, we really appreciate your time this morning. Little issues with your video, but I'm so happy we were able to get you on. Michael Oren, former Israeli ambassador to the U.S. Now let's get you some other top stories trending on the terminal this morning. Ukrainian President Vladimir Zelensky says that he will be visiting the UK today. Zelensky made the announcement following an overnight Russian attack on Kyiv that killed at least 6 people. In a post on X, Zelensky said he will be negotiating new and powerful steps to increase pressure on Russia. Bank of New York Mellon approached Northern Trust last week, expressing interest in a possible merger. The Journal reporting that the chief executives had at least one conversation, though the banks did not discuss a specific offer. Representatives of BNY and Northern Trust both declined to comment. And Tesla launched its long-awaited driverless taxi service Sunday, but only to a few riders. The first robo-taxi trips were limited to a narrow portion of Tesla's hometown, Austin, with an employee seated in each vehicle monitoring the journey. Initial riders featured investors and social media influencers who live-streamed their trips. Coming up, we'll get a market reaction from Andrew Sheets of Morgan Stanley on the risks of escalation in the Middle East. That's next on your brief.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday, only on Bloomberg. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
It is in energy prices, yes. Of course, there could be secondary and tertiary impact. Let's say there is more turbulence that goes into hitting growth prospects of large economies, and then you have a trigger impact in a downward revision of prospects for global growth.
IMF Managing Director Kristalina Georgieva on the broader impact of U.S. strikes on Iran. Meanwhile, Morgan Stanley's Andrew Sheets writes, quote, plenty of reasons to worry. Spreads are tight, growth is slowing, and geopolitical uncertainty remains high. Given this, many credit investors are cautious and waiting for better levels. Pleased to say that Andrew joins us now. Andrew, the here and the now this morning, if you were to look at markets, you'd have no idea that there was a major geopolitical event that happened over the weekend. I'd love to get your initial reaction to the lack of reaction today.
Yeah, thanks, Danny. Good morning. So, look, I think there are some kind of short-term and longer-term issues the markets are parsing here. But, I think in the near term, I think markets are understandably very focused on oil prices as the main channel with which this conflict would impact the broader global economy, would impact a broader sense of companies, and the fact that oil prices are well behaved, the fact that the Strait of Hormuz still seems to be operating as normal. The fact that oil markets are quite oversupplied in our view, kind of looking out over the next several quarters, those are all, I think, helpful factors, in addition to the fact that, I think if we just kind of factually look back at a lot of geopolitical events over the last 50 years, they often don't have maybe as large of a market impact as one would expect, or as kind of negative a market impact as one would expect. So yes, there are, increased long-term uncertainties by the action over the weekend. We can get into those. But, I do think credit markets are still facing pretty favorable technical forces. Yields are still attractive. And, I think the history of some of these geopolitical actions is they're just often not a reliable catalyst to disrupt those factors in the near term.
Yeah, something your equity analyst, Mike Wilson, had been talking about this morning as well. Andrew, if we do have a scenario where the Strait of Hormuz is closed or severely disrupted, which carries 20% of the world's oil consumption on a daily basis, if that happens, oil spikes, goes into triple digits, how do you view what the other reaction from credit, from this bond market would be?
Yeah, so that would be a very serious bear case, and that's the way our commodity strategists are thinking about it. That would be a scenario where $130 on oil would be possible, but you would need that sustained significant disruption, given that supply elsewhere in the world is pretty healthy. And I think that's also important because, as my colleague Michael Wilson and his team on our U.S. equity strategy side have shown, you really often kind of need a 75% year-over-year increase in oil to get the really kind of large negative market reaction shocks. As we're sitting here today, oil is basically unchanged. year over year. So you need something significantly more serious than what we've seen so far. So in that closure of the strait scenario, we think kind of $130 on oil is a possible kind of short-term reaction. But we do think it's important to note that given how well supplied the oil market is, more minor disruptions are not going to have as significant of an impact on the oil price.
Well, perhaps one of the bigger drivers in recent weeks for the bond market, for markets in general, has been the growing deficit and the One Beautiful Bill Act making its way through D.C. But Andrew, if this is a U.S. that shifts to a war footing, even if there is limited disruption to oil markets, surely that is something that just increases the deficit. Do budget concerns come more sharply into focus after this weekend?
Well, I think with the budget, there are a couple of factors that are on our minds, and I think as they relate both to the broader market and credit specifically, this is a bill that on a number of independent estimates and on our own forecasts is increasing the deficit from already relatively large levels. And I think the challenges of this bill, I think when you're modeling it, is that some of the tax cuts, which are stated to be temporary, happen immediately, happen quickly, or start quickly. And the spending cuts, which will be modeled to be permanent, happen much later. So there is a timing element as well in the bill that is deficit increasing and would potentially increase supply. So you do have this really notable contrast between already larger levels of government borrowing that are slated to increase and more modest levels of corporate borrowing that could decrease or could be less on a net basis year over year because companies are looking at greater uncertainty, they're looking at higher interest rates, and they might see less reason to borrow. So that contrast in borrowing between the government side and the credit side, that is, I think, an important theme. And again, another reason why we think probably spreads do stay kind of frustratingly low over the next several months as you see this division.
Well, you also, as we started out, Andrew, with your thoughts this morning, that it's not just the companies themselves that are cautious, it is credit investors themselves. I mean, next week, July brings with it a whole host of risks between what's going to unfold in the Middle East, between the deadline for the One Beautiful Bill, the deadline for reciprocal tariffs. What gets investors off the sidelines, Andrew? Because there seems to be no let-up in uncertainty.
Yeah, so, I think there are a couple of factors. I mean, one would be that you do see, some time pass after this weekend's events, and there is no further escalation or no further action, say, from the U.S. Maybe that is helpful for letting investors think that this issue might now be somewhat on the back burner for the near term. You have historically very good credit returns in July. If we go back over the last 15 years, July has been the best month for total returns in corporate credit in the U.S. and Europe, and it's not even close to the next month. And earnings season could be okay. So I think we're actually a little more worried about August and September. By that point, positioning could be higher. Seasonality is not as helpful.
All right, Andrew, thank you so much for joining us this morning. A lot to work through. Andrew Sheets, Global Head of Corporate Credit Research at Morgan Stanley. Coming up, we'll get more on that, let's say, lack of market reaction. We'll speak with Kathy Jones of Charles Schwab's next on Bloomberg.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime.
We are not dragging America into a war, and we are leaving it to the decision of the head of, the President of the United States and his team.
The bombing of Iranian nuclear facilities by the United States marks a perilous turn in a region that is already reeling.
It's 5:30 a.m. in New York City. Good morning, I'm Danny Berger with your Bloomberg Brief. Here's what you need to know on this Monday morning. Iran vows to retaliate and keeps up strikes on Israel following the U.S. attacks on its nuclear facilities. The world braces for what's next as Washington issues a worldwide caution for Americans. And the spike in oil fades, traders keep their eye on potential disruption in the Strait of Hormuz. There's only one story in markets and indeed the broader world today, with a range of possible outcomes barely reflected in markets this morning. At one point when oil opened, Brent crude was up nearly 6%. We turned negative earlier this morning. We are slightly rising again, up just about 1/3%. The reaction in risk markets similarly muted. Futures started out negative. They've pushed positive again, both up for the NASDAQ and S&P, up 0.2%. We're just speaking with Andrew Sheets of Morgan Stanley, who noted that historically the responses to geopolitics is limited and reverses. Hence, you got that this morning. But Pangaea's Terry Haynes saying that the fragile market optimism is misplaced. Well, certainly, given that fragile optimism, you're not getting a bid into bonds. Slightly unchanged to losses this morning for your bond market, 438 on your 10-year yield, higher by a basis point on the long end of the curve. We are back at 4.9%. So let's get you some stocks to watch. With that is Joe Easton. Hey, Joe.
Hey, Danny. So as you say, not huge moves in reaction to this news at the weekend, but one space we are seeing a little gain higher is in the defence stocks today. We're seeing Lockheed Martin, Raytheon all gaining close to 1% in the pre-market trading. Now, this news of the attack on Iran does come on the backdrop of the NATO summit this week, where we are seeing pressure for countries to hit the target on spending that's been set by Trump. So this kind of taking the effect away from that, but we are seeing a move higher in those stocks very slightly at the moment. Then in terms of oil, with crude coming back down, the gains in those oil stocks pre-market are actually tempering a little bit. Chevron now only up 0.9%. ExxonMobil 1.3%. Crude was up 5% overnight, but actually into negative territory very recently, as Danny was mentioning earlier. So keep an eye on the oil stocks as we move forward. And then the airlines, this seems to be more about the disruptions to routes. We did see overnight British Airways, Singaporean Airlines, Qatar as well, announcing some cancellations heading into the Persian Gulf. So we are seeing airline stocks heading lower today. American Airlines, United Airlines, as well as Delta was a little bit softer as well. Keep an eye on the airline stocks this morning, Danny.
Joe, thank you very much. Excellent work this morning. Now, the main story, back to it, Israel's President Isaac Herzog says Israel is not asking the U.S. to go to war as the world braces for response from Iran.
We made clear throughout that we are not dragging America into a war, and we are leaving it to the decision of the head of, the President of the United States and his team, because it had to do with America's national security interest, period.
We go back to our team coverage with Bloomberg's Tyler Kendall in Washington, D.C., and Dan Williams in Jerusalem. Tyler, what dictates further and possible U.S. response from here?
Yeah, hey, Danny. Well, we're watching closely, of course, whether or not Iran is going to retaliate and what that retaliation would look like and how the U.S. would then respond in kind. Now, our analysts at Bloomberg say that there's a sort of 3 different ways that this could go. Iran could have a more targeted response and call for a ceasefire, more targeted response and no ceasefire. That's something that this White House would probably be looking at more closely, since President Trump has previously indicated he wants to see what he has called unconditional surrender, something that Iran says is not on the table. Then the last way would, of course, be a much greater escalation, and that could look like Iran targeting key energy infrastructure in the region, U.S. troops and interests, but then also, as you've been discussing on the program this morning, any sort of action against the Strait of Hormuz. Now, the White House has said that they have been proactive when it comes to protecting U.S. troops and interests. As you well know, they moved personnel out of Iraq last week as one example. So we're watching really closely here how rhetoric could heighten on that end. And then also as we wait to see what the full damage assessments look like and whether or not that could spur the U.S. to strike again in a bid to try to inflict even more destruction or damage. Of course, Danny, as you well know, this White House has been touting that the damage was monumental, but U.S. officials have also confirmed that it is going to take time to see the full extent of everything that happened at these nuclear sites.
Well, Dan, to that point, part of the thinking behind the timing of these attacks, both on the Israeli side and the involvement of the U.S., was that it was a weakened Iran, an isolated one. What do we know about possible retaliation from the Iranians and just how limited some of their capacity to do so might be?
Well, to hear the Israelis tell it, their capacity is being whittled down hour by hour, day by day. That would potentially appear to be supported by the changing disposition of their retaliatory attacks on Israel, which continue. However, they're using fewer missiles. In fact, today there were 3 volleys in quick succession, but only a sum total of some 15 missiles in those volleys, effectively isolating Israelis, forcing them down to shelters for 30 to 40 minutes. That was unprecedented duration. Apparently, that was part of the Iranian plan. They're basically making more of less. Now, when it comes to retaliation against the United States, I'm not sure the Iranians are going to be in any rush to poke that bear, be it an attack, say, on a U.S. base in the region. Even closing the Strait of Hormuz might invite escalation with the United States, with an administration that might actually prefer to see a line drawn under its participation. It brought in its unique aircraft, its unique bombs to carry out an attack that the Israelis could not carry out in terms of their capabilities. And I think, especially to judge by the hyperbole, if you like, or the absolutist rhetoric on the part of the president, on the defense secretary, about having done the job, having destroyed, obliterated, conducted monumental damage, it would appear that the Americans want out, having gone in, and the Iranians may be aware of that and may actually factor that in when they decide if and when to retaliate against U.S. interests.
Tyler, Americans might want out, but there seems to be some mixed language on what Washington's goal here is, whether it be a disarmament of nuclear capabilities or regime change after hearing from the president. What are those mixed messages we've been hearing?
Yeah, so Danny, yesterday we saw a flurry of posts from President Trump on Truth Social, but one that really got a lot of attention was that he said it's not politically correct, in his words, to call for regime change, but that if Iran is not able to make Iran great again, of course, a play on his campaign slogan, Make America Great Again, then why wouldn't they call for regime change? We should say that U.S. officials and Israeli officials have said that that is not the goal here, and that the goal ultimately is to dismantle Iran's nuclear program and their ambitions going forward. In fact, President Trump's comments were directly contradictory to his vice president, who earlier in the day said that they were not at war with Iran's regime, but instead with its nuclear program. We should say it's really not clear what sort of circumstances President Trump would need to see in order to get behind regime change. And our analysts at Bloomberg say that even if there was a targeting of political figures in Iran instead of what we have seen to be the military figures, there is a line of succession here, and it's not totally clear if there would be regime change. Of course, this is a very highly volatile situation and a lot of moving factors, but it was interesting to see sort of the dynamic play out since we had not seen President Trump signal that as of yet.
Tyler, Dan, thank you so much for your excellent coverage this morning. Bloomberg's Tyler Kendall in Washington and Dan Williams in Jerusalem. Now, let's get the view from Wall Street. Kathy Jones of Charles Schwab writing, uncertainty means less easing and a steeper yield curve. Layer in wars in Europe and the Middle East and the potential for higher energy prices along with the outlook joins us now. And Kathy, this is, of course, something you wrote over the weekend because there are a lot of uncertainty even before you add on what happened in the Middle East over the weekend. It's been a very muted market response. What do you make of that muted market response?
Well, hi, Danny. Good morning. I'm a little surprised there isn't a bit more long-lasting response, but as your coverage indicated, people may simply be waiting to see what the next step is and react to that. And indeed, in my lifetime, there really hasn't been peace in the Middle East. So I guess markets to some extent are inured if it doesn't disrupt the flow of oil, if it doesn't close the Straits of Hormuz or create some sort of economic effect in the near term, then markets are going to take it in stride. But I do think that we're still all sort of nervously watching the situation, trying to assess what the longer term impact will be.
If we attempt scenario analysis, Kathy, and we decide or we game out a situation where the Strait of Hormuz is closed or oil is seriously disrupted, what is your assumption on where we go from here?
Well, I think we get that steeper yield curve. And in fact, everywhere I look, I just see risk premia rising, right? We just have so many things going on right now that are disruptive to the economy, that are negative for the budget outlook, that could boost inflation from where we are and limit the Fed's ability to lower rates. So I think that we see higher risk premiums, particularly at the longer end of the curve, maybe somewhat in corporate spreads. We haven't really seen much response in corporate spreads, but you could see some expansion of spreads there. It's just, it's very hard, I think, for markets to dive in at this stage of the game, for investors to say, okay, you know, path is clear, I'm going to take on duration risk. I'm going to take on a lot more credit risk. I think there's just a wait and see attitude. And if things deteriorate from here or get more complex, then you'd want to see, you'd want to have a higher risk premium to compensate you for those risks.
Kathy, what happens if we don't get that clarity? I'm even thinking about the next couple weeks, how much risks there are around the one big beautiful bill in Washington, D.C. That self-imposed deadline comes in July. You also have the self-imposed deadline of tariff discussions. That comes up at the start of next month, too. If we don't get clarity on these issues, do we just continue to see investors on the sideline? Does it become something of a frozen market for the rest of 2025?
Well, I'd say it's sort of a range trade in the fixed income markets then. Yeah, we've had volatility early in the year in say the treasury market and in fixed income markets in general, but now it's settled into kind of this sideways range where you react and you get 10 basis points in either direction, but always coming back to, say, on the 10-year, 440, 445, just kind of bobbling around here, waiting for some clear direction. And I think that we could see somewhat of a frozen market in that sense, where, you know, if you're an investor, you just want to stay in some safe zone without taking on too much risk until you have something to hang your hat on. And unfortunately, most of the risks that we're looking at are negative for the market. So as you mentioned, the budget bill could certainly boost deficits and increase supply. Perhaps disruption in the Middle East could boost inflation via the oil market. But at the same time, the credit markets have to worry about what impact that has on trade, corporate profits, et cetera. So I'm not surprised the market's just sitting here on edge waiting for something to hang its hat on.
Well, Kathy, we really appreciate your time this morning as we sit and we wait. Kathy Jones of Charles Schwab. Let's get you some other top stories now that are trending on the terminal this morning. Ukrainian President Volodymyr Zelensky says that he will be visiting the UK today. Zelensky made the announcement following an overnight Russian attack on Kyiv that killed at least 6 people. In a post on X, Zelensky said he will be negotiating new and powerful steps to increase pressure on Russia. Bank of New York Mellon approached Northern Trust last week expressing interest in a possible takeover. The Wall Street Journal reporting that the chief executives had at least one conversation, though the banks did not discuss a specific offer. Representatives of BNY and Northern Trust both declined to comment. And Tesla's long-awaited driverless taxi service launched on Sunday, but only to a few riders. The first robotaxi trips were limited to a narrow portion of Tesla's hometown, Austin, with an employee seated in each vehicle monitoring the journey. Initial riders featured investors and social media influencers who live streamed their trips. Oil traders watch for disruption in the Strait of Hormuz. We'll look at risks to crude flows coming up next. We'll have that on your Bloomberg Brief.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing.
First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5. Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Well,
to encourage the Chinese government in Beijing to call them about that, because they heavily depend on the Straits of Hormuz for their oil. If they do that, it'll be another terrible mistake. It's economic suicide for them if they do it, and we retain options to deal with that. But other countries should be looking at that as well. It would hurt other countries' economies a lot worse than ours.
U.S. Secretary of State Marco Rubio on the critical role of the Strait of Hormuz. Oil spike, meanwhile, faded as traders await Iran's response to the U.S. attack over the weekend. Joining us now is Bloomberg oil strategist Julian Lee. Julian, how should we be thinking about the risks to the oil market at this point?
Well, I think there's lots of things that Iran could do to disrupt the oil market, should it wish to. I think that's something we have to get out there, that Iran may decide that the oil and gas markets are not something that it wants to tamper with at this time. In terms of the flow of oil, it could do what the Houthis have done in the southern Red Sea and start targeting ships passing through the Strait of Hormuz with missiles or drones. That would absolutely raise the degree of concern among ship owners and crews. It may well stop some ships from going into the Persian Gulf. We saw overnight two tankers U-turn as they were in the Strait of Hormuz and head back out again. One of those has turned back again and has now gone through into the Persian Gulf. But that shows, I think, some of the worries that there are. I don't think Iran would ever be able or want to close the Strait of Hormuz if that were possible to all shipping, but it could certainly raise the threat level and raise the level of worry among tanker owners and operators.
But if there is a level of worry, if you do get more tankers that do U-turn after U-turn, Julian, if you see insurance costs rise, surely that would have some impact on flows, or not even, because again, oil markets over the past 2 days, trading days, are actually down.
Yeah, I mean, yes, it would have an impact on flows. And I think the oil is down because people are not building into their sort of baseline forecasts a closure or a significant disruption to oil out of the Persian Gulf. I mean, if Iran did start to do that, there would certainly be a reaction from the US and likely from other people too to get the flow going again. I mean, you look at the bombing raids and the missile attacks that were launched against the Houthis, you would see something very similar and probably on a larger scale if Iran tried to do that in Hormuz. There are, of course, large stockpiles of oil around the world that would help to mitigate the impact of any short-term disruption to oil coming out of Hormuz. But if that threat level is perceived by traders to rise, then you will see oil prices going up, and that will have an impact on inflation and on economic growth around the world, depending on how long it lasts.
Julian, thank you so much for your time this morning. That is Bloomberg oil strategist Julian Lee. Now, the U.S. attack on Iran is also disrupting global aviation. British Airways and Singapore Airlines canceled flights to the Persian Gulf. Emirates suspended flights to Tehran, Baghdad, and Basra until June 30th. Other airlines are rerouting flights. Joining us now is Bloomberg's head of global aviation coverage, Benedict Campbell. Benny, how severe is the disruption at this moment?
So we are seeing more airlines that are suspending flights to the region, and principally to places that now include Dubai and Doha. And these are two really major global aviation hubs. So we've heard from British Airways, we've heard from Air France. Singapore Airlines is also cancelling flights for the next couple of days. What's significant about this is that Dubai in particular has long been sort of an island of stability in really a region that has seen so much disruption over the last couple of decades. And they've sort of built this sense of stability, economic and political and otherwise, around that sense. And for that to now being called into question by airlines, but also some companies that have started pulling employees out of that market, that is a serious escalation. We'll see how things turn out in the next couple of days, but this is a new situation, no doubt, because so far we had seen airlines avoiding Israel, we had seen airlines avoiding the airspace above places like Syria, places like Iran and Iraq, so that corridor. But for this now to stretch into Dubai and then Doha, that really is a new quality in this conflict.
Well, we had also seen when Russia attacked Ukraine, the avoidance of that airspace and airlines having to take longer routes, higher fuel costs, not to mention the threat of higher oil disrupting fuel costs. Benny, is this a period then where margins seriously come under pressure?
Yes, you're absolutely right. This is going to add a couple of hours in some cases to long-distance flights. If you go from Europe to Asia, you now have to route through Saudi Arabia or take the northern route through Afghanistan, which also to some airlines is not particularly appetizing. So the options are becoming more slender by the day. The Russian airspace, the Ukrainian airspace, we had the Pakistan and India conflict that again closed that space for a while. So it's becoming harder by the day almost to navigate these routes, and that's not making it any easier for airlines. There's also this sense that if you want a growing and a thriving aviation industry, you want people to feel good about these trips. So this disruption, that's certainly not helping.
Benny, thank you so much for your time this morning. Bloomberg's Benedict Camel. Coming up, data and Fed speak on deck. We'll have your trading diary for you next. This is Bloomberg.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
Let's get you set up for your trading day on this Monday. U.S. PMI data, that will come at 45 a.m. rather, New York time. Then followed by existing home sales at 10 a.m. We'll also have some Fed speak throughout the day. Goolsbee, William, and Kugler, all of that ahead of Fed Chair Jay Powell's two-day semi-annual testimony on Capitol Hill. That begins tomorrow. Some individual movers for you. Occidental energy stocks are rising, even though that oil jump has faded after the weekend. Tesla, those shares up 1.3%. We had that robo-taxi reveal in Austin over the weekend. Finally, Northern Trust up 4.6%. Wall Street Journal reporting that BNY Mellon had approached the firm with a possible takeover interest. As we head to the end of the hour, let's just take another look at what oil is doing this morning, because with a range of outcomes of what happens in the Middle East virtually unknown at this point, we are not pricing them in. In fact, at one point this morning, oil turns negative. We are bouncing back, but we are only up 0.5%. Indeed, over the past 2 days, 2 trading days from where we closed on Thursday, we are actually lower, currently trading at just over $77 a barrel. That is it for your Bloomberg Brief. Surveillance will take things from here on Bloomberg.
Another art museum called the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There, you understand the history of this great land. Not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Ottawa, Canada, and this is Bloomberg.
The situation with Iran is going to be with us for a little while.
President Trump, Israel are all stepping into a massive realm of uncertainty.
Higher oil prices as being more of a tax on the consumer and a headwind to growth.
What we are really focused on is the path that this conflict takes.
Diplomacy is the key here.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, the United States strikes Iran.
The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime. Iran's key nuclear enrichment facilities have been completely and totally obliterated.
President Trump unleashing American military power to strike several nuclear targets. The White House claiming Iran's heavily fortified sites were totally obliterated. Investors this morning are fading escalation risk as the rally in crude loses steam and equity markets turn positive.
Two takeaways, and welcome back, John. It's great to have you back. Two takeaways from the price action overnight. First of all, the traders in European and Asian hours seem to care a lot more about geopolitical risk than U.S. traders, or those in the U.S. hours, where they seem a little bit more cynical. And the second thing is that this is a market that has faced time and time again once-in-a-lifetime shocks pretty much every single day. They are tired, and they are fading anything because if they sell, they get burned.
Peter Chia of Academy Securities joining the program a little bit later. Anne-Marie with this line: the attacks help establish deterrence and peace through strength. He's not the only one that has that view so far this morning.
This is this whole idea of escalate to de-escalate. And the question everyone is waking up to this morning is what is going to be Iran's response or retaliation? If you go back to 2020, when this president decided to strike Qasem Soleimani, what you saw is Iran retaliate, but through back channels tell the United States, we will retaliate, but then we want to be done. Everyone is waking up with the same question. What is the retaliation going to be? Is it going to be cyber attacks, Strait of Hormuz? Is it going to be on U.S. air personnel and bases in the region? That is a big question, but the market right now is shrugging it off.
Saturday night, when you saw these headlines cross, these probably aren't the moves you were expecting on Monday morning. Crude up by just 0.9% on WTI. Brent crude just short of 78.
Especially because heading into this, so many people said if the U.S. were to strike Iran directly, that would be a complete game changer for both markets, for the global economy, for the entire region. Now people are saying maybe they're looking to de-escalate by saying that the damage wasn't so significant. Maybe we can handle this, and if anything, it gives the region more security. It highlights the bias to actually outperform, and maybe that is telling us more signal than noise.
And a lot of analysts would tell you if there was a direct strike from the United States on Iran, that potentially Iran would take the move to close the Strait of Hormuz. We've seen Iranian reports that the parliament wants to do that, but the Ayatollah has to explicitly sign off on that. And what you heard from Secretary Rubio, what you heard from J.D. Vance, the vice president, and independent analysts as well, is that if Iran were to do that, it would be a suicidal mission for their own economy.
Equity futures so far this morning just about positive, up by 0.2% on the S&P. Coming up this hour, we'll catch up with Norman Rule of CSIS following U.S. strikes on Iran, Laurie Calvasina of RBC as traders await Iran's next move, and Dan Stroyven of Goldman Sachs as the rally in crude fades. We begin this hour with our top story. The world bracing for Iran's response after the U.S. attacked several nuclear sites. Our team coverage starts right now with Bloomberg's Jumana Basechi in Dubai and Tyler Kendall in Washington, D.C. Tyler, first of all to you. Let's think about this. What does the early battle damage assessment indicate so far?
Yeah, hey, John, good morning. Well, if you asked President Trump, we saw in a flurry of posts on Truth Social so far that he said that the damage inflicted by these strikes has been monumental in his words, but we should say that U.S. officials have confirmed that it is going to take some time to see a further damage assessment. And we heard from the International Atomic Energy Agency yesterday as they briefed the UN Security Council saying that their inspectors at the moment aren't able to access these sites to do their damage survey. It is something, though, that we're going to be watching closely, and whether or not the U.S. feels that it does need to potentially go back in when it does come to these strikes. At the moment, the U.S. says that the next steps here is that they are calling for Iran to resume talks over its nuclear program. President Trump threatening further action if they don't come to the table. But we should say Iranian officials have reiterated that can't happen unless the strikes against them stop first. It's something that we're going to be closely watching as it comes to any sort of potential retaliation against Iran. From Iran, I should say. Anne-Marie mentioned it at the top of the program, that potentially we could see a more tempered response here. And John, our analysts at Bloomberg say that that could come from a few different factors, including that Iran has a weak economy. There does appear to be this growing domestic discontent, but also at the moment, we haven't really seen Iran's strategic allies offer anything further than rhetorical support.
Jumana, let's build on some of that reaction in the region so far and the prospect of retaliation.
Well, the region woke up to a very different situation yesterday. I should tell you, for Gulf states, there is a lot of tension. You even hear of airlines like British Airways, Singapore Airlines halting flights into Dubai and Doha. This is unprecedented. It hasn't happened in many, many years. And that really is suggestive of just how people are feeling about the potential for Iranian retaliation here. What is certain is that Iran will retaliate somehow. The question is how. Will they go for a targeted response similar to what happened happened back in 2020 when the U.S. took out Qasem Soleimani, that key military commander. It took Iran 5 days to respond. And when they did, they telegraphed what they were going to do to the U.S. So they struck at a U.S. military site in Iraq, but there were no fatalities recorded at the time, and it was almost one and done. So it was done. To rephrase what Anne-Marie was saying, they escalated to de-escalate. But they could go down more escalatory routes. They could target U.S. assets within the Gulf. But again, that would be deemed as inflammatory versus these Gulf states, because the Gulf states themselves have been trying over the last couple of years to bring down the temperature in the region and reestablish diplomatic relations with Iran. Do they want to flare up tensions with these Gulf states as well is a big question. And then, of course, there's been a lot of talk about the Strait of Hormuz and whether they would go down that route. Yesterday, a lot of headlines being circulated about the Iranian parliament agreeing to cause a blockade or shut down the Strait of Hormuz. Ultimately, that decision still rests with the Ayatollah and the National Security Council. They haven't made a decision there. And there, the trade-off is going to be, will Iran be willing to accept the possibility of their own exports being cut off from their major buyers in Asia, and that is, of course, China, for the very act of inflicting higher oil prices on U.S. consumers? Is it going to be worth that shock to the global economy? And at this point, we don't know whether they're going to pull the plug on that.
Joanna Basecci, Tyler Kendall, Jemana Tyler, thank you. More from them in the next hour. To extend the conversation, the former senior U.S. intelligence official Norman Raw joins us now for more. Norman, welcome back to the program, sir. Just a quote from the Defense Secretary, Pete Hegseth, called it an incredible and overwhelming success. How should we define success this Monday morning?
Good morning. Well, we have a changed Middle East. The United States and Israel have conducted devastating attacks against all of Iran's air defenses, leadership, nuclear programs, and Iran's response has been generally feeble. What response Iran has been able to conduct, to include missile attacks against Israel, have not impacted the strategic course of the conflict. The numbers are moving in a direction where Iran's missile program is being whittled away, and Iran's nuclear program is effectively destroyed. There will be elements that remain, there will be elements that are concerning, but its nuclear program is effectively destroyed.
Norman, no one really understands Iran quite like you. What do you think the Ayatollah is weighing up right now, the menu of options, in terms of a response?
Well, there are many people who understand Iran far better than me, but within Iran, the decision-making structure is going to be challenged. His leadership has been changed. He himself is in a difficult, hidden location. Some of his leadership is being hunted, perhaps, by the Israelis. They're under attack. Their economy is poor. Their population is restive. Let me give you an example of options and the challenges. If they close the Strait of Hormuz, they close off many of the foodstuffs, the vegetable oils, the primary goods that come into their country to feed the population. Now, that is something that you really don't want to do at a time when your population may erupt into major unrest. So they have many challenges with all of the decisions they make. But again, if they close the Strait of Hormuz, it does not impact Israel. And it will bring in the United States and could likely lead to the end of the regime.
Do you think these strikes get Iran to the table? The president continues to say he wants to see a diplomatic path forward.
Not immediately, but what it does do is it tells the world that the United States is pushing for diplomacy, and that actually encourages the world to push back on Iran's efforts to escalate the conflict or isolate the United States. So in the past, in some cases, the United States seemed as the aggressor or alone, but the United States is in essence saying you can't have a program that is moving towards a nuclear weapon, but we're interested in a diplomatic deal. Be reasonable. Iran is not being reasonable, and it has no allies.
Norman, you said that the nuclear program has effectively been destroyed. There's a lot of concern among a number of circles about the 400 kilograms of enriched uranium that have gone missing that previously were held near Isfahan, as well as equipment that was taken out of Fordow before the attacks. Do you have any sense of either where that could be or how close that could be to restarting some of the nuclear programs that Iran previously had?
So those are valid concerns. So we should be concerned about Iran's remaining nuclear material. It will have nuclear scientists, it will have nuclear knowledge, and it will have parts and equipment related to centrifuges that it did not declare to the IAEA that it could, in theory, assemble and recreate in a covert facility. But let's think about that for a minute. If you believe what you read in the newspapers, the United States and Israel have some extremely good intelligence on Iran. So they're going to have to put this together, get away with it, and then the United States and Israel are going to have to not learn about it and not destroy it. Now, that's possible, but it's unlikely. But it is something that's going to require diplomatic pressure so that it can be identified and removed, and it's probably a card Iran will play in the talks.
What do you think the foreign minister of Iran is doing over in Russia today? We know that he is meeting with Vladimir Putin, and there's a real question around what the ask is and whether there will be the response that Iranians are looking for.
Diplomatic support, pressure in the UN. Iran has obtained consistent diplomatic support at the United Nations Security Council, the International Atomic Energy Agency, and other diplomatic fora from Russia and China over the years. In fact, these two countries have blocked any major pressure on Iran for its proliferation of missiles, nuclear program, and terrorism. And this is really the moment where these two countries can produce this. It's unlikely that either of these countries are going to provide any military support. The strategic agreement that has been signed between Russia and Iran, it doesn't provide for that sort of relationship. But Iran, again, it has no allies, but it does have partners who have provided support in international fora that may help on diplomatic talks.
Norman, just before you go, just a brief assessment of this operation. 37 hours long, 125 aircraft, B-2 bombers, 4th and 5th generation fighters as well, 30,000-pound bunker buster bombs, missiles launched from a submarine as well. Norman, how smooth, how well executed were the logistics, the precision of this operation?
This operation speaks to the training, leadership, and the technology that the United States military has had for a number of years. This operation has been stated in the press, has been practiced for many years. This is not something that has occurred in any recent administration, but this recent administration did have to refine it significantly, match the target set. But what you are seeing is a technology and capability and leadership that no country can match. And I think North Korea and other countries in the world, to include China and Russia, are looking in the past weeks and saying the world is also a little different from their perspective.
It's a strong final point. Norman, appreciate your time, sir. Norman Rule there, the former senior U.S. intelligence official. For those of you just tuning in, welcome to the program. I'm sure you want to know where the market is. Equity futures at the moment positive on the S&P 500, and the rally in crude fades. Positive at the moment by about 1% on Brent and WTI, up to about 74 on WTI crude. Brent crude at the moment, 77.63. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Anand. Hey, Yahara.
Good morning, John. Here's the latest on the conflict. Iran is vowing retaliation against the U.S. following the strikes on its nuclear facilities Saturday evening. President Trump declared Iran's nuclear program had been completely and totally obliterated, but senior officials, including Vice President J.D. Vance and the head of the International Atomic Energy Agency, say they don't know the fate of Iran's uranium stockpile. Meanwhile, British Airways and Singapore Airlines have canceled flights to the Persian Gulf after the strikes. BA canceled several flights to Dubai, including diverting 2 planes. It also halted some flights to Qatar and Bahrain. Singapore Airlines canceled 2 flights on Sunday between Singapore and Dubai, warning other flights may also be affected. And major U.S. cities, including New York, Washington, and Los Angeles, are tightening security after Iran warned it was reserving all options to respond to the U.S. strikes. Police have increased patrols at places of worship, diplomatic facilities, and public spaces. Officials say no credible threats currently exist, but are urging people to be vigilant. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara later on in the hour. Up next on the program, total obliteration.
The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime. Iran's key nuclear enrichment facilities have been completely and totally obliterated.
Up next on the program, Lori Calvasina of RBC, and later at 7:30 Eastern Time, the former U.S. Secretary of Defense, Mark Esper. Live from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Three-day slide on the S&P 500 through Friday. Coming into Monday, we bounce back. Here's the bounce, up by 0.2%. We fade escalation risk in the Middle East. On the Nasdaq 100, up by 0.2%. I'm sure one of the first things you looked for when you woke up this morning was the move in crude. Well, this is what it looks like. It fades and fades quickly. It's still fading. Higher now by just 0.5% on Brent. On WTI, up by 0.6, 74.27. Under surveillance this morning, total obliteration.
The U.S. military carried out massive precision strikes on the 3 key nuclear facilities in the Iranian regime. Our objective was the destruction of Iran's nuclear enrichment capacity and a stop to the nuclear threat posed by the world's #1 state sponsor of terror. Iran's key nuclear enrichment facilities have been completely and totally obliterated.
So here's the latest this morning. The White House claiming complete destruction of 3 Iranian nuclear facilities. Iran vowing retaliation and continuing attacks on Israel. Lori Calvasino of RBC writes the following. It has been and remains our belief that the longer and broader the conflict becomes, the more challenging it could be for U.S. equities. Lori joins us now for more. Lori, good morning.
Good morning.
Obviously a seismic event for international relations. What kind of event is this for financial markets?
So look, I think unfortunately for U.S. equity investors, we're a little bit in wait-and-see mode, and I think we're playing second fiddle to the crude market right now. I think there's been a lot of focus on what's the potential disruption to energy supplies, and I'm not saying that's the wrong focus, but I think there's also a second transmission mechanism that we need to think about that's going to take a little more time to play out, and that's the impact on sentiment. This market has really been boosted by very, very modest recoveries in consumer sentiment, small business sentiment, investor sentiment has surged. Corporate sentiment is actually still in the toilet if you look at last week's Business Roundtable survey, but just that little bit of improvement that we've seen on the consumer and small business side has just boosted investor sentiment on the AAI survey enormously. So I think we need to watch that. We're not going to get any reads on that this week, but I think it's a little bit early to declare the all clear.
Well, let's start with the relationship between the oil market, which everyone is watching, and this equity market. Beyond the obvious, what is that relationship at the moment?
So look, I think it's a question of what's the feedback loop, not only on sentiment, but also on inflation down the road, and that's where everybody's been myopically focused. I do think energy, if you do studies where you look at it as a percent of S&P earnings and that sort of thing, or even as cost structures, that's come down over time, so there's maybe less immediate risk there. But I do think that we really go back to this sentiment idea, and we're already sort of in a challenging or tricky state, as I like to call it, where things feel a little bit fragile, a little bit on the edge, and a lot is dependent on the idea that corporates are just going to kind of manage through, not lay people off, that we're not going to see big impacts on demand. I'm not so sure that we can make that assessment here. We've seen geopolitical references creeping up in earnings transcripts already. We've seen cost-cutting commentary creeping up in transcripts already. And if you looked at the companies that actually reported last week, they had a pretty sour tone. So, I think we're going to have to let some of this play out.
Yesterday, or I should say last week, Alex Altman of Barclays was on the show, and he was talking about how the fact that this market fades any potential geopolitical risk highlights its strength and the bullish undertone to really light positioning and the lack of really ebullient feelings toward the U.S. market. Why isn't it a bullish sign that people can shrug this off, even in the face of something that last week they were saying would be hugely disruptive?
So look, I'll tell you the two analogies that have jumped into my head in the past, kind of week or so. One is I'm going back to late 2021, when I was spending a lot of time with my commodity strategist, Halima Croft, and she was shouting from the rooftops about Russia invading Ukraine, and nobody wanted to hear it. And we really saw something that I think has become a pattern, which is until geopolitical risk just smacks you in the face, and I think this time it would be the oil price disruption, investors just don't want to price it in. But just this sort of disconnect I'm seeing between equity investors not wanting to sort of focus on this risk, and some loud voices, not just Halima's, but in the geopolitical strategy community saying, y'all need to take this seriously. We've seen that story before, and it didn't necessarily go the equity market's way. The other analogy that's jumped into my head this morning is just thinking back to the early conversations at the beginning of the year on tariffs, where it was, well, this is not going to happen because it's too irrational, it's going to hurt the U.S. economy. We're seeing a lot of that commentary now coming out about supply disruption in the Strait of Hormuz. And so, I would just say, let's just all take a breath, right? Because just because the market is being resilient doesn't mean that the risk isn't going to come back and bite it later.
There was one comment that was being made over the weekend, which is that any military conflict tends to be stimulative to an economy. Each of those B-2 bombers cost $2 billion. The bunker busters each cost hundreds of millions of dollars to manufacture. Why isn't any kind of military conflict potentially on the margin stimulative if you think about the spending that would have to go into it?
Well, look, I would say we've already been seeing industrial stocks in particular and defense stocks as well. They've already been bid up. And if we look at industrial valuations as a whole for the broader sector, you're trading close to 3 standard deviations above the long-term average on both an absolute and relative PE. So, I don't deny the fundamentals, but the valuations have already been pretty optimistic on earnings that haven't even come close to materializing yet. I think the other thing that we've learned over time is that wars also tend to be inflationary. And so I think that's something else we need to keep in the back of our mind as we're considering what the ripple effects are.
You mentioned Halima. She had a great note last night. I'm looking at it now, and she talks about how it may take weeks even for Iran to respond, and this knee-jerk reaction of the worst is behind us is really short-sighted. Do you think that's also the case for the equity market?
I think the equity market is to some extent trading on that. And, one question we got from investors last week was, and we were doing a big call with investors, and a question came through, are markets just sort of pricing in sort of the better conditions on the other side of all this? And I think there's been this view as well, if you think about just sort of everything we've gone through from a policy perspective and the reverberations on the domestic economy, like, hey, yeah, there may be potholes, but they're not going to be that bad, so let's just look ahead to 2026. The risk here, whether you're looking at geopolitics or whether you're looking at some of those other domestic economic issues, is that the potholes could be bigger and a bit more difficult to push through than markets have anticipated. And I think one of the brilliant things Halima is saying right now is that the market seems to be focused on, are they going to close the Strait of Hormuz, yes or no? And she thinks it's more complicated than that. And I'm not the one to sort of talk on those issues, but I think she's seen some nuance that the market may be missing.
Are you advocating for a defensive posture here?
So what we've been saying all year is have some balance between defensives and cyclicality. So we've kept our utilities overweight on all year. And if you actually go back and look at 2022 and the oil price spike that we had around the Russia-Ukraine invasion, it was the second best performer behind energy.
Why was that?
What's that?
Why was that?
I think it was just a knee-jerk reaction, and I think also at the time we had some reasonable valuations in utilities. At this point in time, we sort of look at them as a clean defensive. They don't have some of the policy overhangs that things like healthcare and consumer staples have. They're not cheap, they're not that expensive, and it's really just an easy place to park some money and collect some yield.
Not getting a crude spike this morning, at least not for now. Lori Calvasino of RBC. Lori, thank you. Overnight, a rally of almost 4-5% on crude. We fade that. At least a positive now by 0.4% on both WTI and Brent.
Why is it that traders in European and Asian hours seem
Is that
to
what
react?
you're putting it down to?
Well, it seems like they react much more to geopolitical risks, to tariffs. You saw this with any kind of proclamation. And then the U.S. traders come in and they're just super cynical and saying, whatever, we're going to buy that dip and take advantage of it. And they've won. And that's something that we've seen repeatedly.
We're blaming European and Asian traders for the action overnight.
I'm just saying. I'm not blaming them. I'm just saying, okay.
They're getting it wrong? Are we saying they're getting it wrong?
It has been a pattern. Okay. It's been at least 3 times. 3 times makes a pattern. I'm just pointing out what I'm observing.
I'm following the same pattern. WTI crude this morning up by 0.4%. Up next, we'll talk about the oil market with Dan Stroyven of Goldman Sachs as the rally in crude fades. From New York City, this is Bloomberg.
Bloomberg launches our inaugural 25 African Startups to Watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
It's going to be a hot one on the East Coast this week, breaking into triple digits here in New York City in the next 24 hours. Summer has officially arrived. Equity futures on the S&P so far this morning positive by 0.1%, bouncing back from a three-day slide. We're higher by 0.13% on the NASDAQ 100. For some single moves this morning, your morning movers, let's cross over to Danny Berger. Hey, Danny.
Hey, John. Overall markets might be muted, but you are seeing some single stock reactions that have been fading, to be fair, to the actions over the weekend. The airlines in the pre-market session opened up sharply lower. Some of that is starting to come back. You're still looking at United, for example, down 0.5%. Delta, a big comeback for them. They were down about 0.7, now down about 0.1. We've seen some of these major airlines, like British Airways, for example, close flights to Doha. So there is just serious disruption when it comes to airline routes. Even though the oil move, that also has been fading, you are still seeing a bid into the energy stocks this morning. Occidental, for example, as high as 2%. Exxon, 1.5%. ConocoPhillips up 1.3% this morning. Finally, there was a journal story over the weekend that Bank of New York Mellon was having talks, at least last week, with Northern Trust about possibly buying its smaller rival. Those talks happened between the CEOs. No decision that there yet at the moment. BNY still evaluating next steps. Even so, Northern Trust up nearly 5.5% in the pre-market, John.
Danny, thanks for that. More from Danny in about an hour from now. On our radar this morning, our top story, President Trump unleashing American military power to strike key Iranian nuclear sites. So far, satellite images show craters and possible collapsed entrances. International monitors are still assessing the damage. Market participants are focused on retaliation. Iran vowing to retaliate after the U.S. struck its nuclear sites. A spokesperson saying the U.S. should, quote, expect severe consequences and it reserves all retaliatory options.
Yeah, this really is the key question. Are we seeing really a walking back potentially of some of the tensions with Iran, saying that there was limited damage? This question of, are they giving themselves an off-ramp to do what they did after what we saw with Soleimani when he was killed in 2020? The real key here is how much damage has been done and how much does Ayatollah Khomeini still rule? I mean, where is he? Honestly, at this point, where is Ayatollah Khomeini, who substantially has to sign off on absolutely anything?
He's hiding in a bunker, which is why the chain of command has been completely challenged and disrupted, as Norman Rule was telling us, who is a former CIA official. The fact of the matter is, if he's going to take a measure like closing the Strait of Hormuz, he has to explicitly give that command. And right now, the chain of command is very challenging. But Iran, it will weigh all of its options. Is it going to be striking U.S. personnel at military air bases? Could it be a cyber attack? Or will it be a Strait of Hormuz, which most people say this is just shooting themselves in the foot?
One industry very much in focus at the moment, and that is the shipping industry, very much on high alert. 2 supertankers U-turning in the Strait of Hormuz before at least one return to the waterway. This coming as fears rise that Tehran could retaliate against commercial vessels. Joining us now to discuss is Bloomberg's Alex Longley. Alex, just build on some of the data you're looking at, the flow of traffic in and out of a very important strait.
Yeah, I think for the most part, things are looking fairly normal at the moment. I think one of the big issues for the shipping market is trying to parse exactly what the situation is on the ground. We had warnings from navies in the area yesterday kind of saying the threat to shipping is elevated, particularly for US-affiliated commercial ships. But the reality on the ground is that there hasn't been a huge amount of change. We saw these two ships U-turn as they got into the Strait of Hormuz yesterday. They've actually now both U-turned to go back to Hormuz, and I think that probably tells you something about the sort of volatility of the situation we're seeing. Tanker earnings have been pushing dramatically higher over recent weeks. We expect them to rise again today. But for the most part, it's business as usual, and that is why you're seeing crude oil prices retrace lower after that gain we saw at the open earlier.
Alex, just how easy is it to insure some of these tankers at the moment?
I think it's a mix, actually, when you talk to a lot of the war insurers here in London, compared to some of the issues we've seen in the last couple of years. Think about ships being sunk in the Red Sea, for example. They're fairly calm on the risk in the Persian Gulf at the moment. I think the issue is the volatility. We had Marcus Baker, head of the world's biggest marine insurance broker, on TV this morning saying one of the things he's not seen before that's happening now is shorter quotes. And I think it's that volatility in the insurance market that underwriters are looking at. Rates haven't soared, but insuring against risk could change at any moment. The cost of those rates could change at any moment, and that's why we're seeing shorter quotes. But for the time being, again, underwriters fairly calm on managing those risks, given what we've seen so far in the Persian Gulf and comparing that to what we saw last year and the year before in the Red Sea.
Alex, there's a lot of focus this morning on the Strait of Hormuz, understandably so, considering that more than a fifth of our oil supplies travels through that corridor. But more broadly in the region, how much are threats from potential Houthi attacks going to also stymie trade at a time where we are seeing rerouting already, even before the U.S. struck Iranian sites?
Yeah, I think there's a couple of things there. I mean, firstly, this is exactly what oil traders are trying to pass at the moment, right? It's, are we going to see a response that affects oil production? Are we going to see a response that affects shipping, say, through Hormuz or the wider region? Or are we going to see something more contained and keeping away from energy infrastructure? And I think price action this morning probably tells you that traders are leaning towards the idea, for the time being at least, that any response that impacts oil or shipping is going to be relatively limited. Now, whether that's a misplaced bet remains to be seen. The other question on the Houthis and how they can impact things, I think one of the things that goes under the radar slightly at the moment is diesel prices in Europe. They've absolutely soared in the last couple of weeks. We were talking this morning close to kind of $108, $109 a barrel equivalent of diesel. And part of the reason for that is lots of it flows through the Red Sea. And if these attacks resume, you're likely to see more having to go the long way around the southern tip of Africa. So there's an inflationary risk for Europe there at just the wrong moment.
Alex, appreciate the update from you, sir. Out of London, we'll catch up with Alex again later on this week. I hope at least. Alex Lumley there of Bloomberg out of the city of London. Crude at the moment positive by 0.7% on both WTI and on Brent crude. Dan Stroiven of Goldman Sachs writes in the following: a hypothetical sustained a very large disruption of energy supply transit would likely push oil and European natural gas prices above $110 per barrel. Joining us now is Dan Stroiven at Goldman Sachs. Dan, that's the hypothetical. Let's talk about the base case. What is the base case for you and the team so far this morning?
Yeah, so base case remains that we don't see significant disruptions, neither of oil or natural gas in the Middle East. And in our base case, without disruptions, we actually have energy prices gradually declining, with Brent reaching around $60 per barrel in the fourth quarter of this year, and with TTF European natural gas prices also declining, especially next year, with the arrival of all these extra LNG supply cargo terminals.
Dan, how high could oil go if Iran does not close the Strait of Hormuz, but does other potential attacks on energy infrastructure or tankers that potentially disrupt the flow of energy coming out of the region?
Yeah, so oil prices could rise significantly in those scenarios, and the key reason is that the Middle East, the Gulf countries, are remain the largest regional producer in global oil markets. In general, our estimate is that for every 1 million barrels per day drop of supply that's sustained for about a year, Brent should be about $8 per barrel lower. That takes into account the fact that higher prices reduce demand somewhat and incentivize U.S. shale to produce more. I think one challenge, big picture, with potential supply disruptions in the Middle East is that the most important buffer that the oil market benefits from against supply disruptions, namely quite a bit of spare capacity among OPEC core producers, that's not necessarily available if the production the capacity to produce would be affected by potential disruptions, because we think the bulk of the spare capacity in oil markets is concentrated both in Saudi Arabia and the UAE.
Are you seeing any reductions to Iranian barrels right now?
No, in fact, our nowcast of Iran crude supply is at a 3-year high, 3.6 million barrels per day of crude. Iranian supply has actually doubled over the last 3 years or so, and we're actually seeing very high export flows at the moment. I think the idea is to get the barrels out safely while we can, and at the moment prices are relatively attractive.
Given that, Dan, do you think that if there is some sort of calming down of the tensions, you could see a huge decline in oil prices?
Yes, so we estimate a geopolitical risk premium of around $10 per barrel. If the market were to increase its probability of our base case that you don't see disruptions, this risk premium could come down. It may take some time for us to really learn whether we're going to see disruptions. Now, I think the hypothetical scenario where this risk premium comes off the more quickly would be a successful return to the negotiation tables between the U.S. and Iran. But I think otherwise it would take some time for markets to get more confidence in the base case outlook for disruptions.
On the flip side, Dan, there's this question about how much the U.S. is going to be affected versus other countries or other regions. I'm thinking of Europe, I'm thinking of Asia. How big is the dispersion in terms of which areas would get disproportionately hit in terms of their energy costs based on a myriad of potential disruptions to oil supplies?
Yes, so I would rank the vulnerability of the 3 big regions as follows. Most vulnerable, Europe, both because of the exposure to oil prices, but also natural gas prices, but also diesel prices, where Europe no longer imports diesel products from Russia, but is heavily dependent on the Middle East. Second, I would put Asia. And then third, vulnerable, but the least vulnerable is the US, because the US natural gas market is quite insulated from global markets. Because the U.S. is a large producer, and because the U.S. Exports are basically at capacity. So if we were to see large disruptions, oil prices would also rise and increase costs for the U.S., but the U.S. would be the least vulnerable among the top 3 regions here.
Dan, I'd love to pick up your point about how Iran is at a 3-year high when it comes to their barrels that they're producing and exporting. At the same time, the Trump administration says they have maximum pressure right now on Iran's oil industry, and they're going after the teapots and the banks in Hong Kong and China that facilitate all of this. How are they so high if this administration says they're at max pressure?
Yeah, so to your point, about 90% of Iran's liquids exports, Iran is exporting just over 2 million barrels per day of liquids. About 90% goes to China. And I think over the last 2 years, the system has built out an alternative supply chain with shipping companies, with ports, with refiners, with alternative financial institutions that together ensure that these barrels continue to reach global markets, and in particular quite price sensitive Chinese teapot refiners, which have wafer-thin margins, and they basically need those discounts to continue operating.
Dan Stuyven of Goldman Sachs. Dan, thank you, sir. As always, if you're just waking up to this, it's a calm, measured response in financial markets. We don't typically get to say that. Equity futures positive by a few tenths of 1%. Crude at the moment up by, let's call it 0.75%. And this quote from Pitychev Academy. We've repeated this quote now a couple of times already, but worth going over again. The attacks help establish deterrence and peace through strength. There are risks of retaliatory attacks by Iran and disruption to flows of crude, but those risks seem low. And that's the conclusion of a lot of people so far this morning.
That actually, on some level, the fact that we haven't seen some sort of knee-jerk retaliation and the real kind of extreme option of blocking the Strait of Hormuz would undermine their economic prosperity to the degree that they won't do it. The goal here is to really understand, does this reshape things on a geopolitical scale? And this is something that Norman Rule was sort of hinting at in terms of China, in terms of Russia.
And then when it comes to actually the U.S. attack, if you look what's going on in financial markets, they are taking this as a W for the White House as an escalate to de-escalate situation. But we still should note, everyone is still waiting for Iran's response.
We'll keep tracking the moves for you. Equity futures just about positive on the S&P. Let's give an update on stories elsewhere this morning with your Bloomberg Brief. Here's Yahara Arnold. Hey, Yahara.
Hi, John. China criticized the U.S. strike on Iran and said it's willing to join efforts to restore peace in the Middle East. The short statement from the foreign ministry said the U.S. move seriously violates the purposes and principles of the UN Charter and international law. China calls on all parties to the conflict, especially Israel, to cease fire as soon as possible. Meanwhile, Russia is showing no signs of winding down its war in Ukraine. The Ukrainian military's commander-in-chief says Russia still has almost 700,000 troops deployed and another 121,000 in strategic reserve. President Zelensky alleged Kyiv has evidence Moscow is preparing new military operations on European territory. And Tesla rolled out its long-awaited driverless taxis to a handful of riders. The first robo-taxi trips yesterday were limited to a narrow portion of Austin in Texas, with an employee in each vehicle keeping tabs on the operations. The car maker handpicked initial riders, which featured investors and social media influencers who live-streamed their trips. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in the next hour. Up next on the program, a muted response.
Muted is the word with a capital M. Bonds flat, stocks flat to up, and the dollar a little bit weaker. There's always an element of geopolitical risk in the world. You just have to adapt to it.
Up next, Mark McCormick of TD Securities, live from New York City. You're watching Bloomberg TV.
In case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting this. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Bloomberg's Javier Blas so far this morning writing this, not even a hint of disruption through the Strait of Hormuz. And right now you see that in the oil market. This move speaks to it. We're up by just 0.9% on Brent crude. WTI up by 0.91, 74.51 and 77.68 respectively. And with that move, this is what you see in the equity market, not much at all. On the S&P 500, we're positive by 0.07%. Under surveillance this morning, a muted response.
I think muted is the word with a capital M. Bonds flat, stocks flat to up, and the dollar a little bit weaker. There's always an element of geopolitical risk in the world. You really can't go into the bunker and hide from it. You just have to adapt to it. I don't think you can get too caught up in the day-to-day volatility in times like this.
So here's the latest this morning. Investors fading risk of broader escalation in the Middle East. Mark McCormick of TD Securities writing the following: rising geopolitical pressure and higher oil could exacerbate inflation expectations and feed back into macro volatility. The result would look like a flight to safety for the US dollar, but in reality, it's a positioning squeeze. Mark joins us now for more. Mark, welcome to the program. Do you see anything in the events over the weekend that might upend the economic picture?
Well, yeah, I think what's important is the key term, I think, is actually complacent, right? So there's a ton of geopolitical uncertainty. There's also trade uncertainty. There's data uncertainty. So there's a lot of uncertainty, but there's absolutely no volatility. And I feel like we're kind of going through this same preparation that we were the week before Liberation Day, which was essentially the markets kind of got lulled into complacency. There was so much risk going on, they didn't know what to do with it. And as a result, they got sideswiped. So I think this is one of those moments where, if you go back to last week, what happened is we had a ton of central banks in Europe that were dovish. We have these flaring geopolitical tensions. We've seen about a 35% rise in oil prices from the bottom. And I think the other thing is markets are a little bit they feel confident that inflation's moving in the right direction because it's been surprising on the downside. And these are all the things that build up complacency. And then once data comes in and we start to get more surprises, then this is what unlocks positioning. So I think this is the key word right now is complacency, because all the things that are happening are inflationary, not to mention the fact we have a NATO summit this week. We're going to see more fiscal spending. So we could basically get a revolt of data, term premium, and inflation all coming back at the same time where the markets aren't priced for this.
Are you suggesting the confidence around the inflation and the path of inflation, that particular story, Mark, are you suggesting that confidence is misplaced?
Absolutely. I feel, again, the market's been pulled into a direction where it feels like, even again, if you go back to the European central banks, the Norges Bank basically surprised with a dovish cut. Essentially, Sweden sounded very dovish. SNB is basically back to zero. Bank of England, again, dovish tilt. The Fed, it was a little bit more hawkish. You could debate whether or not they've tried to sound dovish and they're just tactically hawkish. But essentially, everything that's happening right now, and again, the NATO summit, what you're going to get is more fiscal spending. So again, we had a term premium shock. We've kind of moved away from that. But what I feel like what everyone's kind of dropping the ball on is this is continuing to be inflationary. The Fed basically raised their expectations for core PCE over 3% for this year. So again, another key part of this is just whether or not U.S. inflation has surprised on the downside for the last couple of months doesn't really tell us a lot where it's going for the next couple of months, because we still haven't seen the tariffs and the uncertainty and the actual data come through into the inflationary side of where this can go, at least for the in a tactical basis.
Mark, if you bleed this through the FX market, at what point are we underpricing the risk of inflation more greatly in Europe than, say, the United States? In other words, for the path of travel going forward, where do you see a renewed sense of inflation hitting the hardest?
Well, it's interesting in FX world right now, I feel like inflation changes the narrative. If you look at what's been driving FX, if you look at our portfolios and the factors we run, it's been value and momentum. So essentially value and momentum are short dollar. So if you're selling the dollar because you're raising hedges and essentially you're de-risking relative to the US, that trade's been working, so it's been piling on technical momentum. Where I think the break comes is that volatility basically disrupts positioning. And so our positioning and our sentiment indicators are extremely bearish on the dollar. And so where this can come through is in terms of trade shock. If you look at the weather, you look at the heat, you look at basically there's a very cold winter in Europe as well. The natural gas inventories are very low. So essentially if we have continued elevation, and especially right now we're all going through a little bit of a heat wave, you can see the inflation coming through, and that would look like a negative growth shock, because what it looks like for the FX market is its terms of trade. So the exporters like the U.S. would do well. Canada might do relatively well. Mexico might do relatively well. But essentially where the shock comes through is Europe and Asia. So that's what the market's not positioned for. And again, this isn't going to change what could be a multi-quarter downtrend in the dollar. But what it does is it disrupts extremely long positioning in European currencies, in Asian currencies, in short positioning in dollar. So that's where I'd want to look for this for at least the next 2 to 3 months.
If you carry through what you're talking about to the economics, you end up with the U.S. that is less vulnerable to the potential tax on consumers from higher oil prices than, say, Europe or even Asia. At what point is this longer than just a trade squeeze, a positioning squeeze, and really speaks to a disruption in the broader narrative that we've heard for the bulk of this year?
Well, this is where kind of some of the short-term uncertainty and tactical stuff kind of hits like a structural story, right? Because I think the key thing that matters in quarters, especially for the FX market, which can be very volatile day to day, is essentially the unwinding of U.S. exceptionalism. Like, it is very clear in the data that the U.S. economy is slowing. The problem is the rest of the world really isn't accelerating. So everyone's kind of like sluggish, but it's clear the U.S. has seen a bigger drop in data trends relative to the rest of the world. I think where this gets very complicated is the asset allocation and the structural flows that have come into the U.S., which have driven an elevated U.S. dollar and seen U.S. equities outperform. They're slowly going to start to reverse. If you start to think about who drives these types of flows over long-term periods of time, it's pension funds, sovereign wealth funds, real money. So again, whether or not hedge funds are tactically kind of trading a theme, it's very clear in the data there is a lot more downside for the dollar given a reallocation of investor pools, particularly from, if you look at places like in Asia where there's a ton of savings, if you look at other countries across Europe where there's tons of savings, if these pension funds, again, start to reallocate capital back into their home countries, this is what would drive the dollar a lot lower. So a lot of this will come together, slowing U.S. data, Fed cutting in 2026, essentially outperformance of other countries. Again, if we go to NATO, we're going to see further commitments this week for future spending. So as U.S. economy is slowing and there's more value outside the U.S., this is what's going to drive the dollar and the currency market structurally. What we're talking about right now for the next month or two is potentially a tactical reset on positioning rather than the longer-term fundamentals.
Mark, you keep bringing up NATO and potentially this 5% defense spending goal for all these members. I'm going to be traveling with the president to the summit. When it comes to inflation, though, and NATO, isn't this just a European problem?
No, I think part of it has to do where we go back to term premium, right? If you think about what's driving bond markets, for a while it was the U.S. For the beginning of the year, it was Germany. I say recently it's been Japan. JGB's been driving the term premium shock globally. So there's one thing that's happening is investors want to look at interest rate differentials and they want to look at this stuff as a driver for currencies. The problem is that there is a structural kind of embedded steepening happening across all curves because you need to separate the front end on the central banks versus the longer end, which is about fiscal and inflation. So I think when you come back to NATO, essentially when you look at the projections of budget deficits and you look at where all this is going, governments are now spending on things that they used to do that was somewhat in a cooperative nature. So if countries are now essentially raising fiscal stimulus, they're spending more money, they're running budget deficits, everyone's doing this at the same time when inflation's already above expectations. So the fiscal taps are broken, and I think what's important about the NATO summit is happening at the same time that oil prices are going up and everyone's been lulled into some complacency around inflation. So this is what brings term premium back.
Hey, Mark, we've got to run. It's good to hear from you. As always, Mark McCormick there of TD Securities. Up next, Peter Cheer of Academy, Stephen Cook of CFR, the former Defense Secretary Mark Esper, and George Leon of Rystad Energy. From New York, this is Bloomberg.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
And Davos, you were asking a question of President Trump, and he didn't quite answer the question, and he asked you a question. So the question he asked you was something like, why are you not banking certain groups? What is the answer? I don't think he gave you a chance to really answer that question, but what is the answer to that question?
Well, first off, the Bank of America has 70 million consumer customers and millions of small businesses all over the country, all over the world. And so we bank everybody. But the real question was about overregulation, frankly. And so as you look, what's happened is because the interpretations of AML, anti-money laundering, BSA, Bank Secrecy Act, KYC, know your customer, know your customer's customer, there's a lot of burden upon the banking system to both report suspicious activity reports and do a lot of analysis. And we have to close accounts, so we can't tell people why we did it. And often we're told by authorities to close accounts. That creates confusion. Another area that comes up in this discussion is in the crypto area where the regulator said you can't bank crypto operating companies, employees of crypto companies, et cetera. We are allowed to do, we bank everybody, but the operating company, they said that's a high-risk activity. Ask us for authority, and guess what? You would have never gotten the authority. So that came up as an issue. So at the end of the day, it's about getting these regulations right.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Markets are volatile. We're going to be in a very volatile situation.
There's a lot of liquidity still in the market.
Right now, we move towards mid-cycle. On balance, the economy is probably in mid-cycle.
To the market, what's most important is give us clarity. We're in an environment where it's very easy to be bearish, and it's not that easy to be bullish.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Things are tense in the Middle East right now in financial markets. Things look pretty calm. From New York City this morning, good morning. The second hour of Bloomberg Surveillance starts right now, and your scores look like this. Equity futures on the S&P coming off a three-day slide on the S&P 500, positive by not even 0.1%, just about unchanged across the board here. Likewise in the commodity markets, spike higher yesterday evening, and then we retrace some of that move. We're positive by just 1% on Brent crude. On WTI, up by 1.1%, 74.62. Some confidence here, Lisa, some confidence that maybe the escalation over the weekend won't disrupt the flow of energy on a broader basis.
It seems like people are writing off the prospect of closure of the Strait of Hormuz, which is sort of the big wild card that could potentially stymie about a fifth of all oil transport in the world. If you take a step beyond that, there is a question about what further types of retaliation there will be, because there will be retaliation. But ultimately, this is a market that has gotten burned by every time it has taken a geopolitical risk too seriously. And that is the reason why maybe people are really trying to look past it.
Is the operation complete? We're all familiar with the details over the weekend. Already this morning getting details from Israeli strikes, which continue on one of those nuclear sites.
Absolutely. The IDF is coming out and they're saying that they are going after Fordo and obstruct the access routes to Fordo to this enrichment site in Iran. So basically any concern that material was not hit by these bunker buster bombs from these B-2s flown over Natanz, Isfahan, and Fordo over the weekend, Israel is going in now. And remember, Israel has control of the skies right now, which is also why it's really incredibly challenging to see the Iranian response, because their chain of command has been completely disrupted, and the Ayatollah Ali Khamenei is basically right now hiding.
We're focused on, I think, two things through the rest of this morning. One, the early battle damage assessment, and two, the prospect of retaliation. And right now, we don't really have a decent sense of the retaliation.
Yeah, and this really is the key question. Do they go after some of the ships that we have seen going not only through the Strait of Hormuz, but just generally in the Persian Gulf with the Houthis potentially reigniting some attacks? Do they end up going after U.S. tourists or nationals or diplomats in other regions? These are some of the questions. Or do they hold tight, de-escalate, move their equipment elsewhere, and reignite their nuclear program while withdrawing from the IAEA. These are some of the things that potentially are on the table.
One thing that's incredibly challenging right now for Tehran is not only the fact that they are having a barrage of strikes every single day and that the top brass of the IRGC has been absolutely taken out, but also there has been complete decimation when it comes to some of their proxies in the region. Right now, there's control, basically, of the Israelis on Syrian airspace. You have Lebanese Hezbollah that doesn't want to get involved, Hamas that doesn't want to get involved. Potentially, the only one could be the Houthis. But what did we see just a few months ago from this administration? Attacks on Houthi military sites.
Brent crude this morning, 77.87, 74.70 on WTI. Coming up this hour, we'll catch up with Peter Chia of Academy as Wall Street fades escalation risk. Stephen Cook of CFR on possible regime change in Iran, and the former Defense Secretary Mark Esper on the prospect of retaliation. We begin this hour with our top story. The world awaiting Iran's response after U.S. attacks on several nuclear sites. Iran saying the U.S. should expect, quote, severe consequences. Our team coverage starts right now with Bloomberg's Jumana Basechi in Dubai and Tyler Kendall out of Washington, D.C. Jumana, let's deal with that C word, confidence. Confidence that the flow of energy won't be disrupted. From your perspective, how misplaced is that confidence this morning?
I think people are hoping for the best and preparing for the worst. I wouldn't say that they're confident because at this point, nobody really has real insight into what the supreme leader is thinking. As Anne-Marie was saying, he's been in hiding essentially since this war broke out. And ultimately, the decision does lie with him and the Supreme National Security Council. Yesterday, there were loads of reports suggesting that the Iranian parliament had approved that closure, but no final decision has been taken. And I think if you look at the raft of analysis that has come out as well in the last 24 hours, Iran would only go down that route if they really had their backs against the wall, and they would be willing to not just inflict damage on the global economy and shoot up oil prices, but also on themselves, because it's such an important passageway for the export of their own oil. And most of that, 90% of their oil exports, as your guest was just saying, go towards China. So if they go down that route, it would really be a question not just of how much of an impact it's going to have on the global economy, but the survival of the regime. It looks as though, if you look at the market reaction today, though, that the market is sort of squaring in on a calibrated response out of Iran vis-a-vis U.S., something similar to what they did back in 2020 after the killing of Qasem Soleimani, when they telegraphed to the U.S. that they were going to go after a military base in Iraq, and the U.S. were able to evacuate their personnel beforehand, so there were no fatalities recorded. That was the retaliation, and it was done at that point, so it was calibrated. If they want to go one step further, then of course it does bring up the question of whether they want to resuscitate the proxies in the region, whether the proxies in the region actually have the appetite and the capability to get involved. And then also beyond the Strait of Hormuz, they could look to attack specific military sites in the Gulf countries. As we've been talking about, many of these Gulf countries have been making a lot of progress in terms of restoring diplomatic ties with Iran over the last couple of years. Do they want to bring Gulf states into the fold as well? Probably not.
Tyler, the Vice President, J.D. Vance, said we're not at war with Iran. We're at war with Iran's nuclear program. Is that a distinction with or without a difference?
Well, John, it has been interesting to see how U.S. officials have tried to make clear that the goal, the mission of this operation was to either impair, delay, or eliminate Iran's nuclear capabilities. But then we got this interesting post from President Trump yesterday on Truth Social where he mentioned the words regime change, saying that it's not politically correct to use that term, but if Iran isn't going to make Iran great again, in his words, then why wouldn't they call for regime change? Now, we should say, of course, this is a very nuanced conversation, but it's unclear the conditions or the circumstances that the U.S. really need to see to get behind this. So it is one of those factors that we are weighing here as we look into what is going to happen forward. Of course, the U.S. is preparing for any sort of retaliation moving forward here. As Jumana was saying, perhaps this could be a more targeted approach, but then that also raises the question about what a potential ceasefire would look like and whether or not the U.S. would get behind that, considering President Trump has called for what he says is unconditional surrender. But we've heard from Iranian officials that they're not going to come to the negotiating table unless the strikes against them stop. John, we have to keep in mind the backdrop here, which is that the White House has repeatedly said that it is taking proactive measures to protect U.S. troops in the region. But when we think that there are in excess of 40,000 U.S. troops stationed in the Middle East theater, that only raises the stakes of what we are discussing that much higher.
Tyler Kendall, Jemana Basecci. Tyler, Jemana, thank you. We'll catch up with you again in the next hour. Here's the view on Wall Street this morning. Peter Schiff of Academy, cautiously optimistic, writing, the attacks help establish deterrence and peace through strength. There are risks of retaliatory attacks by Iran and disruption to oil flow, but those risks seem low. Pete joins us now for more. Pete, good morning.
Morning, John.
That line there, those risks seem low. The market appears to agree with you. Why do you believe the risks seem low?
So one, air superiority is clear, right? It's clear that Israel and the U.S. can kind of do what they want in the air there. Two, Iran may still have a lot of missiles, but their number of missile launchers has definitely been deteriorating. I think estimates were maybe they had 80 to 100. It could be as few as 20. So their ability to attack, and every time they shoot a missile, we are able to, or Israel's able to, identify the launch site and try and go after that. So I think they have limited ability and scope to do much. And regardless of whether the facilities were destroyed or not, we've certainly disrupted what they can do. Not only, right, do they have to, if the equipment was still there, move it around, see if it's still operational, what things have been going on, but clearly we're going to be watching this, and one strike is not necessarily over. So I think this peace through strength and deterrence, we've talked about it for a while. I think the U.S. lost some of that, and unfortunately, it is going to take some use of military might to reestablish that, right? You can have the tools and the capacities, but if you demonstrate that you're not willing to use it, no one cares. So we've now put something on the table that I think not just affects this, I think it's going to affect what China does in the globe, and certainly even Russia. Once we turn our attention back to Ukraine, Russia now sees a very different U.S., I think, than they saw Friday night.
Do you think so? I mean, there's another side of this, which is that some of the adversaries of the United States see this distraction as a distraction. There's a lot going on. There's a lot of agenda items that have to get done in the next couple of weeks. How do we know, how confident can you be from a market positioning standpoint that this truly is kind of power through strength?
You can't know, right? Again, I think we've tried to establish deterrence. We'll see how they respond. I think we have more degree of comfort that Iran has limited capacity, and that's a big factor, right? As you've mentioned earlier, the proxies are very weak. The proxies aren't doing much. You haven't really mentioned it, but we assume that China is probably telling Iran, we really want to keep that oil flowing. So, it's not just the Iranian economy, it's the relationship with China going forward. So there's a lot of incentives for them not to do anything there. And we will see what happens with the IRGC in terms of the leadership's been decimated. When we look at the Iranian military, it tends to be very much like the Russian military, very hierarchical. So only certain people can do certain things. That's why their generals are so involved. So this has been a very big disruption to them. And I don't know what we mean exactly by regime change. Hopefully it would be something more internal, and you see another Arab Spring or some sort of internal uprising. But the IRGC is really the enforcer there. So depending on how badly they've been damaged, that could create some leeway and freedom there.
I'm glad you mentioned regime change, because Secretary Hegseth and a number of other cabinet officials came out over the weekend and talked about this mission was not about regime change. When the president floated this idea last night, do you think that is an actual goal of this White House?
I think there is a real hope that as the Iranian people, the 90 million Iranian people, many of whom have not been happy with their economic conditions, start saying, maybe we can have the luxury of doing something, getting out on the streets, not being shot. There's a real risk, right? The IRGC is very brutal. I think that's what stopped things from the past. They're willing to shoot people. But I think the hope, and as we interpret it, that it would be something more domestically oriented, where the people in Iran say enough of this, right? Their economy should be at least as big as Turkey. They could be a top 20, top 10 economy if they were organized and, more free. That has not happened under the, revolutionary regime.
Why do you believe there's reasons to be optimistic? It's the optimism in your note over the weekend that caught my eye. Not just the absence of pessimism, but the actual optimism. Why are there reasons to be optimistic this morning?
So, we can go back even to the U.S. and Iraq invasion, right? And one of the things the U.S. was trying to establish at that time was set up Iraq in such a way that when people go on Hajj, go on pilgrimages, they see a Middle East that's very different than what they see in Iran, right? They see much more openness. And to the extent you're in Saudi Arabia, any place like that, right? The Iranian people who travel abroad see a much more open society, something that's changing. Maybe that comes back. There are people there who remember. You go back and take a look at the pictures of Iran. You know, it was a very cosmopolitan area. There's a lot of things going on. So I think it's that, you know, upswelling where, okay, maybe this isn't what we need anymore. It is kind of insane that we call it revolutionary Iran. It's been revolutionary for 50 some odd years.
But does it concern you that that optimism is reflected in what we're seeing this morning? That a lot of people are willing to shrug off the worst case scenario and say, more likely it's what you're saying, which has been so difficult to achieve in the past?
You know, we always get slightly nervous when what looks like a contrarian view becomes consensus, but I think we're right here. I think there is time, and Iran would probably almost have to be some sort of last-ditch effort, something very aggressive. So I think we can push on this. Russia's, you know, I think Russia, you know, is going to try and take advantage of some of the situation to establish as much progress in Ukraine as they can, right? Assuming if you're Putin and you're worried, okay, hey, once Trump gets this solved, maybe he's going to come back and revisit this. Well, you want to establish as much ground and, you know, capacity as you can. So I think Russia will make pushes, but they're going to focus on their own issues, right? They can't worry about what's going on in Iran right now.
We often stress this when you come on the program, just to remind everyone what's unique about your particular firm is that you pair all this military experience with a market call. What's the market call this morning of the conversations you've spoken to with all the generals over the weekend off the back of this event?
That I think Israel and us really have Iran back on their heels. They are not going to be very effective. They may try some things. We can push back. And Trump does distinguish very clearly between strikes and war. We may do more strikes if necessary. I think, right, this whole one and done is probably a bit exaggerated, right? If we see a need, we can launch something. I don't even know if it has to be anywhere near sophisticated, right? We launched an incredibly sophisticated attack, right? Really powerful weaponry. There was not a single shot done at us. So I think we have that ability. And domestically, I think what we're really hoping this is turning to, and we've been pushing from, you know, day one, and we were a little bit disappointed, I have to admit, when we went down this tariff bandwagon, but we've been really focused on national production for national security. And national, for us at least, meant, you know, some of our close allies. That seems to push away. But look what just went on with the China negotiations, right? It's all about rare earths and critical minerals. And we've got to make sure people are focused. It's on the processed and refined rare earths and critical minerals. The minerals and rare earths themselves are kind of everywhere. We have them. It's China controls about 90% of that processing. How we're not aggressively kind of building that out, and I think that's the next growth stage in the U.S. Enough with tariffs, enough trying to build that back. Let's make sure we process rare earths and critical minerals here.
Pete, it's good to see you, to catch up. A lot to catch up on. Peter Cheer there of Academy Securities. Equity futures right now just about unchanged on the S&P, briefly turning negative just moments ago. In the commodity market, crude positive by 1.25% on Brent crude. With an update on stories elsewhere this morning, with your Bloomberg brief, let's cross over to Yahara Hanand. Hey, Yahara.
Hi, John. Iran vowed retaliation against the U.S. following strikes on its nuclear facilities on Saturday evening. Israel's President Isaac Herzog said his country is not dragging America into a war. In an interview on CNN's State of the Union, Herzog said, "We are leaving the decision to the President of the U.S. and his team because it has to do with America's national security interest." Meanwhile, here, President Trump's One Big Beautiful Bill is nearing a crucial vote in the Senate this week, but the $4.2 trillion tax cut package doesn't have the support it needs yet to pass the Senate. Fiscal hawks seeking to lower the bill's total price tag are at odds with Republicans worried about Medicaid cuts and phasing out green energy incentives that support jobs in their states. And a check on Northern Trust shares. They are rising 5.5% in the pre-market. The Wall Street Journal is reporting Bank of New York Mellon approached Northern Trust last week, expressing interest in a possible merger. A tie-up would be significant. Northern Trust has a market cap of more than $21 billion, while BNY's tops $65 billion. That's your Bloomberg brief. John?
Yahara, thank you. Up next on the program, defining the war.
We're not at war with Iran. We're at war with Iran's nuclear program. What we did is we destroyed the Iranian nuclear program. I think we set that program back substantially.
Up next on the program, Stephen Cook of CFR, live from New York City this morning. Good morning.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest. Every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Live from New York City, good morning and welcome to the program. Anne-Marie making some noise.
Sorry.
You done? Good. All right. Equity futures on the S&P just about negative by 0.1%. On the Nasdaq 100, we're down by 0.1%. Also, so far, pretty calm over the last few hours on this side of the world in equity markets. In the commodity market, crude positive by 1.5%. WTI just short of 75. Brent crude is 78.10, but well off session highs. We were positive by close to 5% on WTI. Just bear in mind where we've been, though. WTI crude in early May was trading in the 50s. Now it's in the mid-70s. It's a big change in the past few months. Under surveillance this morning, defining the war.
We're not at war with Iran. We're at war with Iran's nuclear program. And let me just say, Kristen, that we're incredibly grateful and proud of the American Air Force pilots who did an incredible job last night. The operation was really extraordinary. What we did is we destroyed the Iranian nuclear program. I think we set that program back substantially, and we did it without endangering the lives of the American pilots.
Here's the latest this morning. America attempting to distance itself from an all-out war, even as President Trump is floating the idea of regime change. Stephen Cook of CFR writing, if the Iranian regime remains intact and can muster a serious response, President Trump is likely in for a longer fight than he anticipates. Stephen joins us now for more. Stephen, welcome to the program. Let's just start with those words of the Vice President, J.D. Vance. We're not at war with Iran. We're at war with Iran's nuclear program. Is that a distinction without a difference?
It is. I think that the nuclear program is so closely associated with the regime and is actually the life's work of Ayatollah Ali Khamenei. It is the guarantee of regime security. So if you attack the nuclear program, you are essentially attacking the regime. I don't think that the United States is going to march an army into Iran, but I think that there is implicit in at least Israeli operations and what may be coming from the United States. A weakened regime is vulnerable to Iranians rising up and taking matters into their own hands. But when the vice president says we're not at war with the regime, or we're not at war with Iran, just Iran's nuclear program, he's being quite lawyerly about it. There really isn't a difference.
Stephen, are you seeing any evidence on the ground that there actually is a path to regime change?
No, so far there isn't. There were sporadic reports of, during the height of the Israeli bombings last week, that there were some people who were coming out into the streets and demanding an end to the regime. There's lots of anecdotal information coming out through social media and news reports from opposition networks. But the Iranian opposition is quite divided. And they haven't been able to bring themselves together in a coherent group to actually oppose the regime, besides the fact that the regime has been very, very strong. That is, I think, one of the underlying logics here of what the Israelis have done, which is to loosen the regime's grip on the Iranian people by bombing those state organizations that are responsible for maintaining control over order within the country, as well as hacking state TV and imploring Iranians to rise up against the regime. The United States has now essentially joined this fight. The nuclear program, as I said, is a critical component of the regime, a symbol of the regime's power. And so whether the vice president likes it or not, now we have the president of the United States floating the idea of regime change. There is a possibility that the United States is backing itself into this policy.
At the same time, I was with the president in Riyadh last month, and he had this to say at a speech, and the interventionalists were intervening in complex societies that they did not even understand. He was basically calling for the end of so-called nation builders. How do you weigh these two ideas from the same individual in this White House?
Yes, I noticed the stunning distance he's gone from 3 weeks ago in Riyadh to his current policy. And I thought that the speech in Riyadh was a very, very good one. I think this underlines what's happening now. It underlines the fact that the president goes with his gut. Based on the situation. And I think that while it may have been a bold decision and the U.S. military may have undertaken this operation with, precision and technological marvel, I worry that the president and the people around him aren't connecting the dots here and preparing for a longer fight that may be on their hands. We don't know, actually, what the capacity of the Iranians is to retaliate, though they did fire a barrage of ballistic missiles at Israel yesterday that injured 86 people. We do know that they have a global reach and that there are concerns about sleeper cells all over the world. So this is not, this is, I think, a larger undertaking than I think that the president relayed to the American people on Saturday night.
Does it surprise you, Stephen, that markets are so sanguine about this? Do you think that the risks are more pronounced than the people we've been talking to? We were just talking to Peter Scheer, who says right now this is peace through a powerful display, through force. Do you see it the same way?
Well, I do think that the United States has demonstrated an awesome force. What concerns me is that the Iranian regime, even through Israel's withering assaults over the course of the last 10 days, their demands with regard to the nuclear program remained exactly the same. This is a regime that doesn't look like it's going to give up so easily. So there will be retaliation. This may be drawn out longer. I think that we have to keep in mind a number of scenarios. Hopefully, we need to plan for the worst and hope for the best. I know that's a cliche, but cliches are true for a reason. So I wouldn't be so overly optimistic right now. We're just in the early going, and we're still waiting to hear from the Iranians.
We appreciate your perspective. Stephen Cook there of CFR. Just to build on some of that, for the Israelis, the operation isn't over. And for Stephen Cook, this is an ongoing story.
Yeah, and Israel is going to continue to perform different types of bombings within strategic sites. We saw that, Anne-Marie was mentioning this earlier with the Fordo site in particular. The key question here is also, does Iran really want to change? No. So how much are they going to take some of the supplies, go underground, out of the view of some of the IAEA, and really continue what they had started?
5 days ago, the Director General of the IAEA was on this program and said that they lost track and do not fully understand or know where the 400 kilograms of enriched uranium at 60%, which could be used to make 10 bombs, is. That was 5 days ago. That was before the United States decided to strike these 3 nuclear facilities.
We've got a lot to build on. Up next on the program, a must-watch conversation. The former Defense Secretary Mark Esper on Operation Midnight Hammer. Live from New York City. You're watching Bloomberg TV.
of investment agreements.
Deals were once again on display.
The Saudis are open for business. The cessation of sanctions against Syria.
Another big victory for the Crown Prince, concerned that none of guardrails may be set up just yet. Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute tech news whenever and wherever it happens. I'm Ed Ludlow in Las Vegas, and this is Bloomberg. Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
A few hours away from the opening bell, your scores are shaping up as follows on the S&P. Slightly negative, but no real drama here, at least stateside in the equity market. We're down by 1/10% on the S&P. Likewise on the NASDAQ 100. In the commodity market, Brent and WTI up by just 1 percentage point. 74.63. WTI, Brent crude 77.81. With some morning movers in the equity market, let's turn to Danny Berger. Hey, Danny.
Hey, John. Well, with that slight pop higher in oil, you are seeing energy stocks react. Again, much like the market itself, not a lot of drama. To your point, Occidental, Oxy up more than 2.3%. Some of the other movers around 2%. This has ebbed and flowed really this morning with traders trying to evaluate what the potential outcomes could be, what Iran's response could be, whether oil markets are impacted. Still a decent bid coming in. Elsewhere over the weekend, there was some Wall Street Journal deal news that last week BNY had approached, or at least the CEOs had a conversation with Northern Trust about potentially buying its smaller rival. Northern Trust apparently not interested in this. Still, BNY evaluating next steps, according to the Journal, including a formal bid for Northern Trust, so their shares up 4.4%. Finally, rounding things off, a little bit of sell-side action for you. Estée Lauder, those shares up 1.8%. This is thanks to an upgrade from Deutsche Bank from a hold to a buy, saying that the company is successfully diversifying away from just China, and that with more top-line growth, things like margins should start to improve from here, John.
Danny, thank you. Appreciate the update. More from Danny in the next hour. On our radar this morning, our top story, Iran vowing retaliation against the United States, saying America should expect, quote, severe consequences. Tehran yet to announce whether or how it might strike American targets across the Middle East.
And this really raises a question for the 40,000 troops that the United States has in the region, within the reach of Iranian missiles that cannot reach Israel. They have huge stockpiles still of those types of ammunition. So a real question here of how they will choose to retaliate, and whether this really is a one and done for the United States. How much does this put the emphasis on President Trump? How far is he willing to go if Iran retaliates in a provocative way?
But if Iran retaliates in a way where they did in 2020, potentially this does become a situation where this administration was able to escalate to de-escalate. When I say 2020, this was the drone strike on Qasem Soleimani, where in the back channels, the Iranians sent messages through the Swiss saying, we are going to have an attack in Baghdad, but then we are done after that. For our domestic audience, we have to see that we're responding, but we do not want a wider war.
Speaking of being provocative, this statement from the President of the United States, President Trump, posting the following on social media. It's not politically correct to use the term regime change, but if the current Iranian regime is unable to make Iran great again, why wouldn't there be a regime change?
And there was a collective palm to the forehead from a whole host of different Republican strategists who have been trying to make this seem really targeted and narrow in order to placate part of the Republican base that did not want to see foreign intervention in nation building like the president was talking about when you were following him in Riyadh. A real question here about how this is being perceived and whether the U.S. will be willing to continue with some of these strikes if there is some sort of retaliation that it does seem escalatory, given some of the pushback in the own Republican Party.
The challenge with this statement is that it goes against exactly what his cabinet members, like Secretary of Defense Pete Hegseth, had to say yesterday. This was not about regime change. This is a precision strike. J.D. Vance, we are not at war with Iran. We are at war with Iran's nuclear program. Well, actually, when the president starts floating regime change, that has a different sense of what he is after. And I completely thought of his speech in Riyadh, where most people said this was transformational on U.S. foreign policy. And he says it's the interventionalists that don't understand these communities and these countries that end up wrecking the world, and said that is not the administration he wants to conduct. And a month later, he's floating regime change.
A lot of change, that's for sure. We're tracking the disruption here at Bloomberg. Here's the latest on the airlines. BA, British Airways, and Singapore Airlines cancelling flights to the Persian Gulf. Others like Japan Airlines and Air India planning to reroute flights around the airspace. Some BA flights scheduled for today are still operating.
Yeah, why would you want to fly a plane into an area where potentially there could be retaliation that no one can predict, right? I mean, we're talking not only about Iran, but Iranian proxies like the Houthis. And we've seen already air traffic redirected so that it doesn't hit the airspace in a number of different places. I just wonder how long this disruption goes on. How long can airlines really handle trying to make these moves?
Also last night, the State Department put out a worldwide caution alert for every American citizen that's traveling. And they say that there is the potential for demonstrations against U.S. citizens and interests. So they are advising U.S. citizens worldwide to exercise increased caution at this moment.
That's the latest on travel. Stunning events over the weekend. America's attack on Iran, years in the making. A stealth 36-hour-long operation named Midnight Hammer. Pilots dropped some of the largest bombs in their arsenal on Iranian nuclear facilities. Joining us now to discuss is the former U.S. Defense Secretary, Mark Esper. Mr. Secretary, welcome to the program, sir. We'd love to lean on your experience, the work to execute an operation like this one, and your really high-level assessment of its success.
Well, good morning. Look, it was clearly successful in terms of the execution. Our aircraft were able to make it in, drop, 14 GBU-57s. The submarines launched TLAMs from offshore. We were in, out with impunity. Nobody was hurt. And I think it speaks to the skill and professionalism of the United States military. And now I think what we have to do is two things. First of all, get a good battle damage assessment, and that will take a few days. And maybe even then will be incomplete until we get inspectors on the ground. And then secondly, we're all waiting to see what Iran's response will be. And there are various predictions. You guys have been talking about it, what they may or may not do, but that's what we're all waiting for now.
If you were advising the president right now, what would you say to him in terms of what to expect in terms of Tehran's retaliation?
Yeah, look, I think there are a range of things that they could do. They could, first of all, use Shia militia groups in Iraq to target our people and facilities there. Secondly, much like they did during my time in early 2020, they could launch a salvo of missiles against U.S. forces in the Middle East, and there are a couple dozen bases there with over 40,000 U.S. service members that they could go after. Third, there could be cells here in the United States and globally, or they can go against American officials as they did a couple years ago and try that. And then they could go after shipping in the Strait of Hormuz, which I think is unlikely. But to me, those are the range of outcomes that they may pursue here in the coming days.
In 2020, when Qasem Soleimani was struck with that drone strike, we did see retaliation, but it was telegraphed through back channels to the U.S. administration. Do you think we could see Iran take that same approach this time around?
Yeah, I think what they have to do is calibrate this so that they do enough for domestic consumption, feel like they've satisfied the military, they've struck back, tell the Iranian people they struck back, but not so much that President Trump really ups the ante, climbs that escalation ladder, and really hits them back fairly hard. Within hours of the missile strikes at El Asad, we had Iranians on the phone privately reaching out to us saying they were done, they had no more, they wanted to stop fighting, etc. And that was, of course, long before we knew that American service members suffer concussions and TBI. But nonetheless, they'll do a lot of back-channeling because, they can't go much further. This is, they're being dismantled. Their leadership, certainly the military side, is being taken apart. Their nuclear sites have been pummeled. And so the question is, how much longer can they go on?
How can they even decide on some sort of retaliation or a strike against the United States if the supreme leader is reportedly hiding in a bunker, he's in his late 80s, and he has no access even to electronic communication?
Yeah, look, that's the big question is who's in charge? How complete, how effective is the chain of command right now? Are there instructions left behind to the IRGC or to the missile forces to launch attacks. That may explain why they haven't responded here in the 24, 36 hours since the U.S. strikes on Fordo, Natanz, and Esfahan.
There's one theory out there, Secretary, that this could potentially reignite some of the efforts that Iran has made to achieve nuclear status, because that is the only deterrence, and especially with the 400 kilograms of enriched uranium missing in action. How concerned are you about that reality going underground and really having the Iranian officials expedite those efforts?
Yeah, look, you bring up a good point that I was going to raise. There's still 900 pounds of 60% enriched uranium that's fairly close to what they would need for 10 nuclear weapons out there that we don't have control of. We don't know where it is. The IAEA doesn't know where it is. So first of all, we have to track that down. Secondly, we don't know to what degree the Iranian infrastructure has been destroyed. And even if it has, it's just a matter of time before they rebuild. Now, that at this point probably looks more like years than anything else, than months. But nonetheless, until there is a fundamental change in the ambitions of the regime or a fundamental change in the regime itself, this is likely an ambition that will grow back over time, arguably more energized than before because of what has happened here in the last couple weeks.
There's a larger point, Secretary, that other people have been making this morning, which is that it is a deterrent to, say, Russia, to China, showing what the U.S. military can do and is willing to do in the face of some sort of red line that gets crossed. Do you see it that way, or do you see other nations and seeing the need to become nuclear or having some sort of deterrent that really takes this potential outcome off the table?
You know, deterrence is based on two things, capability and will. And I think everybody has understood the United States military has the capability to do a lot of things. I don't think anybody ever doubted we could do what we did with regard to B-2 stealth bombers entering Iranian airspace and dropping these bunker busters. I think what is different here is President Trump has shown the willingness to do it, despite domestic voices coming from both the right and the left saying he shouldn't do it. So I think in this regard, it's more of his willingness to take action, which probably caught Russia's and Beijing's attention.
Well, this was one criticism of the previous administration, as you know, Mr. Secretary, the failure to provide a satisfactory deterrence in key waterways in this region. And I'm thinking more of the Red Sea over the last few years. As we think about the Strait of Hormuz, can you just share with us what you learn about the best way to provide a deterrence and to prevent the disruption of those waterways?
Yeah, well, look, I think sending a clear message, first of all, is important. But secondly, and I say this in light of the fact that the Iranian parliament yesterday voted that Iran should close the Strait of Hormuz, I think there's going to be a good argument if they strike back to take out the Iranian Navy, particularly those elements of the Navy that could shut down or obstruct or hijack shipping in the Strait of Hormuz. So you could sink the mine layers of the Navy. You could go after the swarm boats that tend to come up upon cargo tankers and take them ashore. You could knock out Iranian missile batteries on the coastline. So I think, to me, that would be the top of my list if Iran tries to shut down the strait or takes more aggressive action, would be to take that card out of their hand, because everybody is concerned about shutting down the Strait of Hormuz, and yet, even though it would fly in the face of their own interests, they continue to threaten that.
Difficult to answer the next question, sir, but just a final question. Do you get the sense that American involvement in this operation is over, or do you think this might be ongoing?
I think it's to be determined based on how Iran responds. I think President Trump's instincts have long been, since the time I worked with him, he does not want to get involved in wars. He doesn't want this to go on and on and on. I think if Iran shoots missiles and they're largely feckless, I think we stand back. We probably continue to support the Israelis with munition and intelligence and defensive air defense capabilities. But I think in terms of continuing strikes, we probably step back at that time and then urge a negotiation. By the way, a negotiation between Iran and Israel that's going to have to include a return to the non-proliferation regime and inspectors and verification mechanisms on the ground in Iran. That's absolutely critical.
A deeply thoughtful conversation, sir, and we appreciate your time. The former U.S. Defense Secretary, Mark Esper. Over the weekend, Secretary Rubio was interviewed, and he was asked about the prospect of the Strait of Hormuz being closed down. And he said that would be an escalation that required a response. The former Defense Secretary sharing with us just briefly there what that response might be.
Potentially sinking the Iranian Navy, and the United States could do it. We have one of the biggest U.S. air bases, military bases in Doha, and then in Bahrain we have the 5th Fleet of the U.S. Navy. that is something that we could potentially overwhelm the Iranian Navy with. Already, the president used the word "we" when he said have control of Iranians' airspace. What Rubio has said, as a number of people have said, is for Iran, this would be a suicide mission because they need the Strait of Hormuz to get their barrels across. And the country that will likely tell them not to do that, of course, will be China and Xi Jinping.
If you're just joining us, welcome to the program. Equity futures just moments ago turning just a little bit lower. But as we've said, repeated all morning, no real drama here, at least in the equity market. We're down by 0.2% on the S&P. With an update on stories elsewhere this morning with your Bloomberg Brief, here's Yohara Anand. Hey, Yohara.
Hi, John. President Trump's One Big Beautiful Bill is nearing a crucial vote in the Senate this week. But the $4.2 trillion tax cut package doesn't yet have the support it needs to pass the Senate. Fiscal hawks seeking to lower the bill's price tag are at odds with Republicans worried about Medicaid cuts and phasing out green energy incentives that provide jobs in their states. Meanwhile, we are just one day away from the New York City mayoral contest. Former Governor Andrew Cuomo received a last-minute endorsement from President Bill Clinton, a move experts say could help turn out older voters. And Michael Bloomberg, the founder and majority owner of Bloomberg LP, the parent company of Bloomberg TV, also endorsed Cuomo. And the latest How to Train Your Dragon topped the North American box office for a second weekend, fending off the newly released horror movie 28 Years Later. That's according to ComScore. The animated film Elio had the lowest opening weekend ever for a Pixar film released in theaters. That's your Bloomberg Brief. John?
Yohara, thank you. More from Yohara in about 30 minutes from now. Up next on the program, the Strait of Hormuz in focus.
The first people that should be angry about it are the Chinese government, because they take a lot of their oil comes through there. The Chinese are going to pay a huge price, and every other country in the world is going to pay a huge price. We will too. It'll have some impact on us. It'll have a lot more impact on the rest of the world.
Up next on the program, we'll be catching up with Jorge Leon of Rystad Energy, live from New York City. You're watching Bloomberg TV.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I asked whole corporations study how will you bring generative AI to their job.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Bring you up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Marie Hodern in Buenos Aires, Argentina, and this is Bloomberg.
The opening bounce about 1 hour and 42 minutes away. Going into that, equities down by 0.2% off the back of a three-day slide on the benchmark here stateside. We're down 0.25% on the Nasdaq 100. In the commodity market, tracking crude for you throughout the whole of this morning, of course. 77.68 on Brent, up just 0.9% so far. Under surveillance this morning, the Strait of Hormuz in focus.
The first people that should be angry about it are the Chinese government, because they take a lot of their oil comes through there. So they should be the first ones that are saying if they mine the Straits of Hormuz, the Chinese are going to pay a huge price. And every other country in the world is going to pay a huge price. We will too. It'll have some impact on us. It'll have a lot more impact on the rest of the world. A lot more impact on the rest of the world. It would be a suicidal move on their part.
So here's the latest this morning. Iran's parliament endorsing the closing of the Strait of Hormuz, a vital trade route through which over a fifth of the world's oil passes every single day. The ultimate decision to close the strait resting with the Ayatollah. Joining us now is Jorge Leon of Rystad Energy. Jorge, welcome to the program, sir. Just the market more generally seems to be pricing in limited escalation risk, and I wonder what you're communicating to clients so far this morning.
Good morning, John. Thank you for having me. Indeed, it was a bit surprising at the beginning of the day that prices have not reacted as one would have imagined. And I think this is really driven by the significant degree of uncertainty that is that we're seeing. We're not really sure what is going to be the Iranian retaliatory measures. And this is going to be key to understand where this crisis is going forward.
Is the threat of closing the strait more useful to the regime than actually closing it?
I think that's a great point. I think the threat is quite important. I don't think from the geopolitical point of view it will make sense for Iran to try to close the strait. As it was mentioned, 95% of Iranian crude is destined, it goes to China. So the last thing that the Iranian regime would want to do is upset the main trading partner. And also economically, it wouldn't make sense for Iran to try to close the Strait of Hormuz and therefore heavily affect their economic outlook.
How concerned are you about potentially not the closing of the strait, but Iran or its proxies like the Houthis attacking energy facilities and infrastructure like we saw in September of 2019 when they went after Saudi Aramco?
I think this is a real threat. Now, the world is very different now compared to 2019. The diplomatic relationship between Iran and the rest of the GCC countries has improved dramatically. So I think that is slightly less likely than what we saw than in 2019 because of that important element. But having said that, I think there is still a significant risk of Iranian retaliatory strikes against military assets of the U.S.
How much, Jorge, are we understanding the muted reaction today in a correct light? Is this because people are pricing out the chance of some sort of significant retaliation, or is it because of the glut of oil, the oversupplied nature right now of markets at a time when there's real question about just how much economic growth there could be?
I think it's a matter of a bit of both. On the supply side, yes, there's a lot of oil in the market. There's a lot of OPEC plus spare capacity also in the market. And let's not forget that OPEC plus is increasing production. So that's one element. On the supply side, yes, there's a lot. There's also headwinds from the macroeconomic point of view. So demand growth might be tilted toward the downside. That is one element. But I think it's also the fact that market and energy traders are still trying to understand what is the calculus here, what is going on, what could Iran do next, and that's where the market is trying to price itself in this very volatile situation. So my expectation is that unless we have clear indications from Iran, we're likely to see a lot of volatility in the market in the coming hours and days.
There's a question that Anne-Marie raised, which I think is a really important one, bombing assets that could come both from Iran, but also potentially from Israel. We've seen the willingness to bomb certain sites in Iran that do produce oil. How much do you see that as a risk that isn't being accounted for?
I think that is also an important element. In the past round of strikes, energy infrastructure has not been targeted. But this time around, as you might remember, last week there was some Israeli strikes on Iranian energy infrastructure. So that's also an important element. But from looking at the big picture, I think that the main risk is really the closure of the Strait of Hormuz. That is what really moves the market. And in the unlikely scenario that this happens, then we're really talking of a world where oil prices could rapidly spike, I would say, above $100 per barrel very easily.
Not seeing that right now. Jorge, we're tracking this. We continue to track this. Jorge Leon there of Rystad Energy. There seems to be a conclusion out there at the moment that a lot of the barrels going through this strait go to China, and that Iran isn't going to disrupt the flow of energy to China. That seems to be the conclusion from most people so far this morning.
Why would they annoy not only their biggest trading partner, but also all of their peers in the Middle East? Also, and this is something that Norman Rule raised that I think is really important, it wouldn't hurt Israel. And so if they really want to go after Israel, why would they take this particular approach?
This is why Rubio had called it, the Secretary of State had called this suicidal to their own economy. It's not going to hurt their adversary. Potentially it'll hurt everyone else in the world, given the United States, but it's going to hurt themselves. How are they going to export if they don't have the Strait of Hormuz? And then, of course, it's going to really irk the Chinese, which get these cheap barrels from Iran.
We've heard it a lot already so far this morning. Don't extrapolate out this comfort too far. We're still waiting for one thing, and it's an important thing: a response, retaliation from Iran.
We are waiting for this response when it comes to this retaliation from Iran, and potentially will be like in 2020, and they will give notice to the United States of what it's going to be, and then it has this feeling of one and done. But right now, the Ayatollah is in hiding, and he would be the one that has to give the go-ahead on what the retaliation is going to be, and there'll be a menu of options from retaliation on U.S. air bases in the region, or potentially something like cyber attacks. There's going to be a whole host of potential options.
Just to respond to that, how orchestrated would it be this time around? And yes, reflecting on the experience of, say, 5 years ago, that was tremendously orchestrated. Is this time different?
Well, it depends how much the Iranians want to signal that they're willing to go at this in a more protracted way, and that they're willing to continue having this tit for tat, or further be willing to bring the United States into the fold, because right now they are every day at war with Israel. We should also note, when it comes to what is going on right now in Iran, the chain of command, no one really knows where this potentially can come from, because the IRGC's top brass has been decimated.
There's also the issue of President Trump. We know he was willing to do one particular targeted strike. Is this administration willing to go further, to actually take additional strikes at a time where it really is splitting some of his base, some of President Trump's base? And that, I think, is something else that people have been talking about. If he's not willing to go to regime change, how far is President Trump willing to go?
So far this morning, we're fading escalation risk. You see that in the oil market, positive by just 0.75% on both Brent and on WTI. You see in the equity market just a touch as well. Equity futures only down by 0.1%. Up next on the program, the third hour of Bloomberg Surveillance is just around the corner. We'll catch up with Venu Krishna of Barclays, the Israeli ambassador to the UN, Danny Danon, Veronica Clark of Citi, and Mike Kontopoulos of Richard Bernstein Advisors. We've got through about 2 hours of this program and haven't mentioned the Federal Reserve once. Has the Fed come up once?
No, and probably for good reasons, because last week you didn't miss much.
We get a sprinkle of the FOMC in the next hour of Bloomberg Surveillance from New York City. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook: take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter, we were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me.
Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5. Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
The situation with Iran is going to be with us for a little while.
President Trump, Israel are all stepping into a massive realm of uncertainty.
Higher oil prices as being more of a tax on the consumer and a headwind to growth.
What we are really focused on is the path that this conflict takes.
Diplomacy is the key here.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
90 minutes away from the opening bell, and we are fading escalation risk this morning. Good morning to you. Your scores look like this. Equity futures on the S&P barely negative, down by not even 1/10% on the benchmark stateside. Similar move on the Nasdaq 100. In the commodity market, briefly overnight a spike. We fade that as well. Positive by just 0.6% on Brent crude. WTI here, Bramo, 74.34.
Traders are exhausted. Right now, you can feel that. There has been a number of existential threats that have come up pretty much on a weekly or daily basis, depending on your time horizon. And pretty much every time when people sell, they get burned on the other side. So it seems like there is a feeling right now, why price in the worst case scenario? Why even more heavily weight that when you can make all of these rosier scenarios that leave you in a place that looks very similar to where we were last week?
Anne-Marie has talked about this repeatedly. Focus on the chain of command in Iran or lack thereof. When you think about retaliation, who is in position right now to make that decision?
Well, it would be the Ayatollah, but at the moment, he's in hiding. It doesn't seem like he has access or he's staying away from electronic communications. Obviously, this is being surveilled. This is a very old individual. He's in his late 80s. And we've been talking about this idea of potentially the disruption of closing the Strait of Hormuz could be and how Iran's parliament voted to do this. But explicitly for this to happen, the Ayatollah would have to give the final call. And right now, the Ayatollah is missing in action.
As the week progresses, we've got to think about other things. Tomorrow, the Fed Chair Jay Powell kicks off his semi-annual testimony. Right now, the 2-year is down about 2 basis points, around 390. Anchored around this view of a Fed that's going to do nothing anytime soon, or do something, maybe in several months' time in September. And for me, this Federal Reserve, things get harder and harder because at the same time we're talking about inflation risk, we're also talking about a growth profile that is deteriorating. How is the Fed going to get in position to respond to that?
And really what we're talking about this morning, the potential rearranging of the Middle East, affects that. It is yet another unknown, the idea of oil prices and how they filter into inflation. This comes before core PCE, which we get on Thursday, as well as personal income and spending, the dual mandate, increasingly under pressure as they head into the rest of the year. And Chris Waller, Fed governor, throwing some sand in the gears late last week, coming out and saying, really, this is a Fed that could move as soon as July. Maybe he is auditioning. Either way, there are a number of people in markets that think the same thing because of what you just said, the growth aspect that does seem to be slowing.
This has been buried by the news flow over the weekend. I get that. I understand that. But at the same time, the president was also posting on social media, just flirting with the idea of, I'm not going to say he's looking at firing Kim. He's not looking at firing Kim. But when you throw out words like firing Kim, they're provocative statements.
Right, and he continues to do this. He continues to jawbone this idea, and then he wants a new head of the Fed. But the fact of the matter is, Jay Powell has less than a year left. And already we've seen this administration start to think about potentially just thoughts right now of who is going to fill that position. And then Scott Bessent said to me just a few months ago, the Treasury Secretary, that these interviews will start in the fall. So potentially we could have a shadow Fed chair before the new year is up.
Yields down by a basis point or so at the front end, down about 2 basis points on 10s to 4.36. Coming up this hour, we'll catch up with Venu Krishna of Barclays with Global Markets on Edge, the Israeli ambassador to the UN, Danny Danon, on what's next in the Middle East, and Veronica Clark of Citi on the way for a dovish pivot from the Federal Reserve. We begin this hour with our top story. All eyes on the Middle East as Iran vows retaliation. Our team coverage starts right now with Bloomberg's Jemana Basechi in Dubai and Tyler Kendall at the White House. Jemana, I want to build on the conversation you've been having, that Anne-Marie's been having, the chain of command. When we think about retaliation, who is in position right now to make that decision?
Well, ultimately, it would still be the Ayatollah and that Supreme Council. Unclear where the Ayatollah is right now. He was last seen in a televised address last week before the U.S. strikes took place, but nothing since then. So in all likelihood, they are probably trying to, in whatever format, come together and build out a plan. Remember, in response to the Qasem Soleimani killing in 2020, it took them at least 5-6 days to build a response around it. But I would say right now, the region is focused on 3 questions. Number one, how much damage was actually sustained at those nuclear sites from the attacks over the weekend? It's going to probably take a couple of days, if not weeks, to assess how fatal that blow was. Number 2, whether Iran actually still has the capability to go ahead and build a nuclear weapon, even though they have sustained a lot of damage at those sites. And number 3, do they want to risk a response to the U.S. that might actually force further U.S. military intervention, knowing that their own defense capabilities have been severely damaged, their air defense system has been completely obliterated, their long-range ballistic missiles taken a big setback as well, and their proxies in the region are nowhere to be seen. So all of these are questions that the Iranian leadership has to grapple with. And at this point in time, they're probably focused on regime survival as opposed to coming out on the offensive.
Well, I think that introduces the 4th question. Tyler, what is the ultimate goal of the U.S. and this administration? And did the president blur the lines overnight?
Yeah, hey, John. Well, that is the biggest question here going forward, considering that we saw from that post on Truth Social, President Trump suggesting the words regime change, saying that it's not politically correct to use that term, but that if Iran isn't willing to make Iran great again, then why wouldn't they call for regime change here? Now, U.S. officials have gone to lengths to say that that is not the goal of this operation, but instead it really was towards dismantling or ending Iran's nuclear program. But as Stephen Cook told you on this program earlier, essentially the regime's nuclear ambitions is just so closely intertwined with Iran's supreme leader's ultimate goals. So perhaps there isn't as big a distinction moving forward as we look at this. Now, of course, the big question here is, what is that Iranian retaliation going to look like? The White House has made clear that it has already taken protective measures to protect U.S. troops in the region as they watch this closely. John, we could get some sort of update later on today. President Trump is set to convene his National Security Council at 1 p.m. Eastern.
Tyler Kendall, Jemana Basechi. Tyler, Jemana, thanks for the coverage this morning and throughout the last few days. To the both of them, thank you. For the View on Wall Street this morning, joining us now is Venu Krishna of Barclays. Venu, good morning to you, sir. It's good to have you in the studio.
Good morning.
The Teflon S&P 500, shaking off trade wars and actual wars. Does that all make sense to you?
Yeah, it does. I think our view is that it's going to be choppy. We are pretty close to what our price target is, which is 6,050. But I think we are looking past this year. What we are seeing is, next year it's going to normalize. Growth is going to improve versus this year. We're going to be in a monetary easing cycle compared to this year. And inflation probably is also going to start moving in the right direction, even if it remains sticky for a longer while, right? So all that means that earnings are actually going to accelerate 9% as per our estimates. And that is a pretty good state of world to land in for the equity markets. And in fact, if you believe in that world, then we think S&P ends at 6,700 by the end of next year.
If you believe in that world is kind of key.
Absolutely.
And this question at this moment is, how much can you price out the potential for some sort of oil shock, some sort of inflationary shock based on the fact that you've got ships making U-turns and then U-turning again to go through the strait? That's all expensive when it comes to oil, when it comes to overtime, when it comes to personnel, insurance. How much are we really understanding what the inflationary risks are?
That's an excellent question. I don't think we have fully contemplated that, right? Because the historical experience thus far has been that especially geopolitical risks have managed to be contained every time. And the market is become accustomed to that, and hence we are extrapolating that once again.
This is important. The Pavlovian response of markets. They have been trained to look past every once-in-a-lifetime headline that they get every single day.
Absolutely.
At what point does this make a market unable to respond to something that's real?
The unfortunate thing I feel is that the market will respond when the circumstances change, either for the better or for the worse. And what you're alluding to is, can things go worse? Of course they can. To what extent does U.S. get dragged into this confrontation? To what extent does Iran step back from retaliating? And to your point, so far, oil infrastructure has not been targeted either by Israel or Iran itself has not moved aggressively on the Hormuz Strait, for example. So I think all those things are still unknown, and it will be foolish to claim that we have a sense that it's not going to happen. So I think your point is well taken, and inflation in that case does remain a significant risk, which means it'll percolate into the Fed policy, into our economic growth, into global growth for that matter, everything. So yeah, I think we are at a very critical point right now, but the base view is that it is going to be contained. And for that to be contained, all parties have to be restrained in how they behave.
How do you predict and analyze what this administration is going to do? Because we saw with Liberation Day, the president made a 180 and pulled back from the brink and the most aggressive policies on tariffs. But when it came to striking Iran, he went through with it.
I think the market has no idea. I think the general sense is that most people around the president are also not as, should I say,
strategic uncertainty.
Yeah. So, but that is the style of operation the market has got used to. But I think the good news is on tariffs, for example, what the market has realized is that the extreme rhetoric on tariffs is indeed a negotiating tactic. It doesn't mean we're not going to have tariffs. We are going to have tariffs. The only debate right now is what's the magnitude and what's the direction and what are the impacted regions in the world. I think a similar situation. I think in this case, you could argue that the U.S. had to act given the enormity of what is happening in the Middle East. And so I'm not too sure that the more recent action is a big divergence from what the strategic objective of the U.S. is for the safety of the world.
Vanna, just to build on Lisa's line of questioning, the conditioning of investors, I think it's important to go over all of this. This really started GFC. We've been conditioned, trained to buy on weakness to such an extent that people don't even sell anymore on events like the one over the weekend. Now, I think there is a slight pushback, and this is the following, that perhaps this time around the Federal Reserve might not be in a position to respond to weakness. How constrained is the Fed put? And if it is constrained, how difficult is it to make the argument that stocks keep going up and to the right if the labor market starts to crack?
If the labor market cracks, the question is what is the extent of that cracking, right? And so if it falls apart sharply, then the equity market is going to be in trouble because then economic growth is going to be negatively impacted. But we do feel, our house view is that the Fed is not going to cut till the end of the year, and you're going to have perhaps a couple of cuts next year. But I would say that if you take a step back, the equity market has thus far dealt with relatively higher rates quite reasonably, right? And companies have also managed around that. So, and if you take a step back and say prior to COVID, if you looked at a 30-year history, we had much higher rates for a very long period of time. It's just that we got used to, post-GFC, a 15-year period of unusually low interest rates, which was not the ideal environment in itself.
But then there's an important distinction. Allow me to jump in. There's an important distinction here. Can the economy live with 5% interest rates? Can the market live with 5% interest rates? Based on the experience of the last few years, sure. Can the economy and the market live with 5% interest rates if the unemployment rate starts to go higher? I think that's a very different question, isn't it?
Absolutely.
Unemployment at 4% and rates around 4%, you can sit here and say equity market's going to be okay. Can you say the same thing if unemployment starts to climb towards 5 and the Fed funds is still close to 4 because they can't cut? That's a different world, isn't it?
Absolutely. That's a difficult combination. In fact, our house view is that unemployment is going to peak at 4.5%. So in the scenario you're painting, where rates are relatively higher and unemployment is breaching the 5% level, then we have a problem. Then this market is not going to sustain the current levels, and we'll be having a totally different discussion altogether.
Let's hope we can avoid that problem. Venu, it's great to catch up, sir, as always. Venu Krishna of Barclays, the likes of Neil Dutta, Lisa, as you know, you covered it all last week. Very, very loud, speaking very, very aggressively about what this Fed needs to do in response to these cracks starting to emerge in the labour market.
Cut rates again. And guess what? Chris Waller's correct. And there are a lot of people in markets who agree. The problem is you have seen resilience in the underlying data. Does the inflation data give them the green light? And that's the reason why PCE is going to be really interesting on Thursday.
The Fed Chair Jay Powell's semi-annual testimony kicking off tomorrow. Look out for that. Equity so far just about unchanged on the S&P, with an update on stories elsewhere this morning. With your Bloomberg Brief, here's Yahara Arnott. Hey, Yahara.
Hi, John. In a post on Truth Social, President Trump floated regime change in Iran, writing, quote, "If the current Iranian regime is unable to make Iran great again, why wouldn't there be a regime change?" This comes after his top national security officials insisted the U.S. did not want to bring about the end of Iran's government, only an end to its nuclear program. Meanwhile, China criticized the U.S. strike on Iran and said it's willing to join efforts to restore peace in the Middle East. A short statement from the foreign ministry said the U.S. move seriously violates the purposes and principles of the UN Charter and international law. China calls on all parties to the conflict, especially Israel, to cease fire as soon as possible. And Tesla rolled out its long-awaited driverless taxis to a handful of riders yesterday in Austin, Texas. The first robo-taxi trips were limited to a narrow portion of the city with an employee in each vehicle keeping tabs on the operations. The car maker handpicked initial riders, which featured investors and social media influencers who live-streamed their trips. That's your Bloomberg Brief. John?
Yahara, thank you. More from Yahara in about 30 minutes' time. Up next, the morning calls, plus the Israeli ambassador to the UN, Danny Denot. That conversation just around the corner. Live from New York City. Good morning.
Thank you so much.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question. I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action. We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Live from New York City, the opening bell just around the corner, 1 hour and about 12 minutes away. Your scores look like this. Equity futures fading just a touch, totally unchanged on the S&P 500. On the NASDAQ, just turning just about positive. This is where we've sat through the New York session so far. So far this morning, basically unchanged across the board. That's the price action, not much of it. Let's get you some morning calls. First up, UPS raising its price target on Tesla to $215, saying the robotaxi is already priced into the stock. That stock is higher by 1.1%. Your second call from Goldman, initiating coverage of Tyson Foods with a buy rating, citing strength in its diverse offerings. We're positive there by 0.6%. And your third and final call, Medius upgrading AMD to buy, predicting AI inferencing will be much bigger than expected. That stock so far this morning higher by about 1.3%. That's some of the price action and your morning calls. Let's turn back to our top story. The world bracing for Iran's response after the US attacks its nuclear sites over the weekend. Joining us now is Danny Danon, the Israeli ambassador to the United Nations. Ambassador, good morning, sir. It's good to see you.
Good morning. Thank you for having me.
Let's talk about the events over the weekend, and let's talk about this also. Who's in charge in Iran right now? Anne-Marie's been talking about this all morning, the chain of command. Who's in charge?
Well, it's hard to tell. You know, they have the regime, which still has control over the population. But you know, you see statements coming out. The Minister of Foreign Affairs is flying all over, sending threats to Israel, to the US. I don't think that Iran today is in a position to threaten anyone. They should think very carefully about the next steps, what they want to do, what they should do. You know, our position was very clear that we had the goal in this operation to degrade their capabilities. I think we achieved a lot so far. We still have more targets, but I think when you look at Iran today and you compare it to the last time I was here a week ago, it's a different ballgame. They don't have those capabilities over the reactors, and I think we were able to push back, you know, significantly Iran, more than expected.
You were here just a little over a week ago, the morning after those first Israeli strikes started, and you said it would take days or weeks, this operation. We heard from the Prime Minister today, Benjamin Netanyahu, and he said they're very close to completing the goal of eliminating the dual threats, ballistic missiles and nuclear capabilities. Where are we on the timeline?
So I cannot give you exact dates, but I think, you know, the main challenges we had, which were the nuclear reactors, you know, the result of the U.S. attack are magnificent. You know, the U.S. had the capabilities that we don't have. So on that issue, I can tell you that we achieved most of what we wanted. But still, you have the ballistic missiles, which is a major threat to Israel. It's important to know that we all speak about the nuclear threat, but when you have 1,000 ballistic missiles targeting Israel, it's a problem. So we took a lot of those launchers, but we still have more to go.
When it comes to nuclear facilities, though, this morning, the IDF said that they went after Fordo entrances and exits to make sure they were preventing the removal of these materials. How do you assess what Iran has right now in terms of their nuclear capabilities?
Well, Iran is a big country, and they were hiding a lot of the materials, and they were trying to move stuff. So we cannot guarantee the result. But when you look at the infrastructure, at the machine of terror that they built, and by the way, they spent hundreds of billions over the years. Now it's not there. So we cannot guarantee 100% result, but we can tell they don't have those reactors. It will take them decades to rebuild it.
There is a question about how much regime change is part of what Israel is trying to do. We've heard President Trump discuss that as well. What's your sense of how much that's also one of the aims?
Well, I can tell you feelings. You know, we all wish that there would be a regime change. For the people of Iran, they're victims of this regime, you know, so we pray for that. But the question if it's the goal of the operation, I think, you know, it's not our goal, and we heard President Trump also. It's very hard to tell the people of Iran what's good for them. They should decide, and I hope that they will take the right decision. They deserve better.
You're the ambassador to the United Nations. Earlier this year, Israel withdrew from the UN Human Rights Council following the U.S. in doing that. What role does the United Nations have to play in some of these negotiations at a time where people are wondering about its institutional relevance?
Well, I agree with you that they should think carefully. Yesterday, there was an emergency session of the Security Council, and some countries condemned the U.S. And I told them, where were you? All those years when they enriched the uranium, when they built the reactors, now you come and you condemn Israel and the U.S. So the UN should be much more effective. And basically they allowed Iran to do what they did all those years. And I still believe in the UN, but I think the UN should be reformed. We expect the new U.S. ambassador to arrive soon. And I think that together we can change what's happening there.
There's a line that you used earlier in the conversation. You reflected on the U.S. capabilities, and you said that the U.S. has capabilities that we don't have. And it raises a question that I think makes some people in this country uncomfortable. Did Israel start an operation knowing that they wouldn't be able to complete it without U.S. involvement?
No, absolutely not. And I said it, I think, last time I was here. We have the capabilities. It will take longer. It will be more painful, but we can deal with the threats. So I think what the decision of the U.S. was the right decision, because now it will be a shorter war, and I think it's much more effective.
How are you preparing for the retaliation?
So first we have to acknowledge it's not easy for us. You know, the entire country is not functioning today. You know, people are not going to work. People stay next to the shelters. You talk about 9.5 million people for almost 2 weeks. It's heavy, but we are willing to continue as long as it takes. But we believe that as I said earlier, we achieved most of the goals. Now we have a few more things we want to take care of. And now it's up to...
What are those few more things?
You know, mainly the ballistic missiles. The industry, you know, they built a huge infrastructure to produce ballistic missiles. They wanted to compete with the US and Russia, and they were very close to get there. So we want to make sure that it will be very hard for them to rebuild those capabilities.
These kind of ballistic missiles coming from Iran and their nuclear program, this is the point of the regime. Can you decimate their ballistic missile program, their nuclear program, without decimating the regime?
Well, we hope that they will not have the desire after what happened in the last 2 weeks, that they will understand that we will be there. If they will continue with aspirations to eliminate Israel, Israel will be there before they attack us. We learned the lessons after October 7th. We are not taking any chances.
Ambassador, we appreciate your time once again. Thank you for being here. The Israeli ambassador to the UN there, Danny Denard. A lot of questions still unanswered about the status of some of those materials that you've been reflecting on over the past few days.
Absolutely, and this is why it was so interesting when this morning the IDF came out and talked about that they are bombing the access road leading to the site of entrances and exits when it comes to Fordo, because they are concerned about some of this nuclear material leaving Fordo that potentially these buster bombers did not actually get over the weekend.
As the week grows older, the attention of this market will shift towards the Federal Reserve once again. The Fed Chair Jay Powell delivers his semi-annual testimony in the House Financial Services Committee tomorrow. In just a moment, we'll catch up with Veronica Clark of Citi, who says the Fed's dovish pivot is still ahead. Just ahead, the opening bell, 1 hour and 4 minutes away. Equity futures totally unchanged on the S&P 500 as the commodity market doesn't blink, just sits there. Unchanged. Crude right now, WTI and Brent, positive by just 0.1% on Brent crude at 77.11, 73.92 on WTI.
flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince.
Concerned that not enough guardrails may be set up just yet.
Headline after headline. Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Three-day losing streak on the S&P 500 through Friday, coming into Monday. That's the longest daily streak of the month so far. Equity futures at the moment just about unchanged on the S&P. Similar move on the NASDAQ. In the bond market, anchored around this do-nothing posture over at the Federal Reserve. The two-year basically unchanged. Down 2 basis points, 388.65. And also unexpectedly unchanged in the commodity market. Crude not doing much at all. WTI and Brent. Brent crude going nowhere, 76.96. WTI down by 0.2% at 73.59, coming off the back of 3 weeks of gains, mind you. And bear also this in mind, that a few months ago, not even, in early May, we were trading in the mid-50s. So we've seen a big change in the past 6 to 8 weeks, 73.65 on WTI. Busy week ahead, including 2 days of Fed Chair Jay Powell testimony on Capitol Hill. Bloomberg's Mike McKee joins us now for a sneak peek of what we can expect. Good morning, Mike.
Good morning, John. Well, of course, Jay Powell's been in Donald Trump's crosshairs since Trump came back to office, basically, because the president wants lower interest rates. This week, Jay Powell gets a chance to explain why he's not getting them right now. And that is very much explained by the oil prices you were just talking about, John, because the Fed doesn't want to get ahead of what might happen to the economy. And he'll explain that on Tuesday and Wednesday before the House and Senate. We also have a lot of other Fed speak this week. Bowman and Goolsbee today, Williams and Hammack on Tuesday, along with Powell. Kashkari and Schmid, it's a busy week ahead. We do have a couple of important economic indicators. One would be the Conference Board Consumer Confidence number tomorrow, but that was finished, that survey, before the Iran strike, so it may not tell us a whole lot. Friday, we do get the University of Michigan sentiment, and people will be watching that to see whether there's been any effect from the strike and from the inflation expectations. But also Friday, the biggest number of the week, personal spending and PCE inflation. What we have seen is inflation coming down just above the Fed's target on the headline, but with some base effects jumping up again expected for the month of May. We shall see if that is indeed the case. Also watching personal spending. Do Americans keep spending or have they backed off? A lot of that will go into questions that will be asked of Mr. Powell on Tuesday and Wednesday. And we'll see. I assume he's going to be more polite than the president, but I assume he gets the chance to defend what the Fed is thinking at the moment.
Michael McKee, let's talk about whether we should take the summer off or not. Steve Englander says maybe we should, and then Governor Waller spoke and said that maybe we could act as soon as July. How much does that introduce some uncertainty to the equation in the next couple of meetings?
I don't think it induces as much uncertainty as people think, because basically he was asked, what about July? Could you do it in July? And his answer was, well, I don't think the rest of the committee is going to go along, but if the data fell the way we want them to, then possibly we could. It was very hedged. I don't think he really means July is on the table. And of course, we have heard from him before when he spoke with us a month or so ago. He said he didn't think it would be until late August, early September before we'd have enough information for them to make a move. So I don't think you have to worry about that. I would say June, July, August off the table while we wait for data.
Mike McKee, thank you, sir. Looking forward to your coverage. Here's a take from Veronica Clark of Citi. She says the following: as inflation aside from goods slows and the unemployment rate rises, we expect a dovish pivot from Powell in July or September, with a base case for 25 basis point rate cuts resuming in September. Veronica joins us now for more. Veronica, good morning.
Good morning.
What's going to drive that dovish pivot? What do you see in the data so far?
Yeah, I think it first has to come from the labor market. I think we need to see the unemployment rate rising, maybe payroll job growth slowing. I think we can see that, especially before September. We'll get 3 months of data over the summer. We already see continuing jobless claims rising. In the past, last year, that's been a really good indicator for the unemployment rate rising. So I think that's first and foremost. But then, yeah, we need to see in the inflation data that it doesn't look like the tariff inflation is becoming widespread or persistent. And I think they'll have evidence of that by September, too.
The chairman himself has acknowledged the labour market is no longer a risk, a source of inflation. So what's he worried about?
Yeah, absolutely. I mean, maybe, high inflation expectations, but it is a very different labour market demand backdrop than the type of, backdrop that we had post-pandemic that led to the more persistent inflation. That was a very strong demand backdrop. Labour markets were tight, wages were rising. We definitely don't see that now.
There is an issue of supply shocks as well as potentially some sort of geopolitical shock, like the one that we've just been seeing, that could drive oil prices higher and lead to some sort of stagflation type activity. Why do you rule that out as a likely outcome that could potentially tie the hands of the Federal Reserve?
Yeah, I mean, we don't know, of course, so we'll see what the data look like, but it comes back to that demand backdrop that this doesn't look like a labor market or a consumer that will allow, even higher oil prices to become something broader. Back in the pandemic, we saw home prices rising, we saw wages rising. We actually see home prices falling now. That looks like a very different story. So we might see some data that look like a stagflationary environment, but I don't think it's going to be true stagflation.
Nathan Sheets, who I know you know, of Citigroup, of your bank, put out a global economic outlook over the past couple of days, and in it he talks about the likelihood that there would be some sort of deceleration of growth. But he added this, and I thought this was important, that the resilience of global activity and limited pass-through of tariffs to date highlights the risk that we are overestimating the disruptive effects of tariffs and some of these other potential shocks. How much have you rethought some of your thesis toward this deterioration of growth based on the economic data, based on earnings, based on even commentary that we're hearing from CEOs?
Yeah, I mean, we need to see obviously how the data evolve in the next couple months, but Chair Powell even last week was saying that someone has to pay for the tariffs, right? So we haven't seen it in the price data yet, so it doesn't look like consumers are paying for it yet. Maybe exporters are paying for it, but maybe it's getting absorbed in margins too, and maybe businesses would be looking to cut costs elsewhere to offset that. So I think it's too soon to know exactly where it shows up. But if we're not seeing those big price increases being passed on to consumers, I think that's telling us the consumer is weakening and someone is still paying for those tariffs.
What about the potential impact we could see on higher prices, even though they're now down at the moment from the start of the day, the opening of trade overnight? How much could that impact the inflationary story, what's going on in the Gulf?
Yeah. I mean, it's one of the many reasons the Fed is in this wait-and-see mode right now, right? There's lots of input prices that are going higher, and we'll see how that gets passed on to consumers. It is obviously, I think, just too soon to see the tariff impact. For the oil impact, it really depends on how high do oil prices go, how long do they stay at those elevated levels. This type of level here, it's about where we were 6 months ago. It's not something I would be super concerned about in terms of the inflationary impact, but there's lots of many input prices that are rising now, and maybe that increases the chance of pass-through.
Are they data dependent, or is this trade war making them data resistant?
I think they are data dependent.
You still think that?
Yeah, I think they will have to be at some point.
So why do they keep downgrading the outlook for growth and leaving the median dot unchanged?
Yeah, that's a good point. I mean, I think that is telling us that their reaction function in the end is going to be dovish. They only raised the unemployment rate forecast to 10th. They raised inflation much more, and they still pencil in the same number of cuts. I think that is a dovish reaction function. But they're able to be in this wait-and-see mode for now, but at some point, we could be waiting a while to get clarity on the policy outlook, but not as long to get clarity on the economic outlook.
Not to get stuck in the weeds, it's dovish relative to the inflation outlook, but it's pretty hawkish relative to the outlook for growth, isn't it?
Depending on the unemployment rate, we are at 4.5 right now for their end of year forecast. I think that is kind of the limit of what they would see as acceptable. I think we can get there pretty quickly too. That is a Q4 forecast. If we're starting to see signs that we're getting close to that even sooner, I think they're in the same position they were last year, and they're turning pretty dovish pretty quickly.
So last week, by the way, at the Fed press conference, Jerome Powell was asked about exactly that, and he said, how do we even know where to put our dots? One of us will say, what did you write down before they write it down? So there's a feeling that maybe they're kind of shooting darts at a dart.
How much sympathy do you have with that at the Federal Reserve? The SEP exists to communicate and articulate the reaction function of the Federal Reserve. If they no longer think it does that job, get rid of it. Who's forcing them to do it?
It's a great point. And then this raises an additional point, which is if they really have such a lack of certainty, how is communication effective as a policy tool? How much are they anchoring a market at a time when we don't understand the reaction function based on just exactly what John just said?
Yeah, no, they're really not at all. And there was this interesting bifurcation in the dots also, where you have this group of people who don't want to cut at all, and then you have another cluster who want to cut twice. Maybe Fed speak now gets more interesting. Maybe we start to see who is who. And yeah, I think that July meeting could be an interesting one where we get another month of data. And then certainly September, we'll get 2 more months of data between July and September. I think we'll learn a lot.
Exciting stuff. Looking forward to it. Veronica, thank you. Veronica
you.
Clark there at Citi. Looking forward to that semi-annual testimony from the Fed Chair Jay Powell. It kicks off in the House Financial Services Committee tomorrow. An update on some of the news elsewhere. This from the White House Press Secretary Caroline Leavitt speaking just moments ago. And saying the president saw intel that Iran was weeks from a nuclear weapon.
Well, this is something that's been politically difficult for the administration almost to talk about, because Tulsi Gabbard had said in March that there was no directive just yet from the Ayatollah when it comes to creating a nuclear weapon. The Israelis said that they were weeks, and now the president is, through his press secretary, Caroline Leavitt, saying that they were weeks away. Remember, in March, I reported that the president had sent a letter to the Supreme Leader saying, you have months to get to the negotiating table. And he continuously would say, we can either do this the diplomatic way or the hard way. And the hard way is what we saw took place over the weekend.
Just to get into the nuance there, how much daylight is there actually between DNI Gabbard and the administration? Because there is a difference between an instruction to create a weapon and having the enriched uranium to such an extent that you are weeks away from creating one if you wanted one.
Well, that's why there's nuance also in her testimony. If you go back and listen to the entire testimony, she talks about the fact, like the IAEA has talked about, that there's no country on the planet that was enriching uranium at the speed that we saw Iran do it, and the way they were doing it and getting to this 60%, this breakout period, potentially weeks away from creating a bomb. That is not the kind of enrichment you would see if you want to use for civil nuclear. And that is what the president seems to be wanting this is the reason why he ultimately, in the end, went for this military strike.
That's very important clarity. The latest then from the White House Press Secretary Caroline Leavitt. Just moments ago, the president saw intel that Iran was just weeks away from a nuclear weapon. Let's give you an update on stories elsewhere this morning. Here's your Bloomberg Brief with Yahara Arnott. Hey, Yahara.
Hi, John. Shares of Trump Media and Technology are rising 2.5% in the pre-market. The company just announced a few minutes ago it was planning a $400 million share buyback, which represents 8.1% of the company's current market value. Shares of DJT, though, are down nearly 48% so far this year. Meanwhile, major U.S. cities, including New York, Washington, and Los Angeles, are tightening security after Iran warned it was reserving all options to respond to the U.S. strikes. Police have increased patrols at religious institutions, diplomatic facilities, and public spaces. Officials say no credible threats currently exist, but are urging people to be vigilant. And millions of Americans from the Northeast to the Midwest are bracing for scorching temperatures in the days ahead. An intense heat wave is expanding and set to impact cities including Philadelphia, Washington, and New York City, prompting health advisories across several states. Triple-digit temperatures are expected through Wednesday, and humidity will push heat indexes to near 115 degrees in some areas. That's your Bloomberg Brief. John?
It's going to get steamy. Yahara, thank you. Thanks for this morning. Up next, we'll set you up for the day ahead. Plus, Mike Kontopoulos of Richard Bernstein Advisors joins us to break down this market. From New York City this morning, good morning to you all. You're watching Bloomberg TV.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We're integrated in every refrigerator, a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Listen carefully. Can you hear the rhythm in the markets? Not just in the syncopations triggered by inflation, but in the preludes leading to global elections, in the dissonance that moves the Nikkei, and the rising course conducted by AI. There's music in the markets, and if you want to learn to listen for it, we'll show you how.
Our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
The opening bounce 44 minutes away. Equity futures shaping up as follows. We are just about positive on the S&P. You haven't seen much price action at the index level over the past few hours stateside. On the Nasdaq 100, positive also by 0.1%. With some morning movers, let's cross over to Danny for more. Hey, Danny.
Hey, John. Breaking moments ago, a big drop from him and hers, the online pharmacy, down more than 24%. Novo Nordisk had partnered with Hims and hers not that long ago over allowing them to sell Wegovy on their platform. They have now withdrawn that partnership. Novo Nordisk rather, citing issues of compounding medicines on their platform and what they call some deceptive marketing. So those shares, again, down nearly 24%. We're also seeing a drop from the ADRs of Stellantis this morning. The new CEO officially taking the helm this morning, and with that, announcing a leadership change of about 13 different people. A huge task ahead for Stellantis in the turnaround, but shares are dropping off the back of that announcement, down some 2%. Finally, a little bit of deal news. This comes from the Wall Street Journal over the weekend, reporting that last week, BNY Mellon had looked at Northern Trust for a possible takeover of its smaller rival. The CEOs had talked. Reportedly, Northern Trust is not interested in that takeover. Even so, BNY continuing forward and evaluating their options, and including a formal bid. So Northern Trust shares up just under 6%, John.
Hey, Danny, thank you. Thanks for the update. A few of the names to look for going into the opening bell. Here's some events to look for going into the opening bell and through the rest of this week. At 9:45 Eastern Time, June PMI data at 1 p.m. Eastern Time. The President meeting with the National Security Team. On Tuesday, consumer confidence, the NATO summit kicking off, and Fed Chair Jay Powell testifying before the House Financial Services Committee. On Wednesday, Fed Chair Jay Powell returns to Capitol Hill for day 2. On Thursday, we get jobless claims, US GDP, and core PCE. And this week, a ton of Fed speak. Joining us around the table, Mike Kontopoulos of Richard Bernstein Advisors. Mike, good morning to you, sir.
Morning.
Risk worth ignoring, risk worth paying attention to. What do you do with the geopolitical risk over the weekend?
You know, I think the biggest thing for me is it just adds to what has already been a year of tremendous uncertainty. You know, first you had peaking profits in Q1, then you had tariffs in April. Now you have everything that's going on with Iran, Israel, the U.S. And to me, I think it just really shows that there's just tremendous amounts of uncertainty out there. In other words, there's scarcity for certainty. And I think that's the biggest takeaway for me.
Typically, that meant going out along the curve, sitting on the 10-year and sitting this out. Yields would start to drop, that bond would rally because people would worry about downside risk to growth accumulating. Has that story changed?
It's changed for now. I do believe that, you know, U.S. Treasuries will still prove to be a safe haven asset when, you know, the bottom really falls out of the market. But until that happens, until unemployment I think is really, well north of 4.5%, 5%, you probably are going to have a hard time rallying in the very long end of the curve. 10 years in, I think, can actually, yields can go lower, the curve will steepen. But, the 30-year, the 20-year, I think they're kind of stuck for a period of time just because of the uncertainty around deficit and future inflation expectations.
Just to build on what we've seen this morning, there's been a benumbing of market response to some pretty dramatic headlines that come out pretty much on an hourly basis. Does that concern you, that people are being conditioned to do nothing and to just buy?
Yeah, absolutely. I think there's a tremendous amount of complacency. And one of the things we do when I go out and talk to financial advisors and their clients, one of the things I always ask is during the sell-off that we saw in March and April, were you selling, were you holding, or were you buying? And almost universally, everyone was buying. They've just been conditioned to buy, and importantly, they've been conditioned to having a Fed come in and provide that put and provide that backstop for markets. And the Fed's been able to do that in the past because inflation's been low. But right now, with inflation where it is, which is still above target, and we think will remain above target, I don't think you have as much of the Fed put there to really incentivize that buying for every dip.
To put that sort of together, is there a sense that unless yields fall materially from here, it is unsustainable to see levels where they are, valuations where they are, even if we don't fall into recession, even if we get some sort of marginal growth and earnings profitability?
For me, it's less about yields, right? Because if you have the growth, then higher yields don't really matter. And if you have lower yields, then you have this intermediary period where the reason for lower yields is negative growth, and the equity market can fall dramatically and spreads can widen dramatically. And so I don't take cutting and I don't take falling yields as necessarily bullish. Not until you reach some sort of bottom of earnings growth, not until you reach some sort of very wide expectation for defaults to accelerate, things of that nature. You have to have that happen first before the lower yields provide the catalyst to higher markets. In a traditional, scenario of market decline. Now, whether or not that's traditional this go around, we'll see.
Do you think we'll get to that point, and when?
I do think you'll get to that point eventually. When I look at equity markets as an example, just starting there, what drives equity prices and valuations is earnings growth. It's not the level of earnings, it's earnings growth. Almost universally, as recently as 2022, when you peak in earnings growth and you start to decline, staples, healthcare utilities, high quality dividend payers, quality, certainty of cash flows, that's what performs well. There's no reason to expect this cycle to be any different. I just don't think people are paying attention to the fundamentals. I don't think people have fully bought into this idea that earnings growth has peaked and is going to decline. And if you go from 13% in Q1 to 0%, 2%, 3% by Q4, I think that's going to hurt, and you probably are going to have a bit of a rotation, particularly from the high valuation sectors.
Lori Calvasino was on, and she was saying how the equity market is taking its cue from the energy market right now. Right now, we see a very sanguine approach to what is going on in the region, given the events of the weekend and where the oil market is priced right now. You put in your note, though, beware of the transitory one-time shock story. The embargo of 1970 was technically a one-time shock, but it was entrenched. Are you surprised by how resilient the energy market has been?
Yeah, I have been a little bit surprised by it. I think right now we're sort of at an inflection point with regards to oil, where you can kind of, if this all goes away and everything else, you could have a situation where you're right back into the, maybe the 60s or even below that. On the other hand, there's an easy, you can create a scenario very easily where oil spikes to 80s, 90s, even north of 100, and provides to be a real problem for, energy, oil prices, gas prices, et cetera, in the U.S. that further crimps the consumer, along with tariffs. And I think that's your tail risk. I don't know whether or not we're going to get there. We'll see what the response is from Iran over the next several days, but that's certainly a tail risk. And it has been surprising to me that oil has been very well behaved so far.
New title, Deputy CIO. Congratulations. Is it nice to play in equities too?
It is nice, yes.
Get away from bonds?
Absolutely.
The gloom and doom of fixed income, right?
The realism of fixed income,
there
although it seems like right now, it's hard to know who's being more realistic about what. I mean, honestly, upside down kind of feeling right now.
How many times have we heard that this morning? Complacency versus confidence. Which one is it?
At a certain point, what's the difference, right? Because at a certain point, you either have faith in one concept, is that confidence, or is that complacency? And on the flip side, you've been burned every time you've tried to trade on this. So what is the big risk? Is it inflation? Is it a slowdown in growth? Is it both? Or is it that we are not pricing in the resilience of an economy that has really shown that over the past couple of years?
Mike, congrats on the new title. It's good to see you. Thank you, sir. Mike Contopoulos there of Richard Bernstein Advisors. Let's get back to that top story. President Donald Trump said to meet with his national security team following U.S. strikes on Iran over the weekend. Bloomberg's Tyler Kendall joins us now from the White House. Tyler, what's the latest?
Seems to be walking a line here when it comes to potential regime change in Iran. We just heard from the White House press secretary Caroline Leavitt, who said that the first priority is to make sure that there is some sort of negotiated settlement going forward here, that they do resume talks over Iran's nuclear program, but that rather President Trump was just raising the question that if that doesn't happen, then could there be regime change? She says that the president has acknowledged that it is up to the Iranian people to control their own destiny, in her words. She also confirmed that President Trump will travel to the NATO summit tomorrow morning. Of course, our allies are hoping to see some sort of negotiation going forward here. But up to this point, we really have heard from Iranian officials that they're not going to be able to get back to the negotiating table unless there is a stop in the strikes against them. But the White House so far really hasn't signaled an openness when it comes to a ceasefire. Lastly, I will leave you with that Caroline Leavitt did tell us reporters that it would be foolish if Iran goes after the Strait of Hormuz. I did just quickly catch up with the NEC director, Kevin Hassett, who told me that he is closely watching the oil markets, but at this point, he's not concerned about any future disruption.
Tyler Kendall with the latest. Look out for Tyler and her reporting throughout today on Bloomberg TV and on Bloomberg Radio. Just to go back to that conversation from over the weekend, Secretary Rubio was very clear about this. If Iran chose to do anything with the Strait of Hormuz, that would be an escalation that requires a reaction. What would that reaction be?
It feels like that would be a red line. He wouldn't go into the options. He said a lot of options are on the table, and then we heard from the former Defense Secretary, Mark Esper, who said, well, one option is just sinking the Iranian Navy, and that potentially is something we have seen the U.S. do in the past. The U.S. obviously has a fifth fleet that's based in Bahrain and can easily get to that. There are a number of options the U.S. probably has prepared, depending on what the Iranians do in terms of their retaliation.
The market is saying that Iran is not going to take a calculation like that. The market is saying, if you take a look at the sanguine reaction in oil markets, that why would they, to use your phrase, shoot themselves in the foot? And they're just simply saying they're not going to. Whether they're correct remains to be seen.
The headline of the morning so far, Wall Street fades escalation risk, and we'll see if that sticks. Up next, coming up tomorrow, we'll catch up with Congressman French Hill of Arkansas, Jeffrey Sherman of Double Line, the former U.S. Air Force General David Depchler, and Amberly Rowland of John Hancock Investment Management. Live from New York, this was Bloomberg Surveillance from New York City. This is Bloomberg. It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time,
helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise,
with some fun along the way.
This is Bloomberg Surveillance.
How much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico this way or that way. It will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates and complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
in case you missed it on Bloomberg Insight.
I just think there's a chance that you'll have stagflation. I'm not saying it's going to happen. I don't want the reader to say he's predicting. I'm not. But we have to be prepared for something like that. I think the global fiscal deficits are inflationary. I think the remilitarization of the world is inflationary. The restructuring of trade is inflationary. And this is not all an American thing. You know, with all those things taking place, yeah, you may be surprised.
I spoke to Jamie Dimon. He says that we should actually prepare for stagflation. How do you square that?
I think there's no question that the shock of tariffs are stagflationary. The question is going to be ultimately how high do they settle at? Right now they're at a very high level, highest in 100 years. And how long a period both is this uncertain environment and how long are the tariffs going to last? And the question now is the magnitude of the stagflationary impulse, and we just don't know yet.
Don't miss Bloomberg Insight live weekdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jumana Versace in Doha, Qatar, and this is Bloomberg.
Futures waver as the world awaits Iran's response. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Katie Greifeld. Bloomberg Open Interest starts right now.
Coming up, markets remain calm in the face of rising geopolitical uncertainty. Energy is clearly in focus as the world awaits Iran's response to U.S. attacks. And President Trump threatens additional strikes unless Iran makes peace. Katie, what are you watching this morning?
Let's take a look at the cross-asset picture here because you're really seeing reversals across the board. I want to start with the S&P 500, now a little bit higher in pre-market trading. We were down by as much as 1% overnight, but you can see bouncing back a little bit now. Same story with crude, of course. It initially moved much higher over the weekend following that escalation. Now we can see those gains coming in. And then you take a look at the 10-year yield. Previously, we actually had yields a little bit higher on the day. We saw a bit of a reversal just before 8 a.m. Now yields down about 3 basis points. No clear reason why, perhaps just New York traders coming in and starting their week.
All right, in terms of the stocks that you would expect to see moving after the U.S. attacks Iran using, for the first time, 30,000-pound bunker-busting bombs. You don't see a lot of movement here. ExxonMobil, obviously, is one that you'd expect to be shooting up on higher oil prices, but oil prices really aren't that much higher. So you do have a gain, 1.5%. Lockheed Martin is up only about 0.2% right now. So a lot of these stocks have moved more since September 13th. But just in terms of the overnight move, American Airlines down 0.7% is what you expect. In terms of those moves, Katie, if you look at them over a longer period of time, you do see what you would expect, but not these one-day changes.
Fair point there, that if you go back to mid-June, the move looks a lot more dramatic. But moving on, let's get to the Oval Office because the Trump administration is adamant that the U.S. will not enter into a war with Iran. Here's Vice President J.D. Vance.
Well, the president's been very clear, Kristen. We have no interest in a protracted conflict. We have no interest in boots on the ground. The president has actually been one of the fiercest critics of 25 years of failed foreign policy in the Middle East, which is why he did what he did. A very precise, a very surgical strike tailored to an American national interest, and that national interest is Iran cannot have a nuclear weapon. It would be a disaster for us and for our allies in the region.
All right, that does hit on the main question, really, right now. Can the U.S. avoid a protracted involvement in the war between Israel and Iran? For the latest from Washington, D.C., let's get to Bloomberg's Tyler Kendall. She joins us from the White House. Tyler, what messaging is the president putting out in terms of whether or not this is a one-off or he has to go back and execute more strikes?
Yeah, hey, Matt. Well, that's going to depend on a few different factors here. The White House has, of course, put forward that they want to see Iran resume talks about its nuclear program, and President Trump has threatened that if they don't come to the table, then there could be further action on the U.S.'s part. Now, we should say that Iranian officials have repeatedly reiterated that that's not going to happen. They're not going to come to the table unless the strikes against them stop first. But we haven't really seen an openness from this White House when it comes to supporting some sort of ceasefire ceasefire. The second factor here, of course, is what those further damage assessments are going to look like. President Trump has said that the damage has been monumental, but we have also heard from U.S. officials, including the Defense Secretary Pete Hegseth, that have said that it's going to take some time to get a further, fuller picture when it comes to the damage. The International Atomic Energy Agency has said that their inspectors haven't been able to go into these nuclear sites, particularly at Fordow, to survey the full extent of the damage. And then lastly, what is potential Iranian retaliation going to look like, and how would that inform the U.S.'s response here? Matt and Katie, we should say that our analysts at Bloomberg Intelligence say that there could be a more tempered response from Iran going forward, but of course there is so much uncertainty, but they are dealing with their own few different mitigating factors here, including a weak economy, some growing domestic discontent, and also the fact that we haven't really seen their strategic allies offer much more than rhetorical support at the moment.
Absolutely, and that certainly is the question that investors are asking as well. What will the response from Iran be? Bloomberg's Tyler Kendall, appreciate your reporting. And for more on the response from the nation's capital, Henrietta Trey's Director of Economic Policy Research over at Veda Partners, joins us now. Henrietta, fantastic to have you with us. Obviously, we saw a major escalation over the weekend with the U.S. directly striking Iran. How is this being received by D.C. Republicans? Is this a unifying moment for the party, or are we starting to see some fracture?
It's not 100% unified. I'd say it's about 85% unified, though, an 80-20 breakdown in terms of what we're seeing from Republicans on Capitol Hill. The issue is we're in sort of this interim period right now where no one wants a premature mission accomplished soundbite out there. That's going to be very difficult for members to maintain as we get into them coming back into session at noon today on the House side and this evening on the Senate side. So they have maybe 10 hours before, 5 hours before they start getting peppered with questions about where they stand on this. And it's going to be really important for the president to telegraph to members what's going on and what he plans to do. But right now they're in wait and see mode.
Henrietta, I was talking to Peter Cheer earlier in the hallway here from Academy Securities. He thinks it's likely that we've crossed the Rubicon at this point and that we cannot avoid long, drawn-out involvement in the Middle East militarily because of the end of the nuclear non-proliferation treaty. Do you hear others in Washington, D.C. Voicing the same concerns?
I do hear that concern. One of the things that I heard from a former State Department official who was there when they decided to go into Iraq is, anytime you smell roses in the Middle East, ask where the funeral is. Just really be careful about when you get optimistic that things are going really well. And I think that speaks to why members are being so reticent right now to make any declarative statements. I think there's a substantial muscle memory about just how bad this could get. Obviously, everybody hoping that it will not, but definitely thinking about the troops right now.
I know, of course, we are only 6 months into the Trump administration, but I do want to talk a little bit about midterms because this is something that has been making the rounds, particularly on social media over the weekend, that President Trump and Vice President Vance ran on the platform partly of being the peace party. And here we are directly involved in this conflict now. I mean, how do you think that this is going to be received by voters at these midterms?
It's really not the peace component that concerns me or concerns Republican leadership. The problem is that they made the argument to the American public that Trump would stop escalation of this. So if Trump was president, Putin would never have engaged in Ukraine. If Trump was president, then Hamas would never have invaded Israel. Now here we are, Trump is the president. And we are on the brink of full-scale war, if you wouldn't even call it that already, from dropping massive bombs on another nation in the Middle East. And the question is, was any of that true? And I think that's what's going to keep Republican leadership up at night, because that was what they sold to the American public. And now that we are in a position where there have been major bombs dropped and there is this very real risk of Iran becoming even more entrenched in its nuclear proliferation, as perhaps you were discussing, Matt, that's the real risk going forward. So it's a wholesale reassessment of what it is that they sold to the American public.
How seriously is the constitutionality of this being discussed? I saw Massey posted that this is not constitutional, and I guess it depends on your definition of war. Does it matter beyond, op-ed columns, Henrietta? Is there any chance that this becomes an issue for the president?
No, as a process argument, they'll have votes on it and that will go on your scorecard, and we'll think about that having repercussions 10, 20 years down the road as members run for office, famously thinking of Hillary Clinton and then Donald Trump himself saying, I would never have voted for that. These things have ripple effects down the line, but not immediately. There's nothing Congress can or will do to limit the president's authority on this. A vote in the Senate is being teed up. I understand Leader Schumer is going to file a war powers resolution to have a vote potentially before the reconciliation bill gets discussed. And then on the House side, I expect, or Democrats are expecting, something in the range of about 190 members to support, along with Massey and some very few Republicans.
Well, that's what I wanted to ask about before we let you go, Henrietta, the fact that you think about this tax bill. President Trump has the goal of passing it by July 4th. That is next Friday. Senate Republicans plan to begin voting on the bill midweek. Now that we do have this escalation and all these open questions, how does that factor into that voting process, if at all?
Right now, we're about 24 hours behind where we were on Friday. So Iran and the parliamentarian going through the process with Senate committees of jurisdiction, which sounds trite in comparison, but it's a very big deal, have all been delayed by about 24 hours. So today, the Senate Finance Committee is going to begin negotiating their package with the parliamentarian on the healthcare side. Tomorrow, they'll pivot to the tax portions. We're going to need to get a whole new score of this bill. They're going to have to rewrite substantial portions of it. Right now, they're down about $200 billion in revenue from where they were on Friday, based off of the bird bath, as we call it in the Senate. So the earliest I see the Senate voting on this package is slipped from Wednesday now to Thursday, realistically. So the timing is really tight to get this to the president. I have 40% odds that it could get to the president by the 4th of July. There's no shame in the game of waiting until July. But this is a very unpopular bill. It's got a 71% disapproval rating amongst independent voters. And to your point about the midterms, that's what's going to keep members up at night.
Oof. Well, Henrietta, it's fantastic to speak with you. Really appreciate your time on this Monday morning. That is Henrietta Trays of Veda Partners. Meanwhile, let's get a check on these markets right now at the index level. You can see the S&P 500. It's not down, it's up slightly. We were lower by about 1% in the overnight session, coming back now about 20 minutes until the opening bell. Crude, a similar story to the other side. You had crude prices higher overnight over the past weekend, now coming in a little bit. And that bond rally really building some steam here. The 10-year Treasury yield now down about 3 basis points, Matt Miller.
Yeah, interesting look there, and we're going to continue to check across the assets, look at Brent crude as well as gold and some of the other things that people are trading a lot this morning. Some more movers on our radar in terms of the stock market. Energy stocks, you can see, are up across the board. Exxon I showed you earlier, but there are Chevron and Occidental. Of course, they're not massive moves, and if you see something like the Strait of Hormuz closed, you can expect to see a giant spike in oil prices. JP Morgan says up to 70%, and obviously that would drive these stocks higher as well. U.S. airlines falling as international carriers reroute flights through the Middle East. That's to be expected, and, well, they're the airlines, not big moves. The big one that you just saw.
Yeah, that was a deep
tease. Kind of a spoiler, huh?
Let's go to it. Hims and hers. This has nothing to do with the Middle East. This is some breaking news this morning that Novo Nordisk is terminating that recently formed pact that it has, that partnership with Hims and hers. It had been planning basically to sell its compounded drugs, or rather its drugs, through the Hims and hers platform there. But the Danish drug maker cited concerns about sales of compounded drugs and misleading marketing in a statement Monday. That is taking a big chunk out of Hims and hers stock, as you can see. It's also not great news for Novo Nordisk, because Novo Nordisk has been losing share to Eli Lilly in the States. This has been one of the ways that they were going to try and take back some of that share, but clearly a little bit of a setback this morning.
I think very interesting. We're all paying much closer attention now after the American College of Cardiologists said this has got to be a part of your regime if you want to stay alive for longer. Coming up, oil moves today are minimal, but remain elevated since Israel's attack on Iran started 10 days ago. We'll game out possibilities for the energy supply chain next. This is Open Interest. Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets.
With the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing.
First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
I hope you survived the day.
I did. It was a busy day.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onin, only on Bloomberg.
Let's get to high interest. Let's look at what's making headlines around the world. Tesla has finally rolled out its driverless taxis, but only to a handful of riders in Austin, Texas. An employee sat in each car to monitor the safety. Tesla handpicked initial riders, which featured investors and social media influencers who live streamed their trips as if it was something amazing, even though they could have been doing the exact same thing in Waymo for years. Shares of Northern Trust are up in the pre-market. The Wall Street Journal reported that Bank of New York Mellon approached Northern Trust last week, expressing interest in a possible merger. A tie-up would be significant. Northern Trust has a market cap of more than $21 billion, while BNY tops $65 billion. You can see BNY not moving in the pre-market, but Northern Trust up more than 6%. And airlines across the globe are adjusting flights as conflict escalates in the Middle East. British Airways and Singapore Airlines have canceled flights to the Persian Gulf following U.S. strikes in Iran. Japan Airlines and Air India are rerouting flights to avoid airspace above the Persian Gulf and the Gulf of Oman. Katie?
Well, let's talk about what this all means for oil, because crude prices have remained elevated since Israel's attacks on Iran began 10 days ago. Production hasn't been impacted in the Middle East, which controls 1/3 of the world's crude supply. Let's discuss this all with Bloomberg, the close anchor Alex Steele. She has covered commodities for years, our commodities queen, joining us on set right now. So you zoom out a bit and the move looks more dramatic than what you're seeing this morning, which is pretty much flat, which a lot of people are scratching their head about. You think about this escalation that took place over the last 2 days. Why aren't we seeing more of a reaction in the oil markets?
I'm glad you put it in context over the last few weeks, right? Because we have seen oil prices jump 5% since we first had the strike on Israel to Iran. Before that, just in the last few weeks alone, oil prices have jumped 15%. Why they're not moving more today is actually pretty a simple one, because we haven't seen any issues with supply output and with supply transport. Clearly, those are risks, right? As we know, Strait of Hormuz would be, DEFCON 12. Like, that would be the worst case scenario for oil. A couple other things, though, too. Supply is still very reticent or available. You also have Saudi Arabia trying to get more oil back into the market. China has been stockpiling oil, so they have a buffer. Iran has been exporting a lot before this happened to kind of get it out there at the same time. Higher oil, higher U.S. shale response in the U.S. And, how is demand growth? I don't know. Like, what do we know about global GDP? Will we really see that big uptick in demand growth? If you're going to see that kind of spike, you need both. You need the supply and the demand to kind of move together to get that really dramatic spike.
You mentioned the Strait of Hormuz we're showing here on the map. The issue, right, that Iran is so close and it gets so tight there.
Yep.
Iran itself only produces, what, 2 million barrels per day?
More to 3 now, but yeah.
But almost all of it goes to China, right? The Strait of Hormuz, on the other hand, is what, a fifth of global oil needs? And so if that gets shut down, we're hearing people say that the price of oil could go up 70%, JP Morgan says. So I think Amrita Sen said sky high. What's the likelihood, or what's the last time we saw that?
We never did.
They've never shut it down.
They've never shut it down. They've threatened. There have been other things that have happened, attacks on specific infrastructure, maybe some mines in the area to prevent ships there. They have been cyber attacks on vessels recently to like kind of mess up their navigation in the strait. There's other things that can be done.
They've harassed, basically.
Yeah, they can harass them, exactly. They can do some stuff on the Red Sea and hurt ships there, but they've never actually closed it. So this is all like a pretend scenario that has never actually happened. But, you know, it's not just crude, it's oil products also. You're looking at like 20 million barrels of oil and products a day. You're right, a lot of that goes to China. But again, I mentioned that China has been stockpiling anyway. So would you see an immediate reaction? Because they can weed through those stockpiles at the end of the day.
All right, Alex, great context. Really great to unpack this with you. That is Alex Steele. She is co-anchor of The Close, joining us on Open Interest. And coming up, Lazard's chief market strategist talks about the muted equity reaction to the U.S. involvement in the Middle East. That conversation up next. This is Open Interest.
Join me for the next generation of Wall Street Week, telling stories of capitalism from business, markets, economics, tech, and climate. Each week, we'll go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
Above all else, it's a mission.
It's done nothing but grow immensely. To me, that's an extraordinary sign.
We can be the change that we want to see.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
Earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Asia is at the forefront of some of the world's biggest stories. I'm Sherrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news,